on the two?
See, Alex, out of the list which you mentioned, I think well rested, which is DB Realty, is looking good to me. Only reason being, this counter is broadly in the range itself. And if you look at the past range of a month, the counter has always taken a bounce near 105 and went up to almost 120. Good for traders because today it is showing good momentum and it has bounced from that 105 zone itself. So considering that as a support, I think one can go long and the target can be 120. And as far as Apollo is concerned, see, Apollo tires, I'm very optimistic. The only reason being on the weekly chart, I can see a broader consolidation zone of around 410 to around 550 levels. Though it is in between right now, but on the daily chart, it is giving the breakout. So by any chance, if today's high is taken out, I think one can go long on it. So the breakout is 467 for the day. Above that, one can go long. The stop loss can be 455 and the targets can be 550 in the time to come.
Okay. Kush, you want to weigh in on any one of the stocks that I've mentioned? By the way, Vishal Mega Mart is gaining about 7% or so. It's a top gainer in the broader market, so at least one of them. And Ventive Hospitality also looks interesting, but it's already giving up some of those gains.
Yeah, that's my worry. This pack actually, there was about 2 or 3 weeks ago when, a lot of stocks from this pack actually started making it to my list, but then the follow through was completely missing. In fact, it fizzled out. So I'll be a little cautious on this space, more of an opportunity to exit Ventive, on these rises. Same applies for Vishal Mega Mart, by the way, very similar structure. The setup that looks interesting from the names that you mentioned is Scient Limited, by the way. Rounding bottom formation breakout near 925. So you might see immediate resistance at around those levels, but above 925, I think this could see a spike and that could perhaps take it to 975,000 plus levels also. So yes, if you have a position you could hold, momentum can build up, beyond 925.
Okay, well, some stocks are buzzing, some are not, and that will be the nature of the morning, of course. Just wonder, I'm stuck on what's happening to healthcare simply because the sector has done so well in the results season, etc., and how some of these stocks have fared since then. But the FDA inspection news on some of these might not hold well. However, Parag bhai, stocks like maybe Sun Pharma has not rallied, but Aurobindo Pharma certainly has rallied, yes. Right? Caplin Point has rallied, even if Cipla would not have rallied. Where within the generic pharmaceutical companies do you believe there is an investment case at the current point of time?
So basically, see, Sun Pharma is a good buy below 1850, 1875, I would say. Then Ajanta Pharma, Ipca Labs, these are the stocks which you can keep on radar and buy on dips. Mankind. So these are the stocks which you can buy on dips, in my view.
Okay, I'm changing tracks. What about gold finance here? Since gold prices are moving up, last week there was a note from JP Morgan as well on all the three, Manappuram, Muthoot and IIFL Finance. The stocks have done well. I think IIFL Finance is now knocking at 670, 675.
Yes.
So all of them have done well. 691 actually, even better than that. Is this still a good time to enter into any of the gold lending names?
So I would say here the point is the valuations are attractive. Gold loan going up because falling dollar index and starting of QE, again QE2 in US is a big positive if it happens. So all those things are in favor. The only thing which I feel in long term is negative is that everybody wants to enter into this business. And so structurally your yield compression will happen for NBFCs, not for banks, because banks are already lending at 8.5 to 9.5%. So there they are very competitive. But in case of NBFCs who are lending at say 16%, 17%, then definitely yield compression is going to happen over a period of time because so many new players are entering into that business.
So, lene ka ki nahi lene ka?
So my view is that, see, first of all the banks like DCB and City Union are also lending in big way in gold, right? So City Union, 28% of the loan book is gold loan. So those are clear buys. In NBFCs, of course, IIFL Finance or something like that, which is valued very decently, I would say reasonably, those are okay. Otherwise, you can buy for a trade. Because if gold price go up, definitely this will go up.
One of the smaller banks that you did not like because the price appreciation had taken place very dramatically was CSB Bank. And it is, I think if I'm not mistaken, 30+% of the book is gold loan.
Principally,
right? So 35 to 40% in fact. So you don't like that stock. It's come off quite materially.
No, that stock I will always like. There is one overhang on that stock that if IDBI Bank goes to Prem Batsa Group, they'll have to either merge CSB with IDBI Bank or they'll have to sell their stake in CSB. That is an overhang on that stock. So if that is out of the way, then we can have a fresh look at CSB.
But otherwise, at this
yeah,
valuation,
yeah, otherwise it's a decent bank.
what are the charts telling you on CSB?
No, CSB is an avoid for now. It's come very close to long-term support zones, but like you rightly said, it's fallen off grace. The highs were close to what, 518, 590 odd levels. So avoid those. If you want to play, Muthoot and Manappuram are shaping up well. Risk-reward ratio favorable on Muthoot, but there's strength in Manappuram from a positional standpoint. So take your pick. I would rather give stop losses. So about 3,000 to 2,950 is your stop loss on Muthoot. And as far as Manappuram goes, your stop loss could be close to 345. So both these look well. IIFL Finance, you might want to book profits now.
Got it. On that note, I'd like to thank Kush Parag Bhai as well as Kunal Rambia, who's joining us as well. Pleasant morning to the rest of you, to all of you rather, and have a great day. We have to head across now to our correspondent in Japan. And Commerce and Industry Minister Piyush Goyal is, of course, leading India's largest ever business delegation to Japan, with more than 200 industry representatives traveling to the country for a 4-day visit beginning from today. Rishabh reporting live from Tokyo on what's on the agenda and how these next 4 days will look like. Rishabh, please do follow all of the rules, because, of course, those zebra crossings are as important as anything else in a four-wheeler or other vehicle. What are you picking up, though?
Hello and konnichiwa from Tokyo here in Japan. We're accompanying the Commerce Minister Piyush Goyal on his visit here to boost trade ties between India and Japan. It's a packed day one, but the focus of the Commerce Minister will be to sort of take forward a few of the key issues that were brought up when the Prime Ministers met very recently, Prime Minister Modi and Prime Minister Takaichi. Number one is going to be, of course, the private investment target that both the countries have said. Japan is set to invest roughly about 10 trillion yen, and that equates to about $62 billion over the next decade or so. And that will be very interesting to see the sort of sectors that investment spans. What we're also looking at is also a review of the free trade agreement between India and Japan. Both countries had signed a CEPA, a Comprehensive Economic Partnership Agreement, way back in 2011. But this sort of trade balance is more lopsided in favor of the Japanese currently. So that trade needs definitely some sort of a rebalancing, and that's what we're looking at when it comes to day one here of the Commerce Minister's Japan visit. What we're also looking at is a lot of MOUs being signed in the fields of semiconductors, in the fields of artificial intelligence, technology, of course. Bullet train is one such technology that we're also looking at already. So a lot more to happen when it comes to these 2-3 issues on day one of the Commerce Minister.
Got it, Rishabh. Thanks so much for that. And konnichiwa, arigato as well. I'll learn a few more Japanese words by the time you come back. KRBL in focus, though, as basmati rice prices have surged 6 to 10% in August, driven by weak monsoon-led supply concerns, higher logistics costs, and also the West Asia-related trade disruptions. We've got KRBL CFO Ashish Jain joining us to talk about some of that. Before we go to him, though, let's head across to Sharad Dubey. Just to give us a sense of what's going on right now in the segment at large, not just with the stock. Sharad?
Well, yes, Alex, El Nino impact already we saw what happened to the sugar stocks because of the up move coming in. But now slowly the data is suggesting that the basmati prices are also inching up. The August prices have gone up between 6 to 10% in the month itself. The Karnal basmati rice prices, that's what we have been tracking. It's around 10,600 to almost, you could say, 11,000 rupees per quintal, and 1 quintal means 100 kg. Also, why the basmati price is rising is, of course, a weak monsoon is leading to tight domestic supplies to start with. Surging logistics costs are there, trade disruption also coming in from the West Asian crisis, and higher fuel and transport expenses as well. Industry trends also I'd like to point out for FY26, 71% have gone as exports to the Middle East, and when basmati rice, the entire process comes in, it takes roughly 18 to 24 months to keep them in the inventories for the basmati space. But yes, concerns are coming when it comes to the price hikes.
Interesting. Thanks, Sharad, for setting that up for us. Ashish Jain, as I said, Chief Financial Officer of KRBL, joining us this morning. Ashish, very good morning to you. Thanks so much for speaking to us on NDTV Profit. My name is Alex Matthew. Let me start by asking about the supply side first, which is not something that will impact this year. Perhaps it'll impact next year. The sowing, can you give us a sense of what the update is, whether reservoir levels are blunting the impact of the monsoon?
Sure. Thank you for having us. And as far as the sowing is concerned, our update is that it is a normal year. And, the land area that is generally sown with basmati, the same land area is also being sown with in the current year. So from the crop that is going to be harvested in the Kharif season, we see no concerns as far as the size of the crop is concerned.
Okay. So therefore, you're sanguine going forward on supply. Let me ask about supply chains right now, because the last time we spoke to you, Mr. Jain, we were in the midst of, the West Asia crisis, not over, but then at least kinetic warfare seems to have dissipated. And there seems to be some movement of goods. Can you give us a sense of how your exports are proceeding right now, whether those lines have gotten renewed?
Sure. So here I can probably share some industry data, and this is released by APDA, which is the coordinating authority on agri exports. So if you look at the total volume export of basmati between April and June of this year, which is Q1, it's down by about 11 to 15% in volume terms. And the largest impact here is in the Middle East region. So if we look at the shipping situation since June, I think, my understanding is that the shipping routes continue to be affected. The two principal routes to reach that region are the Strait of Hormuz, where the shipping traffic, which increased maybe 2 weeks earlier, has again come down to minimal. The other access is through the Red Sea, where again activity by some groups that are allied to certain political groups in Iran, continues to make the situation uncertain. So from an export logistics point of view, Middle East is the large market. 70% of basmati exports from India went to the Middle East, and that region continues to be affected from a logistics point of view.
Ashish, good morning. Neeraj here. All of these things didn't quite put a dent for you, right? Because your quarterly numbers, you had a record profitability, if I'm not wrong, despite these challenges. So if these challenges dissipate a bit, are we looking at a trending year of profitability for you, where you end on a high? Because it's not that top line growth is necessary for growth. Your top line numbers on a quarterly basis still mirror something that you would have done 12 quarters ago as well, right? But your bottom line numbers are looking strong. Can it improve as the year goes?
Yeah, our Q1 numbers really reflected two things. One is from a volumes point of view, the domestic business continues to grow well. On the export side, like the rest of the country, from a basmati export point of view, we've been impacted because of the difficulty in accessing Middle East as a key market. However, our profitability in that quarter was really driven by higher prices. So, as you mentioned, the whole industry has seen a rise in basmati prices when you look at it on a sequential quarter basis or even on a year-on-year basis. So that's reflected in our realization. Second, the quarter also had some one-offs in terms of, M2M market gains. We've also guided that this level of profitability that we saw in Q1 is unsustainable, because it is coming off factors which we don't think will continue. However, for the year as a whole, we've also mentioned that I think two things will determine where the profitability goes from here. One is that how quickly exports come back, right? So exports for us, as we focus on branded exports, tend to be a high margin business, and therefore they're coming back to the normal trend levels is a boost for the margins. And second is also importantly that where do paddy prices trend in the upcoming paddy season? So, I think these two will determine the overall level of profitability. However, our overall expectation this year is that marginally higher profitability as compared to last year.
Marginally, because, just correct me if I'm wrong, but typically we would think that if basmati prices, etc., are all moving up, that would augur well for profitability. And yet, despite a record Q1, you're talking about only a marginal uptick in profitability YOY. Why is that?
Yeah, well, like I said, this is what we know now, and you are right. High prices in general are positive because they tend to increase the realization. However, the other important aspect is cost. So, our principal raw material is paddy, and that's something that the whole industry purchases in the Kharif season. So the price at which the paddy opens is also going to be an important determinant of profitability, especially in the quarter three and quarter four. So that's something that we need to bear in mind.
Good morning, Tamanna here. Just want to understand from you, sir, what is the kind of trends you see in prices? You already have, Mr. Jain, a 6 to 10% uptick since August has begun. Do you see this trending higher?
Yeah, so the price increase in the basmati, really began sometime in January, and it came on the back of a crop size which was actually much smaller than what the industry sort of sized up when the season began. So that, along with continued demand not only in India but even in the export market. So even if you look at the overall export situation, exports are down by something like 11 to 12%, even with all the disruptions that we talked about earlier. Right. So, which means, regardless of all the global situation, the demand tends to be the demand is tending to be strong. So that combined with a smaller than expected crop really triggered a rise in prices, and which has continued since. Now, in terms of where the prices head, I think one important determinant, like I mentioned earlier, will be how the paddy season opens up.
Okay. What would be the other factors? Because you said the crop was much smaller than expected. By what extent? And what are the other factors that could actually spike prices even more? I know you answered a question earlier from Alex on what the freight rates are looking like and what shipment patterns are looking like. But do you see these situations maybe worsening the scenario as far as prices are concerned? And are you able to pass on everything?
Yeah. See, in prices, it's difficult to tell. Part of it is also dependent on the global situation, especially in the Middle East, in terms of how the shipping routes fare over the next month or maybe the next quarter or so. But we do expect the prices to continue to remain firm for the rest of the year, given demand continues to be strong, like I mentioned earlier.
The increase that you've had to pay on the freight rates, if you can give us a sense in where do they stand right now, Ashish?
Sure. Yeah. So if you look on an average, and if you take a particular route, let's take the key ports in the Middle East, as compared to Feb, we are currently sitting at 5 times the freight cost, right? So something that costed $1,000 in Feb today costs about $5,000 to $6,000. So that's the increase in freight rates that we have seen in this key route. Now, I think the more important question in terms of whether or not we are able to pass on is really the cost to the end consumer, because somebody really needs to pay, and that's been going up because of this freight rates.
Got it. All right. Thanks so much for joining us this morning. Pleasure speaking with you, and look forward to the next chat, Ashish.
Thank you.
Right, now, Aarti Drugs has seen better realizations, the drive for its Q1 performance with API prices moving up across the industry. We're speaking to Adish Patil, who is the CFO at Aarti Drugs, on CapEx and the outlook for the rest of FY27. And Adish, thanks so much for taking the time. But before we come to you, let me go across to my colleague Varsha just to set the context. Varsha, what are the key aspects that you're focused on here?
Well, let me divide this conversation into 4 segments. One is, of course, the API pricing recovery. How sustainable is this? Because API prices rose across industry in Q1, and realization, if you see, drove growth, pricing still above pre-conflict level. Then metformin expansion, which is the next leg of growth for Aarti Drugs. The capacity has been expanded from 1400 TPM to 2200. US FDA opportunity hinges on approval and facility readiness. Then Sayakha ramp up. The key question is, when will benefit peak for this facility, because if you see utilization improves to 65% in Q1, backward integration is expected to improve operating leverage. Your margin outlook, well, near term margin outlook has been set at 14%, which is achievable in near term. 15% EBITDA margin has been targeted for medium term. Q1 margin though were impacted by CWIP write-off, but higher Sayakha utilization will support margin, and the salicylic acid losses are expected to reduce.
Okay. Well, 4 segments, but the key point being that there are some things which are more important than others. And, thanks Varsha for that, because even at the end of Q1 FY27, the management had described as the quarter being dominated by geopolitical logistics dislocations, which drove elevated freight costs, longer procurement cycles, and raw material price volatility. Adish Patil, Neeraj here, and good morning. And it would be safe to say that a lot of these factors are still not behind us. So does more of what dominated Q1 continue in Q2 for you?
Good morning. Yes, very much correct. So the way this quarter started and the way this quarter ended. So it started with same as we ended the quarter Q4. The war continued, and then there was some relief that the ceasefire would be signed, and then all the transport and transit would be back to normal. But again, the tension is similar. So, but then what we see is that when the war started, there was initial knee-jerk reaction and short supplies were there, and that caused the metformin prices and few other API prices which were related to gas-based raw materials. They went up pretty sharp. But that has recovered a little bit, but they are still very high as compared to February pricing. That is the pre-war era.
Adish, but and therefore that would, for the benefit of our viewers, that would mean positive, right? And therefore, am I correct there? And therefore, if that is still the case, that they are higher than February or materially higher than February, even if they are slightly lower quarter on quarter, would that mean optimism for you on your numbers despite the procurement dislocations?
Yeah, that definitely helps us, no doubt about that. But what also helps us is that if the pricing is stable, finally, what we feel that the cost to end user should not be very high. So if in general the API prices tend to be lower, then the demand, especially in the domestic market, is higher, and that is purely because there are various kind of molecules competing for the same therapy. So if the prices of one molecule goes up, the demand can come down a little bit.
Okay. Adish, I'm just trying to understand this aspect, right? You're saying that you benefited from a price increase in APIs. I'm just wondering whether some of that benefit will, if not evaporate, but reduce a little bit, considering I'm guessing the way that it would work is that you have certain amount of inventories, those were priced lower, the price goes up quite significantly, and so therefore you make the difference, but eventually that benefit will ease out. So do you see that reducing in the second quarter?
There are two things to it. We were expecting very good volume growth in Q1,
Okay.
though we still made a 3.5% volume growth year on year, but that expectation was like 10 to 15%. So when the prices will come down, a little bit of gross contribution margin, as you said, the profit might evaporate a little, but then the volume should kick in more. And already in the March quarter, in Q4 FY26, the volumes were very high, pretty high as compared to Q1. So what we feel is that the pricing will go away a little bit, means the profits might evaporate a little bit, but because of the increase in the volumes, they might come back again.
Understood. Okay, so what is the base case? And it may be hard to extrapolate based on what you're seeing right now, and you're saying that pricing might have a bearing on demand as well. But Adish, blue sky scenario, aspirational levels, where do you see the volume growth in FY27 for API?
Yeah, if everything is good, we were expecting around 10 to 15% kind of a volume growth. And we were not expecting any sort of negative price variance, because anyways in FY26 the prices of API were at almost at rock bottom. So if at all there should be any movement in terms of rates, it should be positive. So we were expecting a volume growth of 10 to 15% and also a value growth of 10 to 15% in a regular scenario.
Mr. Patil, very good morning. Tamanna here. I just found it interesting that metformin is turning out to be a huge growth opportunity at a time when the whole diabetic space has so many contenders, right? You have GLP-1 inhibitors, you have so many other molecules and formulas which are coming to the fore. You still think metformin, it continues to be a big driver and has that kind of appetite?
Yeah, so metformin still is a growing molecule. One, it's a very old molecule with very less side effects. Plus, it is the cheapest drug available for diabetes. So first line of defense for diabetes. And even now, metformin is always given in the combination with even semaglutide and all such molecules. So we don't foresee any, fall in demand for metformin. So that will continue to be one of the key growth drivers for Aarti drugs, because as of today, there are many players in metformin, and we believe that consolidation will happen in metformin, and then eventually 3 or 4 or, those many number of strong players will come up.
And clearly you are going to be in those 3 or 4 strong players.
Yeah.
How does that consolidation play out? Are you looking at inorganic expansion? How are you expecting this consolidation to play out specifically for you? Because I know you're scaling up your capacity as well to about 2,200 TPM.
Yes. So currently we have the capacity of around 1,400 tons per month. Which is already in terms of volumes, we should be the largest player globally in terms of API volumes of metformin. Now with additional scale up, and not only the scale up, we already have European approval for the plant, and plus we are planning to go for US FDA for this current facility. So that will open up a lot of markets for us. As of now, we are operating mainly in ROW markets and domestic market, and still sort of number one in metformin. So once the regulatory markets open up, not only it will help us in pricing, but also in volumes.
Okay. And the scale up in capacity that you're talking about, what is the kind of funds you need to raise for this? What is the capex which is allotted, and what is the timeline?
Yeah, so we have already started the capex. So the first level of capacity would be something around 1,700 tons per month. That should come up pretty fast in next 5 to 6 months. And the next 2,200 tons should come up within 12 to 14 months from now. The funds are totally from internal accruals and a little bit of project term loan. The current debt to equity is only around 0.37 for us, and we are very much comfortable with the current debt levels. And total debt is also 593. So we don't expect to raise any equity for it. Internal accruals and project term loan should be more than enough for raising this capital.
Just a point on the metformin, the way that you've described it will pan out, and you anticipate that consolidation will take place in the space. But generally in other industries, you've seen the impact of consolidation while it is taking place is pressure on pricing, because that's the way you push competitors out, the smaller ones at least. So is that something that you foresee?
That's absolutely a valid point. Fortunately, we are having good margins in the metformin, also by selling it into ROW and domestic market, which is like a low price sales for us. And now that we will be increasing our capacity and focusing more on regulated markets, it should in fact work the reverse way. The margins in metformin should increase. At the same time, we should be able to drive out some of the competition. So already, in the low pricing markets, we have driven out the competition at most of the areas. And now Western Europe and US would be our key target markets for metformin. Having said, we have also done backward integration for metformin through a greenfield project in Sayakha. So that would be additional benefit for us.
When does that Sayakha ramp up? The project?
Yeah, so we commissioned that project. We started put to use that project last September last year, and steadily means the first quarter was around 30% utilization. Second quarter was roughly around 40 plus, and last quarter, June quarter, we did around 62% utilization, and it is moving pretty fast. And within 2 quarters, we believe that around 80-85% utilization should be there, and that should reward us handsomely, at least in terms of gross contributions.
To what extent? When you say handsomely, can you describe what handsomely means?
Yeah. So the overall Saika project, to its maximum potential, means not only the metformin intermediate, but I'm also talking about monomethylamine, its derivatives, and trimethylamine. Overall, we have a potential of around 50 to 60 crores of EBITDA from that project. That won't come in 2 quarters itself, but next year, next financial year should be definitely the one to eye for.
Next 3 years, 3 quarters, you're expecting a 50 to 60 crore EBITDA addition just from this one facility. Am I understanding that correctly?
In the starting next financial year, I would say.
So that's about 2.5, 3 quarters away. Just one question on your salicylic business. That's not as exciting as what's happening with metformin right now, and your Tarapur facility is a case in point. What are you doing about that?
Yeah, so definitely salicylic acid has been the main pain area for us for the last 2 years. We have been expensing out everything what we are doing or losses we are making at the plant. So almost it has impacted us around 23 to 25 crores of PBT at the PBT level for both years each. Right now, what we have done, apart from anti-dumping duty, that will take time, probably next year. What we have done is we have also taken up the Chinese process know-how. We are also looking at the opportunities of right now we are extracting sodium sulfate, which is a byproduct, whereas the Chinese companies have been given option by the Chinese government to put that effluent directly in the sea because it classifies as a pure salt water, so it won't affect the marine life. So we are looking for that kind of permission also, because that will reduce our utility cost drastically for salicylic acid. Apart from that, what we have done is we just commissioned one equipment which we are talking about. So that will also reduce the raw material cost and reduce the effluent load for salicylic acid. And most importantly, we have just commissioned a forward integration plant of methyl salicylates, which is a derivative of salicylic acid. So we did some trials. We already produced IP grade material. So going forward in next 2 quarters, we expect to develop the clientele for methyl salicylate. So that would be a better margin business as compared to salicylic acid as of now.
Okay, Adish, I'm told that we're out of time, but I do want to slip in a 20-second answer, if you will. You've been hovering around that 14% EBITDA margin range. And if you have this new facility coming through, backward integration, improved margins for metformin, does that head higher in FY28?
Yeah, definitely. So we should be at least targeting 15% EBITDA margins, if not higher. And if everything goes well, then with oncology business also coming in, we should keep going further higher till 16%.
Okay. Next time we will speak to you about the prospects in oncology, and certainly something to talk about. Thank you so much, Adish, for talking to us. The street certainly paying close attention to what you're saying. Thanks so much. Okay, let's talk about the fact that housing sales, we're moving from the pharmaceutical industry straight to housing. And housing sales have moderated during the quarter, but developers continue to launch new projects and prices remained firm across markets. The key question, though, is whether festive demand can revive momentum in the second half of the year. Varsha joining in to get us some data before we have a conversation with Onkar Shetye from Aurum PropTech. Varsha.
Well, overall, we've seen top 8 cities housing sales fall almost 6.1% year on year, and the sales have seen decline of around 4.4% quarter on quarter as well. A pre-monsoon seasonality have impacted demand. Cautious home buyer sentiment weighs on sales, but Q2 FY26 comparison against a strong base of 97, 674 units. Now also onto the new launches, because that's what an excitement area is, because developers have launched 89,161 units during the quarter. New launches, if you see, rose 6% year on year, but have declined 4.2% quarter on quarter, while developers continue adding supply despite softer sales. Onto the outlook, that's Q3 FY27 outlook. If you see, festive season demand is expected to support sales. Infrastructure development will aid housing demand, and startup hiring expected to remain supportive, and outlook remain cautiously optimistic when it comes to overall developments.
Okay, the cautiously optimistic comes after the not so optimistic data as well. Onkar Shetye, Executive Director at Aurum PropTech, joining in on the conversation this morning. Onkar, thank you so much for your time. Just take us through the highlights of this report, and on the face of it, it sounds a little worrying for the real estate industry.
We should not be too pessimistic about this. I would rather describe this as a moderation, not really a reversal in the housing cycle as such. We've actually come off several years of exceptional growths. So a 6% year-on-year moderation for the quarter needs to be looked at in that context. Also, what is promising is that the new launches remain consistent. The new launches remain robust. So that instills confidence in the developer launches. The other factor that we should be looking at is that this is more of a context that we can look at it from a seasonal weakness standpoint. Typically, this I would distinguish between the demand fatigue from a buyer selectivity that we are witnessing across all 8 cities. Q2 traditionally has been a pre-monsoon moderation quarter, and there's also added aspect of the geopolitical uncertainty. So typically, buyers have been cautious. They've been delaying. They've been looking for value rather than going in for a very impulsive kind of a purchase.
Okay. No, I like the way you've put it, that this is just a sort of pause in a longer trend. But the fact is that you've had top 8 cities housing sales falling 6.1% year on year, sales declining 4.4%, and you have new launches coming in. My question is that if we deep dive a little bit, which are the markets that seem to be relatively more sluggish right now?
So I would say the areas of concern seem to be two specific markets, which is if you look at housing sales, the market's stressed today and have had rapid price appreciation and slowing sales velocity or new supply getting exceeded. Bengaluru is one market that we need to watch for. Pune has also seen that kind of a sharper fall in volumes. But in both, more importantly, new supply and sales have remained perfectly matched. Also, what needs to be looked at is from a structural or a fundamental behavior point of view for demand. The AI and impact on employment has been a key deciding factor in both these markets. Both markets typically behave a little differently. If you look at Bengaluru is more of a product city where there's a lot of product development that happens, and Pune that way is an ITES or a support operation for a lot of IT sector or IT companies. So the type of employment generated in both cities is also different. This is one area that we also are watching in very closely to see how that shapes up in from a demand standpoint.
Onkar, I do want to ask about pricing trends as you see it as well, because you've seen not necessarily cement, but the rest of construction costs have gone up. If you're talking about ceramic tiles, you're talking about metal, rebar prices, all of that has gone up. So what are the implications? How much of that is being passed on as we speak?
You're right, absolutely. I think the prices have been still rising, and it's a combination of multiple factors. I would rather bucket them into 2 different things. One is, of course, the cost of approvals has also now substantially gone up with various regulations. The time to get approvals, the carrying cost of the team, etc., adds up to that. land has become extremely competitive with more and more organized, institutionalized, and listed developers eyeing for key micro markets, key pin codes, key locations. So that cost has also gone up. And subsequently, construction has also gone up, not just in terms of material, but also in terms of labor. There's fight for good quality labor supply across all developers, be it subcontractors, be it vendor partners, and one key competition has also been the nationalized employment schemes, which have also been driving the labor market away. So combination of all these factors is going to keep prices rising or consistently at that level, is our view.
Got it. Onkar, only one question from my end, really. Are a lot of people, I mean, what was predictable at the start of this cycle was that typically, even if it's 8 years, the first 3 or 4 years, things will be okay, and then we will see. We are now mid-cycle, admittedly, right? So therefore, the question really is, and by the way, there are some listings out there, and we should keep an eye out for them as well. Onkar, just hang on for a moment, but I just want to mark, because there's one more, which has actually gotten a reasonably strong listing out there. 33% uptick is what I see, right? And therefore, that is actually a good sign that we do have a 33% uptick on a list, 34% now as we speak on the listing. So that's good news.
Massive oversubscription. There was a phenomenal demand for this counter in the jewelry space. So it's up 35% and climbing.
And I'm told that there are at least three more jewelry companies which are coming out with their IPOs. So let's wait and watch how
What's
this goes.
the deal with that? Yeah. So a lot of them in the pipeline now, and while our focus tends to be on the big fish, right?
Yeah.
The larger IPOs and everyone's focused on it. The fact is that some of these smaller ones can have a good move coming in. Nimit Dikshit at the NSE headquarters where Horizon has just listed. Nimit, what are you picking up?
Yeah, so we're here at Horizon's listing. It's just got listed. The gong has just gone off, and it's such an interesting company. Of course, it's Blackstone's 7th listing in the real estate space, and it's a company with an 80% EBITDA margin but a negative PAT margin. Now, how does that happen? Well, the company is extremely leveraged, right? 6,800 crores of leverage that the company has, and the 2,600 IPO, 2,250 crores of it is going to be used to deleverage the company. So what are investors really getting out of this IPO? Investors are looking to deleverage this company in order for future profits, because the company has about 45 different projects, about 58 million square feet and 30 million square feet in the pipeline. The company has extremely long-term leases, 5 to 10 years, very high occupancy rates above 90%, and also they have an incremental rental yield contract that gives them huge surplus. That accounts for 80% EBITDA margins. Now, what the investors will really look at, and that's why the QIB portion of this IPO was well subscribed, was the fact that this has a very long-term sustainable outlook, where over about 10 years, once all the heavy capital assets are paid for, the company is going to sustain pure profit in that term with very low operational costs. Now, that is the investment that somebody is making when they're looking at Horizon Industrial Parks, and it's listed at about its upper band right now, so not a very big listing like the ones we've seen in the years, in the weeks gone past, I'm sorry, but it's going to look like but what investors, like I said, are going to look at is the long-term growth here. It's in the industrial and warehousing space. It has all the biggest players in e-commerce on it, and we keep tracking it for you.
Yep, most certainly. Thanks, Nimit, for that. In fact, while that is somber or flattish, the one which is really doing really well is Lalita Jewelry. Varsha is here with the SWOT analysis of that one. Varsha.
Well, gold jewelry companies are really in focus considering the higher realizations that they have seen, and of course the inventory gains that these companies are into. But talking about Lalita Jewelry, 35% of premium, that what we are seeing when it comes to this IPO. Onto the SWOT analysis, where it has a strong regional brand in South India, higher revenue per store productivity, strong revenue and PAT growth from FY22 to FY26. Onto the weakness, they have a significantly inventory intensity concentration sufficient geographic presence considering the South India focus. But onto the opportunities, they have 12 store expansion which will be funded by IPO. Rising organized jewelry penetration is one of the opportunities that this company has, and higher gold prices can of course support nominal revenue growth. But lastly, onto the threats, intense competition, gold price volatility and margin pressure from competitive pricing are some of the threats that this company has. But the one major threat that I see is the inventory gain, which has led to the margin uptick for many of these companies. Is this sustainable? And of course the realization that we have seen.
Okay. Fair call. Well, good start for this one at least, and that should well begin is half done, as they say. Maybe that holds true for this one for sure. Okay, now let's get in a company, Himadri Specialty Chemicals, which is in focus because the company stepped up its transition from a traditional coal tar derivatives player to an advanced materials company. To discuss in detail the company's expansion plan, growth outlook here onwards, we're joined by Anurag Chaudhary, who is the chairman and managing director of Himadri Specialty Chemicals. Just for the benefit of our viewers, at the end of Q1, and the Q1 financial performance, the company clocked in a 28% revenue growth. EBITDA was up 33% with 22% margins, and the bottom line was up 27%. So fairly steady quarter that the company clocked in. Anurag, great having you. Thanks for taking the time out. Could you talk? Okay, maybe we start off with the quarter first, and then we move on to this, if I can call it a transition for our eyes, for the benefit of our viewers. But first, the quarter, was this the steady performance that you anticipated? Because not too many companies were able to deliver a steady performance in a quarter which was marred by geopolitical stress.
So good morning. Thank you for having me here. So the strength of Himadri is this business model, which is resilient to all these geopolitical scenarios. So as you have seen in the last 2 quarters, when we are going through difficult times, the company has posted very strong numbers, and we will continue to do so looking forward.
Okay. You will continue to do so looking forward. Does this move, as my colleague was describing it, from a traditional coal tar player to doing other things, is that factually correct? And part one. And part two, it is never as simple as a one-sentence description, right? Describe this thing to us, please.
So, see, we started our journey in 1990 with a coal tar distillation company, but the focus has always been on research and development, innovation, and that's the core strength of the company on which we have built over the years, and that is which paying off today. So the focus now is on high value-added product, specialty products, that is which is the paving way for the future growth of the company. And if you look at our product profile, from where we started to now, we are into fully specialty chemicals. And every quarter on quarter, year on year, we are adding more products, more high value-added products to our portfolio, which is changing the entire dynamics of the company.
Some plan, Mr. Chaudhary, and good morning to you. This is Alex here. So, and this is evident in the quarterly presentations that you release as well on an ongoing basis. I remember having seen the Q1 presentation where you very specifically describe the value-added products in the specialty chemicals as a percentage of the whole. So, give us a sense, Mr. Chaudhary, of where you envision this mix to go in terms of revenue contribution.
So this mix will keep on, increasing quarter on quarter, year on year. If you ask me 5-year roadmap, then I expect it to be more than 80% of the top line of the company.
Okay, and for the benefit of our viewers, Mr. Chaudhary, can you describe how much it is right now?
It's around 50%.
Okay, so this journey of 50% to 80%, it's not necessarily going to be linear, Mr. Chaudhary, right? So you could eventually end up with, and so therefore there's a plan, 80% of contribution from these high value products and also specialty chemicals. So what is the change in the margin profile that you will witness over the course of this 5 years?
So see, if you look at our quarter on quarter margins, year on year margins over the last 3 years, you will see a steady, strong growth on quarter. Every quarter is better than the preceding quarter. And looking forward, we expect the same. And on a 5-year horizon, see, it's not percentage of top line that we look at per metric ton EBITDA margin. So we are at 20,000 plus EBITDA margin. Looking forward, the product profile will improve. The high value-added products will continue to come up. So you will see higher number in terms of per metric ton EBITDA margin coming when the even products comes in.
Anurag, pardon me, but even if I look at what's the margin as a percentage of revenue from 2020 or FY23 to FY26, your operating margins have doubled, right? From 10% that you had reported back then to 21% on last count. Is this the number that you maintain, or as you become more a specialty chemical company, can this reported number move higher because street will look at it?
Definitely, the numbers can move up also. It depends on the raw.
Will they? I know they can. I'm inclined to ask you, will they move higher from the 20% mark?
See, so it's a very difficult question to answer right now because we don't look at our margin from a percentage perspective.
I know.
It can go much higher also. But
I know, Anurag, but because
Anurag,
sorry to cut you out here, but just because the street as the first port of call will look at it as a percentage of sales, I'm inclined to ask this again. Do you believe there's a fair chance that this number may move up from the 20% mark, or is it difficult to say?
See, what I'll say, if you look at the past is the guideline for future. So you see how the margins have moved up, and we are saying we are going for further value-added products. This itself answers your question.
Just a quick question then, Mr. Chaudhary, with regard to what it will take to get to that 80% mark. What is the kind of investment that you will have to make in capacity over the course of this period? How much is currently underway? How much is yet to come?
So, Alex, if you look at our the capex we have already announced. So we have announced super specialty carbon black with a capex of 170 crores, which is going to change the margin profile. We have announced carbon nanotube, which is going to start in Q4 FY27. So we have announced LFP, which is going to change the margin profile and give substantial increase to portfolio. So we have announced anthraquinone and carbazole. So anthraquinone and carbazole, which is also in pipeline, and we expect to commence production of part capacity in current quarter and balance in Q3 FY28. So this product itself will give us a value addition of more than 300%. So with these products coming in, I see the total profile of the company changing.
Well, we wish you all the best with that profile change and more, Anurag. Thanks so much for taking the time out and being with us. Really appreciate your time.
Thank you.
All right, we need to slip into a very quick break. On the other side, a special conversation with a big market voice, Vetri Subramaniam, MD and CEO of UTI AMC Johnson. Stay tuned. You don't want to miss this.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties,
lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anviksha Ideas Across Border in Kathmandu on August 27th as we explore Nepal's
All right, back with India Market Open right here on NDTV Profit, and on Talking Point today, a very special guest, Vetri Subramaniam, MD and CEO of UTI Asset Management, with us in our studios. Vetri, so good having you. Thanks so much for taking the time out.
Thank you. We are of course next door neighbors, but Bombay traffic is unpredictable.
Yeah.
But glad I could make it on time.
No, that's true. I'm glad that we have you here. And I wonder, Vetri, if the year at the current point of time is very much like how it was maybe 4 months ago, because the more things change, the more they tend to remain the same in the current circumstances.
Yeah, I'd say we're still in that same sort of territory where there are a lot of geopolitical things which are clouding the picture. But honestly, if it wasn't geopolitics, it would be something else. I've never known a market where there is no concern. There is always some concern or the other. I think what is interesting, particularly when I look at the quarter gone by, is that there's a significant pickup in, revenue growth, earnings growth across the board. I think, that maybe is a little bit of a surprise to people compared to where you were, 3-6 months ago. Let's say particularly on 1st March, you would have been a lot more concerned about, hey, what is this going to imply for corporate results? Oh. So I think that has been a good positive outcome that, corporate results have held up reasonably well through this June quarter.
Beaten estimates, you would say, right, in a lot of cases?
Yes, I think at the aggregate level, it's ahead. Of course, look, there's a lot of skew. So there's a bottom 10%, which is obnoxiously poor. There's a top 10%. So once you sort of get rid of the outliers, but I would still say on March 1, you would have been a lot more panicky that, hey, this is going to crush earnings growth. But what's come out is that across the board, the performance has held up. Now, again, you can look to attribute causality for this, which is to say that anyway the economy didn't have to absorb the impact of higher fuel prices because the government bore that, it didn't pass into company accounts. B, there wasn't too much of a supply shortfall because I think both companies, governments did a good job of making sure that you didn't have a production shutdown because there was a supply constraint. So all of that has contributed, but net I would still say good outcome. The only pain point, if at all you want to call it that, is if you look at the Indian earnings growth relative to what's happening in the rest of the world,
is the point.
You may still be disappointed, right?
Because that is the point.
Exactly,
and that was what I was going to ask you about, which is that, and we had this analogy drawn on this table just a few days back where somebody was saying your kid is scoring amazing on their exam paper till you look at your neighbor's kid and they're like 99%. So therefore 80% no longer looks great. But so from that perspective, how much, Vetri, can you extrapolate that? Because that really is the global question. To say that these multiples, and everybody said that AI-related stocks are trading at multiples not seen before, but they still say compared to India, it's comparably lower. But that's because the growth is so frenetic.
Yeah. So, the AI capex cycle is most probably been the most dominant driver of macroeconomics in the last 1 year. We've all been discussing, macroeconomics, geopolitics, interest rates, but really what's holding the global economy together is the capex which is driven by this whole AI related boom. Now, separate issue, is it sustainable? Yeah. Will there be returns on that capital? Those are all discussions for later. And of course, they will have implications on the valuations, as you pointed out, that those stocks are trading. But I think that's been the force which has resulted in these kind of earnings outcomes across the world. You look even at a continent like Europe, where, you know, we talk about the sick continent, but, you know, even they're growing their earnings right now in the last quarter at, you know, mid-teens. So I think the strength of this AI boom and the capex that it is driving is just very, very significant, which also creates a concern, because if you exclude this capex and you look at the strength of the global economy, excluding that, you look at the strength of the US economy, excluding the AI related capex, it's not very great. But this is the one single element that's holding up global growth together, and therefore you have to worry from a more macro perspective that if that slows, there won't just be a macro level impact, eventually it will translate into micro level impacts as well.
So therefore, how do you describe that? To say, obviously you look bottom up, you look at individual companies, you look at the earnings that they provide you with and the trajectory that you can map. But having said that, this is like a dark cloud looming to say that, and I was speaking to a fixed income fund manager who was saying that AI and the amount of money that they're sucking in right now is even crowding out governments. So what are the implications on yields, for example? Already you've had the Treasury step in and do what they're calling a mini QE. That has implications on the dollar. It has implications on flow. Is that a major threat?
So let's just unpack
or an opportunity?
Let's just unpack that. You know, your point about the US right now is sucking the oxygen out of the room. Whether it is because of the government borrowing, 6%, you know, largest economy in the world, you need $2 trillion to fund that. So that's a major demand for capital. And then on top of that, you've got the AI capex, and that's primarily driven by US based organizations, though it shows up in capex spends across the world. So I think this is a global issue, that all that capital is going to the US because it appears to believe that, you know, this capex will generate those high returns. But if you come back to India, you know, the only point that I would make is that, look, you know, I'm a very old school investor in terms of looking at valuations. And for the last 2 years, you know, going back to early 2024, we've been continuously saying that, look, valuations in India are very, very high relative to our growth potential. The good news, Alex, is that over the last 2 years, we've worked through some part of that excess in some segments of the market, not across the board. So there are still segments of the market that I would call expensive, but in general, particularly if I look at the large caps and I look at our proprietary valuation, asset allocation methodology that we have, it's actually increasingly going more and more overweight equities, because large cap equities in India are today pretty reasonably positioned in terms of starting valuations and potential for earnings growth, which is where we started this conversation. So I would say dark clouds may be over AI, but from an Indian context, I think actually our internal fundamentals are in pretty good shape.
If there were to be rate hikes because of inflationary pressures across the world, possibly in India, the RBI minutes were not as kind as the policy statement was, right? Does that put a cloud to this earnings uptick scenario, and thereby what follows in the market?
Good point. To my mind, RBI will at some point, perhaps the MPC rather, will have to react to the fact that there is a risk to inflation. But having said that, I don't think it is coming from what you would call very strong demand pull. And therefore, I think RBI's and MPC's role here is more to just sort of take preventive action in time rather than end up behind the curve. So to that extent, will they have to hike rates? Perhaps. But I think the economy is in good enough shape to absorb 1 or 2 preventive hikes. I don't see this as a rate tightening cycle, right? The rate tightening cycle is really something that you would worry about if you went into a demand-led sort of, upsurge in economic growth. We are not at that point right now. So I think the economy can tackle that. And remember, banking liquidity is actually very, very easy, or likely to be very easy, because of what's happened on the whole FCNRB scheme. So I think that will ensure that the yield curve behaves itself in India. And touch wood, we've been very prudent about macroeconomic management in India over the last, I would say, 5-6 years. I think that will come to bear. And I think, the currency, which has been a big pain point, whenever I talk to any global investor, even I am struggling to explain to them why the currency has been so weak over the last 2 years. But I think there is potential for the currency to surprise us if we stay on our prudent course, and you see all these other large economies struggle. I think the currency could surprise us in terms of what it does.
Very interesting. Speaking of, and moving back to the fundamentals as you've pointed out, And you mentioned, for example, FCNRB, banks, etc. Right? So let me ask you, based on the framework and based on your study, notwithstanding valuations, what looks strongest? Because there are a few pockets, even in finance, where NBFCs have to contend now with this new rule on revolving credit that will impact a few large entities. There is an underlying play as well.
So just to sort of put that in two contexts, if I look at it from a market cap perspective, our greatest comfort from a top-down perspective, honestly, is in the large cap space.
Okay.
Having said that, when I talk to my fund managers, I don't manage money anymore. What the fund manager says that 2 years of stock prices going nowhere, actually bottom up, they are seeing opportunities irrespective of the label of small cap, mid cap, large cap. So there are bottom up opportunities irrespective of that top down. But as a top down allocator, I'm still a bit concerned about the median or average valuation in small caps and mid caps. I think that is very elevated relative to their potential for earnings growth. From a sectoral level, for the last 2 years, the only one that I've believed that the combination of starting valuations and potential for growth is very attractively placed is been financials. Entire spectrum, whether it's banks, NBFCs, each may beat their tune at a different point of time, but I think the whole basket is attractive. No change in that view. And imagine, Alex, you've got credit growth running at 17-19%, and the starting PE multiples of your best banks are below that level. I mean, this is one of the most attractive setups.
Also because of corporate and
doesn't matter, right? I mean, look, the job of the financial is to make sure that you lend to the person who's going to pay you back, but where the opportunity is. So I think it's a very attractive setup.
Maybe after a really long time, the promise of banks will finally see fruition in terms of returns. But Vetri, so good talking to you. Thank you so much for being with us today. Really appreciate your time.
Thank you. Thanks, Alex. Thank you, Neeraj.
And on that note, viewers, we need to call it a day on this leg of India Market Open. So from Alex, me and the whole team that put the show together, thanks so much for tuning in. Stay tuned though. Ask Profit is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100%.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
They say morning shows the day. Markets.
Hello and good morning. You're watching NDTV Profit. You're tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin trades above the $77,000 mark on institutional buying. SEC proposes regulation crypto assets with new exemptions. Strategies Sailor explains concept of digital energy. Lastly, crypto card spending tops $1 billion. Bitcoin is trading above the $77,000 mark on institutional buying and regulatory optimism. Bitcoin has recorded the largest weekly gain since March 2023, surging over 23%. Analysts suggest market sentiment is bullish, but technicals are suggesting that overbought sentiment is there. The Securities Exchange Commission has proposed a draft on regulation crypto assets, which will let qualifying token issuers raise up to $5 million or $75 million under tailored exemptions and use a conditional safe harbor. This framework would preempt certain state registration requirements, and these exceptions may help in getting more institutional interest and ETF flows eventually. Also, Strategy Executive Chairman Michael Saylor has laid out new logic for crypto accumulation. According to him, Bitcoin's breakthrough lies in the ability to convert economic energy into digital form and securely bind it to a person, family, company, machine, or a state. Strategy is an American technology company and operates as the world's largest corporate holder of Bitcoin. The company is now shifting from passively holding coins to building a closed-loop corporate economy, especially for tokenized assets. And crypto card spending tops $1 billion as stable coins move into everyday purchases. Tracked card volumes more than tripled in a year, reaching $1.04 billion in the month of July. This was driven largely by dollar-backed stablecoins and increase in ordinary purchases such as groceries, ride-hailing, as well as food delivery. Now, the dollar-backed stablecoins funded more than 70% of the 10 million tracked transactions as per payment scan data. And before we wrap, here's a quick check to the changes to the crypto prices over the last 24 hours. Largely, we have seen a slight up move for Bitcoin and Ethereum, but a minor profit booking coming in for coins for XRP, Solana, and Tron. But importantly, the resistance range of 77 to 80,000 is very important for Bitcoin to be tracked. Time now to take a look at the crypto strategy for the day. Here's what's there to keep in mind. But market sentiment currently is very bullish but very overheated as well. ETF flows are showing accumulation at these levels as well, but still it's a technically overbought market. The risk on environment is favoring altcoins also as well, and Bitcoin, if it holds above the $77,000 mark, this could be a stable support. Well, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Good afternoon, you're watching Us Profit on NDTV Profit with me, Somit Sarkar. In this show, we'll try to answer all the queries that you have, be it fundamental or the technical queries that is coming up. Now, if you look at the markets, the Nifty is gaining for the third consecutive session, but the gains that we are seeing in the last couple of sessions is quite subdued. Friday, we just closed about 30 odd points up, and today also we are trading around 30 points higher in trade around the 24,280 level. Some weakness seen in the Nifty Bank, that's down close to about around 100 odd points in trade. If you look at the sectoral indices, it's Nifty Metal which is up. It is the highest sectoral gainer, up around 1.2% in trade, followed by Nifty IT and Nifty Real Estate up close to around 0.5%. On the losing side, we have Nifty PSU Bank Index, Nifty FMCG, which is down anywhere between 0.3 to 0.6% in trade. Stock specific action in the FNO side is Vishal Mega Mart, which is up nearly 11%, and this is post the reappointment of the existing CEO. Muthoot Finance, that's up around 5%. Steel Authority of India sale is up around 4%. Siemens and BAC up close to around 2.5 to 3% in trade. On the losing side, Dixon Tech is down around 2%. Bank of Baroda, Vedanta, Hindustan Aeronautics down anywhere between 1.5 to 1.8%. The reason behind the fall in share prices of Vedanta is largely because a block deal is expected from the promoter side. That's an exclusive story coming in from NDTV Profit. But let's start off with our segment of Us Profit. Let's welcome in our fundamental and technical guest, Gaurav Sharma, Vice President and Head of Research, Globe Capital, is joining us on the fundamental side, while on the technical side on the technical side, while on the fundamental side we have Saurabh Jain, Equity Head Research, SMC Global Securities. Well, the first query is coming in on comments. Umesh Gupta from Vadodara is holding around 280 shares, bought at a price of 4,193. He wants to know whether should he continue to hold this counter or exit, and should look to enter again at a later stage. Coming to you on this one, Saurabh, what's your view when it comes to Cummins? Should Umesh exit the counter or continue to hold?
Good morning. See, in my view, I think the results were not that great and the valuations are still high. The stock has made a multi-year, was in the good bull run, and the valuations also saw expansion. And now some kind of a correction is being witnessed because of the, below expectation results. So in my opinion, if he wishes to book some profits, he can take profits.
Okay. Right, the next query is coming in on Sansera Engineering. Parkhe from Hyderabad wants to know whether should one make a fresh entry when it comes to Sansera Engineering from long-term perspective. Saurabh, your view on Sansera?
Sansera has it's a auto ancillary player and has given phenomenal results, and the stock has also got re-rated. In my opinion, I think the valuations have got stretched in the latest run-up. And in my opinion, if he wishes to buy, yes, he surely can buy, but buy in a staggered manner, especially in dips.
Next query is from Matthew from Bangalore.
He's holding on to Hudco and Canara Bank, currently sitting on a loss. He wants to know whether should he continue to hold both these PSU counters or shift to any other stock that looks good on chart and could deliver a 15% return. Gaurav, any view on this? Should he continue to hold on to Hudco or Canara Bank and any other stock that you could recommend?
So, Amit, very good morning to you. Good morning to Saurabh and the viewers as well. So, as far as Hutco is concerned, the stock is looking weak. It is trading under pressure from quite some time in a broader range of say 160 to around 220 on the higher side. It is trading in the middle of the range. Some bit of a decline towards 160 odd levels is pretty much possible. So, my take would be to actually avoid or slightly exit Hudco. Whereas the Canara Bank is, we are fairly positive on the space. This is among the best of the lot as far as PSU banks are concerned. So he can hold on to the position in Canara Bank. Any dip from the current levels can be utilized to average the position as well.
Okay. The next one is from Udit. He wants to know the short-term view on BSE. Gaurav, your short-term view on BSE?
We are not very positive on Bombay Stock Exchange at the moment. There might be some bit of an uptick towards 3600 odd levels. Yes, this is possible as the stock has corrected reasonably. But from a short-term point, maybe say a month or so, it is better to stay away from this stock.
Okay. The next one is from Sabita from Hyderabad. She is holding shares of MCX, around 30 shares, bought at a price of 250. Should she continue to hold this counter or book profits? Any target that you could suggest on this, Gaurav?
The buying price is 250.
2,500.
Right?
2,500 is the target price.
2,500. Okay. So she can hold on to the position. We are expecting MCX to continue its growth story. The kind of momentum is placed in the base metal prices, the crude oil, gold. I think there is still a good amount of room left. Better to hold on to the position. Upside targets in the near term can certainly be the previous peak, that is close to around 3480, 3500 odd zone. Once that is taken out, even a level close to 3800 is possible in 2 to 3 months time frame.
Right. The next one is a caller query coming in from Bangalore. Venkat, you can go ahead and ask your query.
Yes, good morning, sir.
Good morning.
Yeah, I hold 500 shares of Vishal Megamart at the price of 94.95.
Okay. And you can hold this counter for long term?
Yeah, for 2 years. So how is the fundamentals and technicals? So actually, why I am calling is, so on Friday I called NDTV. So actually, one of the analysts, he suggested me to, advise me to exit at 111. So is it correct or not? I want to know.
I'll get the technical view on this to you for you then. Gaurav, should Venkat continue to hold on to Vishal Megamart? The stock is up on a fundamental news today. It's up around 10 odd %. Should he continue to hold or exit?
See, if it depends as to what is the time frame. If it is a trading position for short term, the stock has arrived at a resistance point which is 115. It has tested that and facing some kind of trouble surpassing that. Once that level is taken out in the say medium to longer term horizon, this stock can at least rise up to 125 odd levels in say in the next couple of months time. So it clearly depends on the time frame the viewer is having.
Okay. The next one is coming in from Shivraj from Chennai. He's holding 1,000 shares of Shalby Hospital at an average price of 170. Should he hold or sell? He can continue to hold the counter for the next 5 years. Saurabh, any view on Shalby?
Hospitals are doing really good, and if you talk about the average revenue per occupied bed is also growing in many of the hospital ventures are adding to their capacities also. In case of Shelby, nothing of that sort of seems to be happening with the Shelby. Among all the hospital peers, it is the stock which is not doing that great, the kind of growth its peers are seeing, and that is why the stock is not participating the way the other stocks are moving. In my opinion, if you want to be in this space, in my opinion, I think you should get out and maybe put your money in maybe Rainbow Child or Apollo Hospital.
Okay, right. The next one is from Bhaskara Madhusudan from Hyderabad. He bought around 68 shares of Som Distillery at a price of 142. Now the prices have come down to 74. Should he continue to hold, book loss and shift to HFCL? Saurabh, any view on this?
It's difficult to say whether to go from Som Distillery to HFCL. See, Som Distillery has its own set of problems, and that is the reason the stock has not performed. In case of HFCL also, it is a quite volatile stock, and if you look at the valuations are too expensive. In my opinion, I think it is better to park your money in the safest area, that is pharmaceuticals. In my opinion, stocks like Ipca Lab or Divi's Laboratories are good to make money.
Okay. The next one is from Aarti from Bangalore. She wants to know the outlook on Bharat Electronics for the next 6 months. She has bought few shares at a price of 421. Should she hold or sell this one? Any view on this, Gaurav?
We are very much positive on Bharti Airtel. It is among our hot favorite stock as far as defense pack is concerned. Although the stock is into a consolidation phase from quite some time, the good part is it is consolidating at higher levels. Not much of profit taking is seen. Yes, one can continue to hold. A bounce towards 440 to 460 zone is pretty much possible in the time frame that the viewer has mentioned.
Fine. The next one is from Lavanya from Iluru. She is holding 200 shares of Data Patterns, bought at a price of 4,900. Any targets on this that you could give, Gaurav? Should she continue to hold or exit Data Patterns?
She should hold on to the position. It is trading close to its all-time highest levels. Any rise beyond 5,000, which is acting as a psychological hurdle, will open the gates for the further up move towards 5,500, 5,800 odd zones. Hold your position. Take a stop at 4,600 on closing basis.
Right. The next is a caller query coming in from Delhi. Pawan, you can go ahead and ask your query.
Okay. Good morning. I have a quick question. I hold a Quality Waltz stock. So this was given. This was basically I got it from demerger of Hindustan Unilever.
Okay.
And I got 2,000 stock, and then I added 2,000 at an average price now is 29 rupees. I just wanted to understand: should I book profits or should I add more, or what should be my strategy? Because I would want this stock for next 5 to 10 years. I can hold that.
Okay. Then, Saurabh, any view on this Quality Waltz? Should he continue to hold? Should he add more? What would you suggest?
See, this business is growing at a rate of 30-40% in every season, every year. When there is a scorching heat, the growth these players are witnessing is stupendous. In case of Quality Walls, the things are no different. The company has been profitable. And if you look at the year-on-year growth in the profits, it is growing at a decent pace. Its peers are also expensive if you compare its valuations to. It is the I think if you have such a long-term horizon, 5 to 10 years, then I think this is the space you should be. My take is a hold.
The next query is coming in from Jai from Tamil Nadu. He wants to know whether it's the right time to invest in Dabur and Imami for the next 1 year, and which one would be a better pick. Saurabh, your view on the FMCG, Dabur or Imami, which one would be a better pick here?
I think out of the two, Dabur has a good portfolio and better brand recognition than Imami, especially in our side of the India. And the management is also quite confident about its healthcare products and the other major products. And in fact, when the winters are approaching, the products like Chyawanprash are also expected to do well. So in my opinion, I think double-digit volume growth is very much expected from Dabur, and out of the two, my pick would be Dabur.
Next query is coming in from Jaishri from Coimbatore. She wants to enter the shares of HDFC Life. Is it a right time to enter? Gaurav, any view on HDFC Life?
Solid majority of these life insurers are not performing. It is only SBI Life which has been able to perform slight bit. So if this area needs to be covered, I think one should stick with SBI Life. Better to avoid HDFC Life at the moment.
The next query is from Vijay Kishore from Hyderabad. He's holding 702 shares of Eternal bought at a price of 245.5. Should he continue to hold, book some profits? Any recommendation on this one, Gaurav?
Book part positions here. Hold the remaining position for the next target closer to 350 360 zone. Maintain a stop at 315.
The next query is from GS Arun from Hyderabad. He's holding 115 shares of NLC India, bought at a price of 311. He wants to know whether should he continue to hold, add more for long term. Saurabh, your view on NLC?
From the long-term perspective, we are quite positive on the utility, especially in view of when crude is rising. I think it is the new crude oil, and many people are shifting towards the gas stoves and all. And in case of NLC India, I think the company is doing well. They have great capacity addition plans also. If you look at the numbers were quite well, and the valuation side also, it is quite comfortable. From the long-term perspective, my take is positive. I think it is good to hold.
Right, the next query is coming in from Murli from Hyderabad. He's holding 100 shares each of IDBI Bank and Bank of India, currently sitting on a profit of around 40%. Should he continue to hold or exit? Saurabh, any view?
I think out of the two, he can book profits in the IDBI Bank, and he can continue with the Bank of India. And if he wishes to churn from IDBI Bank, then he may look at the Indian Bank too.
Okay. The next one is from Annie from Chennai. She wants to know whether should she buy KEC International or ITC in current market price. Any view on this, Gaurav?
Frankly, I don't like any of those.
Then any other stock that you would recommend to her?
They can consider metal picks like Hindalco, National Aluminium. They are doing good. They can consider NBFC space, something like a PNB Housing Finance, Shriram Finance.
The next query is from Murthy from Hyderabad. He's already holding 300 shares of Servotech Power, bought at a price of 170. He wants to know whether should he continue to hold this counter for long term. Saurabh?
Won't be able to give a comment on this.
Anything on charts on this, Gaurav?
Not looking good. Better to avoid.
Okay. The next one is from Ramanna Reddy from Hyderabad. I don't think you would be covering this stock. Makers Lab. Do you cover this, Saurabh? Makers Lab?
No.
Anything on charts on this one, Gaurav? Makers Lab?
Somewhere there's just 122 CR cap company. I would refrain from commenting on it.
Right. And the next query is from Uma from Bangalore. On charts, she wants to know whether should she continue to hold AFCOM. Gaurav?
Just give me a second. AFCOM is the stock. AFCOM Holdings, right?
Yeah. AFCOM.
We are not covering it. Won't be able to comment.
Okay. The next one is from Mr. Gupta from Hyderabad. He's holding 4,000 shares of GMR Airports, bought at an average price of 58. He wants to know whether should he hold this counter from the long-term perspective for the next 2 years. Saurabh, any view on GMR?
See, the company is doing operationally well, and there has been a good amount of change in the balance sheet also. It has been liked by the market, the performance, and the stock has also getting re-rated. From the long-term perspective, it is a hold.
Right. Well, with that, it's time for our rapid fire segment. Gaurav and Saurabh would kindly request you to keep your answers as short as possible. Starting off with the first query on Cyient DLM. It's for you, Saurabh. The viewer is holding around a few shares, bought at a price of 468. Should he continue to hold this counter? Saurabh, your view?
Book profits.
The next query is on Reddington, India. Ram from Chennai wants to know the fundamental view on this, Saurabh.
But operational performance is growing. You can hold it.
The next query is on IDFC First. It's for you, Gaurav. Bhuvana is holding around 500 shares at a price of 80. Should she continue to hold, add more?
Yes, hold on your position, utilize dips to add more.
The next query is on M&M. It's for you, Gaurav. Viewer from Hyderabad wants to know whether should he buy shorts of Mahindra and Mahindra.
Yes, Mahindra and Mahindra is a good stock. They can consider buying it even at current levels.
The next query is on CDSL. It's for you, Gaurav. Dhruv from Kolkata wants to know the view for this counter for the next 3 to 6 months.
Looking positive, a bounce towards 1650 is pretty much possible. Thereafter, next level would be 1800.
The next query is on Balrampur Chini. It's for you, Saurabh. Asma from Bangalore wants to know whether it's the right time to buy Balrampur Chini for long term.
Yes, you can buy, but remember volatility can be high.
The next query is on Shanti Gears, and it's for you, Saurabh. Ankit from Mumbai is already holding 500 shares, bought at a price of 520. Can he add more for long term?
Yes, you can add.
The next query is on Bank of Baroda. It's for you, Gaurav. Sai from Hyderabad is holding 190 shares, bought at a price of 252. Any short-term view on this?
We may witness some kind of profit taking towards 230, but a time frame of 3 months can take it towards 270, 280 odd levels.
The next query is on Bajaj Housing Finance. It's for you, Saurabh. Ramkrishna from Chennai is holding 814 shares, bought at an average price of 123. Should he continue to hold or exit?
Operational performance is good. Continue to hold.
The next query is on Gujarat Energy, which was earlier known as Gujarat Gas. It's for you, Saurabh. Praveen from Hyderabad is holding 355 shares at a price of 276. Should he continue to hold this counter for the next 1 year?
You can hold.
Okay, the next query is on Sigachi Industries. It's for you, Gaurav. Shyam from Bangalore is holding few shares, bought at a price of 28. Should he continue to hold or exit?
Hold with a stop at 29.5. 34 to 35 is the next immediate target.
Okay, the next query is on IndusInd Bank. It's for you, Saurabh. Annie from Chennai is holding around 100 shares, bought at a price of 1,650. Should she continue to hold or exit?
You can hold. If you wish to convert to ICICI Bank.
Next query is on Sun Pharma. It's for you, Gaurav. The viewer hasn't mentioned his name, but he's holding around a few shares at a price of 1,830. Should he sell or continue to hold?
Better to hold. Stock looks good for a move towards 2,000 odd levels.
Right, well, that was the last query on Ask Profit. Thank you, Gaurav. Thank you, Saurabh, for joining us and answering as many queries that we could in the first half an hour. Well, with that, it's a wrap on this edition of Ask Profit. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Under Shashi Tharoor and beyond statecraft and former treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter.
Welcome back. You're watching NDTV Profit and we are talking about IPO Adda right now. Of course, lots of IPOs came in last week. Some are getting listed also. And this week also the action is pretty strong. Two important listings also. Let's get you both of them. One is of course Lalita Jewellers and the second one is Horizon Industrial Parks. That's a muted listing coming in, but a very strong momentum and a good listing gain coming in from Lalita Jewelry Mart. That's up 33% as well. But before that, the primary markets have remained busy, this week also with a fresh set of IPOs lined up to hit the Dalal Street. Let's understand which are those companies. First is Lumino Industries. Of course, the IPO date is from August 27. The issue size is roughly 700 odd crore rupees. And if we talk about the details about the company, it is an EPC company. It supplies conductors, powers and cables. And the usage of funds would be there for debt repayment and capex. Lumino Industries financials also, if you can have a look, the income has doubled from FY24 levels and also the PAT numbers have increased significantly. Another stock, Skyways Air Services. The IPO opens today from August 24 to 27. The issue size is at 583 crore rupees and the company is into logistics and freight forwarding segment. The usage of funds is on debt repayment and funding the working capital. Even the financials, if you see, there's a good up move coming in, but margins, not so much improvement coming in, but PAT has literally doubled from the last 2 years. Next stock, Symbiotic Pharmalab, Indore-based company, and the IPO will be opening from today. The total issue size, higher side of 1757 crore rupees. OFS is 1607 crores and the balance is fresh issue. The company makes pharmaceutical APIs. The usage of funds will be for general corporate purpose and debt repayment. Looking at the financials overall, we see a decent set of numbers coming in, but yes, the margins are in a range-bound manner. Anu projects a small IPO from August 25th. The IPO will open and the issue size is at 175 crore rupees. About the company designs underground utilities infra across the telecom and the sewerage segment. High-tech engineers, that's IPO is also opening today, but a very small IPO size of 136 crore rupees where the usage of funds would be procurement of machines and debt repayment. But the conversation continues for IPOs and this time it is Skyways Air Services. It's in focus as the company IPO opens today. Earlier, my colleague Parth spoke with Yashpal Sharma, the chairman and managing director, and Himanshu Chabra, the CFO of Skyways Air Services, about the company's plans and its growth outlook. Let's listen in.
Today we are joined by the management of Skyways Air Services. The company is coming up with its IPO on 24th of August. We are joined by Mr. Yashpal Sharma, Chairman and Managing Director of the company, and also Mr. Himanshu Chhabra, who is the CFO of Skyways Air Services. Well, I had a couple of questions, but my first one is that we are raising around 400 crores of fresh issue in our IPO. So once that is used for, and that will be used for debt repayment and working capital purposes. So what will be the interest cost savings that we'll see after that debt has been repaid in the coming quarters and years as well?
So the overall fresh issue is 390 crores plus, and out of that 216 crores will be used towards the debt reduction, and 130 crores of the funds will be utilized towards the incremental working capital requirements of the company, and the rest of the portion is after the issue cost towards the general corporate purpose.
Okay. And with the debt repayment, after that debt repayment is done, how much interest cost savings can we expect?
So in the short term, yes, there will be an impact on the debt, the interest cost. And as we have seen in the last 3 years, the scale of the operations have been consistently growing. So this incremental working capital also will help us in utilizing this amounts towards the growth of the company and not take any additional working capital debt, which has been the traditional or the past source of primarily working capital financing.
Got it. And also our revenue saw spectacular growth in FY25, growing at around 74%, but that growth moderated to 25% in FY26. So what kind of revenue growth can we expect from Skyways in the coming 3 to 5 years, and how much of that growth will be coming organically versus acquisitions?
So we have consistently grown our volumes over the last few years, and even if we look at the volume growth of the last financial year, it has been very, very rock solid. The freight rates which determine the revenue moderated a little bit last year. So even with a 7-8% moderation in those freight rates, our revenues have still grown in a pretty decent 25% range. The organization's always motive has been to consistently grow our market share, grow our volumes, and which have always led to a decent increase in our revenues as well. And in times ahead, the strategy of the group will continue to remain the same, to remain very committed towards adding a bigger share from the current customers and also adding new customers in our portfolio, consistently expand our geographical footprint whenever possible, and we will continue to grow our volumes through these business acquisitions. And if there's any time an opportunity which is worth exploring for an acquisition, we will surely explore that as well.
Right. And also, sir, how much of the recent growth and margin improvement has come from that unusually strong freight rates and the Red Sea disruptions because of that? And what happens to our revenue and profitability once that rates normalize in the coming time?
So the business, like I had mentioned, that the freight rates do change from time to time, and there is always a 5 to 10% variation upside and downwards sometimes in the last few years that we've seen. Whenever there are these big market shocks like the Middle East war or the Russia-Ukraine war, etc., there is generally a change that we see in the marginal change in the freight rates, as well as the fuel index goes up and down. So these are all passed through to our customers, and even if you look at our last 3 years or even beyond, the profitability, it has remained very consistently in the range that we have been in, and we are very confident that even going forward we will be able to maintain the same kind of momentum that we have been able to see in the past.
Understood, sir. And also on the margin front, they have increased consistently from 3.75% in FY24 to 3.85 in FY25 and 4.47, a significant jump in FY26. So where do you see these margin levels in the next 3 years, and what is driving this expansion currently, and what will be the factors to watch out for in terms of margins in the coming time?
So the margins profile have been consistently growing, as you rightly mentioned, and our endeavor will always be to serve the customers well, and the margins and the profitability are subset of how well you serve your customers. So we really hope that we are able to serve our customers well, and the profitability impact is always with the kind of services and the kind of solutions you are able to offer to the customers.
That's the management of Skyways Air Services. But another interesting IPO is set to open. That is Symbiotic Pharma Lab. It's going to open its 1,750 crore rupees IPO today, bringing in one of India's leading steroid API makers to the primary market. The company is now looking beyond APIs and expanding into biologics, complex injectables, and the fast-growing GLP-1 opportunity. We caught up with the management to understand the growth roadmap, export strategy, and the plans post-listing. Take a listen.
Anil, let me come to you first. In fact, first up, congratulations for this step as well with regards to getting to a public listing. My question to you is, help us understand, 1,760 odd crores is what you're looking at in terms of fundraise. Majority of it is an OFS. So what's happening? Who is exiting with regards to an OFS? And in terms of the fresh issue, what percentage gets used up in terms of debt, and then what happens with regards to expansion plans?
So first of all, thank you for having me on this show. Yes, first let me give you a little context about Symbiotic, that how we have built on this business model. So essentially Symbiotic Pharma Lab is an R&D driven pharmaceutical and biotechnology company. And using the strength of the organic chemistry and the fermentation science at the intersection of these two sciences, we have essentially created a global leadership platform of steroid and hormones APIs with this expertise expanded over last 2.5 decades. And of course, after achieving the global leadership in this very niche segment of steroid and hormones through our highly capex oriented, high disciplined, high manufacturing platform with an operational discipline backed up by the regulatory compliance coming from almost all world-class regulatory agencies, including US FDA, European and Japanese PMD, and so many other countries. So in this quest to build this world-class leadership, we have made a significant capex, and of course we had to partner with, we had the fortunes of partnering with some of the like-minded partners in past, like Rakesh Jhunjhunwala as an HNI, to institutions like Franklin Templeton, to Actis, and now of course the Motilal Oswal and the Investment as high quality private equity partners. And of course at some point of time there's an exit to this finite capital, and of course OFS will pave the way for a partial exit to some of these partners who have really ventured with us in this journey of excellence. And a certain part of the primary infusion, which is, if I'm not mistaken, it's 150 crores, is something that is getting into the company, which will be used to retire the debt.
Okay, that's interesting. So just Anil, to clarify, whatever exits that are happening through the OFS are all partial exits. Anyone who is exiting 100%?
No, not to my knowledge, no.
Okay.
They stay put because we all believe as the shareholders, current shareholders in business, that we are entering into a very exciting Symbiotic 2.0 as a story, and everyone remains invested. Of course, some of the private equity investors are exiting partially, but none is
Sure.
exiting fully today.
Okay. The other thing is with regards to the raw material exposure that you have in terms of China as well. What's the quantum currently, and are you seeing an increased risk on that front?
So let me again give you some context here that Symbiotic is one of the few companies in the world which is fully backward integrated, starting from soybean derived sterol, going through the series of fermentation steps and series of demanding chemistry steps, and it's not an easy feat to achieve. And we are the only company in India, and we are the 6th company in the world which is truly backward integrated, starting from the farm product called sterol coming from soybean. And having said that, what essentially it means is that we can manufacture anything and everything from the so-called soybean sterol to all the 90% of these 60 different steroid and hormones molecules that we do can come from the soybean sterol, which we have the capability as well as the capacity. However, with this backward integration status, what we have achieved is a position called make versus buy. So at any point of time, we evaluate our options. Do we make, do we buy? So of course, we continue to buy a significant portion of our raw materials from China, not as a dependency, but more as a tool which we leverage in terms of our efficiency. So currently we buy roughly around 50% of our raw material needs from China and 50% would be captive. However, this situation may go on from 40, 60, 60, 40 from time to time. But should we need to produce 100%, we definitely are fully capable of doing so.
Okay. Anil, my last question is, if I'm looking at the last 3 years data that is available in terms of earnings as well, not much growth in terms of the top line. Margins also, I mean, I understand it is a business which will have all the impacts, but from 24% you've gone to 26. Net profits also have been in that range of 100 to 110. So going ahead, is this the same momentum that you think you will be able to maintain, or you think there is a potential of further improvement that could be coming in the coming quarters?
Let me take the context of the past growth and margins. On the revenue front, in fiscal 24, we had a one-time revenue milestone of roughly about 44 crores, which is a one-time milestone and not part of the regular product revenue. So if you look at the growth trajectory on the product revenue, you see a 14% CAGR over the last 2 years, year on year. So in that sense, we see that as a healthy growth. Of course, on the gross margins also, there is an improvement from 55% of gross margin moving to 64%. And on the EBITDA, moving from 24% to 26%. What you need to note is that for all the growth which we are seeding for the next several years, we have put up almost more than 800 crores of capex over the last several years. So from a net profit standpoint, a lot of this capex which we have put up in the last several years is coming as depreciation, and that is for a temporary period has suppressed the PAT margins. But otherwise, going forward with the new businesses coming up, we believe the margins should get normalized.
Got it.
So let me just add a color here that please appreciate that in the last few years, because of the significant capex that we have tried to put into our 2 new growth engines, there are certain statutory accounting norms which has not allowed us to capitalize or amortize certain expenses that has come to our P&L, which is the API P&L, our base business. And that might have some impact on our profit margin, but if you adjust this off, we are clocking in more than 60 or in between 60 to 65% of gross margins, leading to over 30% of our EBITDA margins as an adjusted numbers. And appreciate that in last few years, we have seen a significant shift moving from lesser regulated market to more advanced market. So geographical mix have improved in favor of advanced market. The product mix has also improved in favor of higher margin products, and this momentum will continue for the next several years, and we expect our EBITDA margins in our steroid business to continue to remain stable and higher.
Well, that's the management of the companies which we spoke about. 2 IPOs, interesting discussion, but Dalal Street will be very busy in the primary markets. But let's just see what's happening in the secondary markets also. Interesting day of play, and there's a very interesting trend which we caught. We'll get to that. But Nifty, we are seeing a sharp fall there. We are actually, the Nifty was holding between that 24,200 levels mark, but it seems like there's a sharp fall coming in the market. Let's have a look at the Nifty Bank also and see what's happening in that case also. And it seems like a sharp fall. We are at the day's low level for Nifty Bank as well, in that 57,400 odd levels. The markets are off their highs as well. Let's just look at the key sectors to see where the sell-off actually coming in and the impact is coming. The sectoral heat map, largely the metal and the IT space are doing well. Media also, the selective buying is continuing in these counters, but the sell-off is happening in the PSU banking space and defense space also. Defense, we have been seeing important rounds of sell-off and profit booking in this segment as well, but largely it is still range bound. Let's just see the Nifty stocks also. I'm sure some Nifty heavyweights must have moved the fall which is happening right now. If we get in those numbers, the IT names are doing well. Of course, a little bit of sell-off coming in Shriram Finance, SBI as well. Also some FMCG names is also there to this list where the sell-off is there. Advanced decline ratio, let's pull that up to see what's happening there as well. The broader indices initially had shown there was a good momentum in the broader indices, but now it seems like coming off, but nevertheless it's still in the favor of bulls right now. So pretty much you could say stock specific moves are definitely there, but mid cap, small cap, it hasn't fallen that much as compared to Nifty Bank. If you could just show the mid cap and the small cap index also, they're still in the green, no matter the correction coming in from the day's high levels. So we'll try to understand what are the key reasons for it. But speaking of stocks, and back to secondary markets, we have Hexaware Tech in focus. It announced the launch of Zerovity to address enterprise AI needs while planning more investments on AI expansion. Jasmeet is here with the key investor day takeaways and the brokerages are penciling in. Good morning, Jasmeet.
Well, Chad, very good morning. As rightly said, the Hexaware remains key focus on the back of the overall investor day. We have seen over past few months, Hexaware has been doing a lot of things when it comes to the overall AI aspect, and they have been launching new products. Now with this investor day, they are setting out the foundation of what they expect going ahead. While during this investor day, they have launched Zerovity, which is basically the AI layer of the company, which will be interacting with the enterprise AI clients. While company also sees that the overall AI-based theme, those are called the green domain, AI-led themes for the company, would see an overall total addressable market of roughly $320 billion going ahead. While company also makes a note that they do see AI deflation on the top line. They expect roughly 20 to 25% impact in next 3 to 4 years on the top line on the back of that overall AI deflation. But they also expect the TAM to increase on the back of that new AI-led services. If you look at the performance since over this particular year, the company has noted that top 13 big clients of the management have seen consolidation in this particular year, and that's seeing a slight of impact on the overall performance. But on the other hand, they also target to close this current year with an overall performance CC growth of 6 to 7 odd %. So that's a key positive. This is despite the deflation that we're seeing in terms of the overall AI. Well, the management also makes a note that currently AI infused and AI-led services contribute roughly 50% of which revenue, and that's a big number when you compare to the other folks in the market. While for a similar investor day, we also have brokerages with their views on what they feel about the overall performance. While we have Nuvama on Hexaware, where they maintain a buy rating with a target price of rupees 710, and they remain quite bullish on the Hexaware. They do state that the overall Zerovity concept for Hexaware might become their key moat of growing going ahead, while they also remain bullish on the AI performance of Hexaware. While Nuvama also states that they do like the fundamentals and the current scene where Hexaware is operating. Well, apart from that, we also have CLS on Hexaware, where they maintain outperform with a target price of rupees 730, while they retrade outperform on the back of that consistent organic growth that the Hexaware is doing in the mid-cap space. And we look at the valuations, they remain at par with the other mid-cap names, but they still remain a bit expensive when you compare with the large-cap names. But lastly, also HSBC on Hexaware, they maintain hold on this particular counter.
Thanks a lot, Jasmeet, for that. The stock itself, you can pull up the intraday chart. The stock is up more than 4% in trade, and the street is liking the important, commentary from the company. It's holding up above that 550 levels marks as well. But interesting developments. Commerce and Industry Minister Piyush Goyal is leading India's largest ever business delegation to Japan with more than 200 industry representatives traveling to the country for a 4-day visit beginning from today. Rishabh is reporting from Tokyo on what's on the agenda and how these next 4 days will look like. Over to you, Rishabh.
Hello and konnichiwa from Tokyo here in Japan. We're accompanying the Commerce Minister Piyush Goyal on his visit here to boost trade ties between India and Japan. It's a packed day one, but the focus of the Commerce Minister will be to sort of take forward a few of the key issues that were brought up when the Prime Ministers met very recently, Prime Minister Modi and Prime Minister Takaichi. Number one is going to be, of course, the private investment target that both the countries have said. Japan is set to invest roughly about 10 trillion yen, and that equates to about $62 billion over the next decade or so. And that will be very interesting to see the sort of sectors that investment spans. What we're also looking at is also a review of the free trade agreement between India and Japan. Both countries had signed a CEPA, a Comprehensive Economic Partnership Agreement, way back in 2011. But the sort of trade balance is more lopsided in favor of the Japanese currently. So that trade needs definitely some sort of a rebalancing, and that's what we're looking at when it comes to day one here of the Commerce Minister's Japan visit. What we're also looking at is a lot of MOUs being signed in the fields of semiconductors, in the fields of artificial intelligence, technology, of course. Bullet train is one such technology that we're also looking at already. So a lot more to happen when it comes to these 2-3 issues on day one of the Commerce Minister.
Thanks a lot, Rishabh, for that. But now we are completely out of time. Thank you for joining us on the show today. Keep watching KYC up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम, भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth. Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTP World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the show where we get you the hottest companies, the newly listed companies, and the story behind them. Today also I've got you a very interesting company, and yes, it's newly listed also. There is a small hint, but this is the biggest hint. World's largest MIM tech component manufacturer. I'm sure you must be guessing by now if you're tracking the primary markets. Recently listed July 30th, 2026, but the stock has almost doubled from its IPO price. Very interesting story. We'll try to understand more. And there is an IIT Madras angle to it as well. It's backed by BlackRock as well. We have spoken a lot about the precision manufacturing sector, and we have got this company, Dalal Street favorite theme as of now. And the company's name is Indo-MIM. But why are we calling this company? What's the need about it? Of course, it's recently listed. Everybody wants to understand what is this industry and how is the company placed? Is it the market leader or not? Another question we'll try to understand is the margins and the revenue guidance, how things pan out in this business model and how they are a leader and how they'll maintain it. Decoding the key risks and the mitigations from the company. There's a lot of global exposure here as well, and also product related risk. We'll try to understand raw material sourcing. How much does India have? How much does abroad have? And what's the risk here? Also, the installed capacity and utilization guidance ahead. The utilization levels are quite low. That means company might not go for larger capex plans because there's so much headroom left. Acquisition strategy as they get new geographies, what will that be? We have seen already historically company has done some of them. Emerging industry trends and the client confidence, how does that look going ahead? Globally also and domestically also, and of course the new product launches, is there any or is there a new category? So we'll try to understand these questions with Indo-MIM. But what does the company actually do? Why I'm constantly talking about MIM? What's the full form here? That's something that was the most basic thing we'll try to understand. The largest metal injection molding. MIM is metal injection molding. That's the company which makes this. It has almost 7% market share in calendar 25. Also, understanding they have 25 years of industry experience where they do end-to-end manufacturing solutions, and this work includes tooling, mold, design. These are the initial phases of precision manufacturing, then finishing and assembling as well. Also, they serve the auto, defense, medical and aerospace sectors. So there is a big, non-concentration risk of the products. Over 9,000 products they have. 60% raw material is sourced from abroad. So there is a risk element as well. Export products to customers across 55 countries. And I'll explain you the revenue contribution also, but you have to stay with me. Whiter, Government Pension Fund Global, Goldman Sachs, BlackRock are the backers. Their names have come in the anchor investors. They have 15 manufacturing facilities totally, 6 in India, 6 in US, 2 in UK and 1 in Mexico as well. Apart from this, the revenue split, you look at it, the global is at 77%, only 23% comes in from India. But this is just the revenue split I'm talking about. The product split, it seems it's equally managed. There's no concentration here. 30% comes from the automotive segments. These are the short forms which the company reports. Just to make it simplified, there's automotive, consumer, defense and medical, which is there on the screen. Aerospace is growing, it's around 10% This is the product revenue for Indo MIM. Also the installed capacity and the utilizations. Of course, the smaller ones are the precision machine and investment casting tech, but MIM tech, this is the core one, and the utilization is just at around 31%. Overall, seems like the utilization levels are smaller, and if that happens, if they get orders, they can readily do it more. They don't need to put more money in the capex. The market size, the global MIM market, how does that pan out? Calendar 2020, it's $2 billion. Calendar year 25, last year, the recent one, the industry is $4 billion. It's expected to grow by 50% in the next 5 years, around $6.2 billion. And the company is having almost, you could say, 6% market share. That means almost a $360 million plus of market, the company can go for on its current market size. Global leadership in MIM, that's the first reason what may work for the company. Strong growth in return ratios. I checked both the ROE and the ROC numbers, the reported ones. They have shown a good growth. The third important point is a favorable theme for D Street. You name it, in precision manufacturing, there is a premium valuation being given to that. Diversified end market, so they can move around in case some problems happen in certain segments. High entry barriers and customer qualification requirement is there. And that is why we are seeing the premium valuation giving to the Indian precision players. Also, what may not work for the companies, there's a lack of analyst coverage and we need to give it more time. It's recently listed, may see some profit booking because a very good up move has already happened post the IPO. Also, a good follow-on buying coming in. Third reason is valuations remain fairly expensive, around 69-70 times. But I'm going to give you the entire picture, and remember there's a global peer also, but that will come in some time. Geopolitical risks are definitely there, but another type of risk is there while you are analyzing this company is the raw material supply and the costing risk, because 60% of them comes from abroad as well. But let's try to understand the KYC ratings where we judge the company. What are the important levels to look out for? And yes, there is a very small short period of judging, so take things with a pinch of salt in certain criteria. This remains the same. Return ratio, we get it from FY 24, 25 and 26. But short period of time, we have shareholding and street cred. Peer analysis, I'm going to get you only one peer, and that's a global peer. There is no Indian peer to the company, largely in the MIM segment. And the outlook, what are the key outlook to look at going ahead as well? Let's first start with the income statement, how things pan out. An income statement has shown a good CAGR growth coming in. The margins have been a little bit of lumpy, but if you look over the top, the PAT numbers and the top line has done well. The Q1 numbers also largely seems it has been stronger side. Let's just see the margins also, how things are panning out for the income statement. And we see there has been a decent one, so I've given this a thumbs up. Balance sheet, the debt has reduced slightly. It's not a lot because it's a high working capital business. The cash balance has also gone up from 175 crores to 471 crore rupees. So yes, there is a good strength in this setup, but I'm going to give this a neutral rating as of now. Let's talk about the cash flows. There is a little bit of lumpiness, but in FY26, there's a very strong jump in the operating cash flow segment. This was on the lower side, and look at that, it's almost doubled if you compare that with FY25. Investing, financing, this looks like, kind of, a drag, but net there's a good flows coming in FY26 as well. So I'm going to give this a thumbs up as well. But moving on, the return ratio is something which I liked. ROE numbers in FY24 was almost 14%, but the way the company is moving ahead, remember, no major capex they are doing because they have a big capacity already lined up, and they're moving towards value added and a better wallet share of products, and that's at 21% of ROE coming in. ROC also, the story remains the same. In FY24 it was roughly around 20%, but a good growth, and it is sustaining, and for FY26 you look at it, it's at 27%. So net the return ratios is strong, so I've given this a thumbs up as well. Speaking about shareholding, there's nothing much to talk about. It's just been, you could say, 1.5 to almost 2 months of overall listing data. 78% promoters. So next 3 years this number is going to come down for SEBI regulations. FIDI is decent, 8% holdings for institutions, and the remaining 14% comes from public. Not major thing to discuss, so I'm going to give this a neutral rating. But post the IPO price and the listing pop, company has made money for all, almost doubled. You could say from the IPO price, the stock is up 82%. Even after the listing pop, there has been a good jump, and since listing, which is 30th July, we are seeing in the month of August, the stock is up 25% as well. So good follow-up buying, maybe institutional buying also coming in. And remember, there are important lock-in periods left going ahead as well. So as of now, street cred is strong. So I'm going to give this a thumbs up as well. But valuations, what happens? Because of the listing pop, a 35-40 PE has turned into a 70x PE. On our calculations, it's around 68 times. But you compare that with the global peer, and global peer is Jiangsun Gian. It's a Chinese player. It is still trading at 145 times of PE. There was a correction. It had gone up to as high as 160 to 180. But there is a correction here, but there is an up move here. Nevertheless, it is still fairly valued on the expensive side. Dalal Street is giving premium to this theme as well. So we'll keep it at this. But yes, the company needs to come with strong growth numbers in the futures to actually justify these valuations. As of now, let's keep this a neutral rating in our analysis. Outlook, strong industry growth outlook coming in, but take things with a pinch of salt. There's a lot of global exposure also, especially in the supply chain side. Big capacity headroom is there because the capacity utilization levels are pretty low. So that's one point to look at. Also, let's look at the third point is the margins are expected to improve because the company says more operating leverage at play is there. So that's what we'll be looking out for. And they say that there's a limited impact of Middle East and supply disruptions. Remember, there are a lot of precision components and a lot of them go by air cargo rather than the shipping cargo. So this is something which is an industry takeaway which you should note down. As of now, I'm going to give this a neutral rating as well for my analysis. But let's understand and give you the entire picture of what is the total KYC ratings for Indo MIM. The company has come for the first time in KYC, recently listed. Income statement is strong, so is the cash flow. Balance sheet, let's keep it neutral, even though the banking of the cash bank balance is good and slight dip has come in the debt. The return ratios have been pretty strong. This is the past data. Shareholding, let's keep it, neutral right now. It's just been a very short period to judge the company, but street cred, for even a small period, they have done well, be it the IPO pop or even that post buying, good momentum coming in. Peer analysis, fairly valued and slightly cheaper than the global peer itself, but the global peer's size is also decent enough to actually compare. Outlook, long-term perspective, it's a very good story, but short-term there will be hiccups, and we'll try to understand how does the company actually mitigate those hiccups. But let's get to the KYC ratings, and total is 6 out of 8 for Indo MIM. That's largely on the higher side of the average numbers which we talk about, but we'll have a conversation with the management as well. P. Balasubramaniam, the VP of Finance and CFO of the company, will be joining us. He has almost more than 3 decades of experience and the VP Finance and CFO from 1998 to present. So you can see how long he has been associated with the company, qualified CSCS and cost accountant as well. So these conversations will continue, but shortly after a break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth. Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me.
Hello and welcome back to Know Your Company. We are joined in by P. Balasubramaniam, with the Vice President of Finance and CFO at Indo-MIM. Good afternoon, sir. It's always a pleasure to have you with us. And now, Indo-MIM debuts at NDTV Profit's KYC. If you first want to understand what this MIM industry is this an extension of precision manufacturing or a specialization? And where does your company actually fit in? Of course, we know that you have the largest market share, but we want to hear it from you, what this industry is all about and how does your company differ from other peers?
Raji, good morning. Thanks for having me in the show. Thank you very much. It's a pleasure to talk to the viewers of NDTV Profit on this day. See, MIM is actually a precision components manufacturing technology. Component manufacturing has been there in India and in the world for quite some time. But MIM is slightly different because wherever the number of dimensions required are very significant, it is upward of 25 to 50 dimensions. The component is complex, three-dimensionally asymmetric. These are the kind of components that go into MIM. If you plot the complexity on x-axis and volume on y-axis, the northeast corner, that is highest on volume, highest on complexity, is MIM. So you have to fit the technology to the product, and only in that particular sweet spot MIM will work. And we have been working in this technology for about 25 years, so we know exactly where to fit in.
All right, Bala sir, that's a very interesting view coming in on the industry and the way your company is placed. Let's go a little bit more details about it. What are the key risks which are involved in the industry and how the company actually mitigates that? If you could give us that flavor as well.
Sometimes it is very tough for me to say that I have no risk, because the fact is, the technologies are uniquely positioned for handling particular set of components. A few years ago, we were just thinking that probably 3D printing is going to come and destroy all the metal manufacturing technologies. But having used 3D printing for about 3 to 4 years now, we know that there is a sweet spot for 3D printing too, but it is not going to come and replace manufacturing technologies. The biggest risk that you run in any technology is the technology itself becomes obsolete. The best example I can give you is some of the plastic components which are into automotive segments, like most of our crash guards were made of metal earlier. Now they have become plastic. That is because something else happened in the car safety systems, because of which you started getting inflatable blacks, because of which steel parts have become obsolete. So something radically different which is happening in some other area can come and replace a technology. But as things stand inherently from a manufacturing technology, some other technology cannot come and replace MIM. as much as some other technology cannot replace other metal manufacturing technologies. There are a sweet spot for every technology, and MIM also has its place.
And Bala sir, speaking of numbers, what kind of revenue or margin guidance we can expect going ahead for FY27, especially on margin guidance? There is one side operational efficiencies playing out. Last time we had a conversation, you had told that. But on the other hand, sir, there is, of course, risks are there also globally, also in supply chain side. So how does this revenue and the margin outlook look like for FY27?
I think we'll first talk about the outlook that we are given for the current year, and I'll also talk about the risks. The current year, we had given a target of about 5,000 crores on the top line and a bottom line target of 820 crores. That's what we had indicated. I think we are poised to go there well. In the first quarter, we have done 1,220 crores of top line, and we feel we can comfortably achieve the top line target that we had indicated earlier. As far as the bottom line is concerned, we are running ahead of the target numbers right now. And we feel that, the second quarter also continues to be measuring up the same way. So we feel bottom line target also can be achieved. Can we outdo it is a call that we will take at the end of September after the second quarter is completed, because that is the time at which we'll be able to evaluate what we did in the first half and what we are going to do in the second half. Why am I talking about September? Because we normally get about 6 to 8 weeks of visibility in front of us as far as the immediate deliveries are concerned. While we have order books which are very strong, but in reality, the delivery is what matters. We feel that is something which we'll be able to do after the end of September quarter.
All right, so we need to wait till the end of September quarter, and maybe there might be a chance for an upgrade also, because the PAT numbers are looking ahead of the guidance. Okay, but let's talk a little bit of the raw material sourcing also. That's also at times supply chain issues or risks do come up, seeing the current geopolitical situation. 60% of that comes from this segment. Your view on that, sir?
Actually, we'll cover in general the risk and the raw material sourcing risk also.
Right.
See, the majority of our sales is happening to US, followed by Europe and followed by Asia. And as far as the raw material sources are concerned, predominantly they are from Europe. So the Middle East tensions which we are having right now between Iran and US doesn't play a role as far as the raw material availability story is concerned. There could be a delay in the form of a number of days it would take for the material to travel from the European source to the Indian destination, but that could add about 5 to 10 days. We are sufficiently stocked on raw material, so we have not seen any supply disruptions on the raw material front till now. In fact, the only period in which we saw some disruption was when Ukraine war was there, and some of the European sources went through some energy crisis, because of which there was a small problem. They had to increase the price, but supply continued without unabated. There was no problem. Additionally, what we have also done to de-risk our business is, we use predominantly two categories of powders. We use steel powders and iron powders. As far as the steel powder is concerned, we can become 100% self-sufficient. Right now, we do about 40% of our consumption we manufacture in-house, 60% we take from outside suppliers. Can we go to 100% in case of an emergency where supplies don't come? We can go. That is not a problem. As far as iron powder is concerned, we are setting up the backward integration facility. We are in the process of setting it up. Sometime in first quarter of next year, it will come into commercial production. Once it comes, 100% of our requirement we will be able to source from inside in-house if there is a need. But we also find attractive uses for these powders in other industries wherein the pricing realization is much better. So we feel that the raw material portion of it will be completely de-risked by Q1 of next year. We are covered to the extent of 50% now. We will be covered to the extent of 100% by Q1 of next year. And raw material is a very critical source for us. Though our value addition is very significantly high, non-availability of raw material can be a problem. We have covered that as such. As far as the customer risk on account of geopolitical story is concerned, we have absolutely zero risk, because almost 85% of our exports happen through air, and it is for customers located in US, Europe, and in Asia. And we don't have any crisis on account of that. But,
right. So 85% of exports actually happen through air, and this is my conversation with a lot of precision players, and that's something which we always talk about. But let's just talk about the installed capacity and the utilization. The utilization levels are quite slightly on the lower side, to be honest, for MIM. Why is that? And of course, when the order starts coming in, you don't need to do any capex, to be honest, because you have capacity left. Just wanted your views on that.
It's a good kind of problem to have, sir, because you have lower capacity and higher profit margin. As the capacity utilization goes up, the operating leverage comes into play, and you start ending up getting much more margin than what you normally get. That's a good kind of problem to have. See, our capacity utilization number is lower in MIM side, not because of the fact that we added capacity very soon. It is just because we did too many good things too soon. We have been working on productivity improvement and cycle time reduction in a big way in the last 4 to 5 years, because of which our capacity utilization has come down, even though turnover has been going up. It's once we do something which is very good, we implement it across our factories, and that is why you find that the capacity utilization data is showing very attractive situation right now. We can actually practically double our MIM turnover without adding any capacity. And precision machining and investment casting is something which will be adding basically to take care of the FY28 requirements. FY27 as such, we can finish our current year turnover requirements without adding any capex. But that doesn't mean we will not do, because there are some finishing operations in machining side which we will have to add, so that we are ready for a higher level of the run at rate by the end of the current year.
So FY27 you work, and FY28 the benefits start coming in. But acquisitions also, sir, a lot of expansions are happening. US, UK, we have already understood that during the IPO discussions we had. But the further acquisition strategy ahead, will that be inorganic only?
We are open as far as, there are some businesses wherein inorganic opportunity makes a lot of sense. For example, we are into aerospace machining. We have 1,100 components which are approved by the customers. We are in the process of adding 400 components. An acquisition in aerospace machining side will be of great value because, you can get the approved list of parts immediately, because same set of parts for it to get approved, it takes a longer time. On MIM side, an inorganic opportunity will be mostly to cover a particular geography. But if it is not working, inorganic is not working, then we will move towards organic growth. That's as far as the MIM side is concerned. As far as casting is concerned, again, because we operate in the gas turbine industry and in the aerospace industry, an inorganic acquisition will make sense. Will we look at, right now our targets are, we definitely want to have a manufacturing place in Europe. In 2016, we started for our manufacturing in US. It has come in very handy, even though the tariff challenges were there, it didn't affect us in a big way because we had a manufacturing base in US. We would not like to have a similar situation in Europe, because NATO spending on defense is going to go up. So we need to have a manufacturing base to address this market. This market is not available to India right now. So if you have a manufacturing base in Europe, you will get this market. And defense spending going up to about 2 to 3% of the GDP of each one of these countries, there's going to be significant business addition on account of defense spending in these markets. So we are open to look at both organic and inorganic. Right now, we have looked at inorganic development on the MIM side. It has not worked out because the regulatory authorities were not interested in approving it. So we may have to look at an organic growth on MIM. But on the casting and machining, we'll be interested in an inorganic growth.
Right, Bala sir, you have given us a full 360-degree angle on the growth prospects of the company and the industry as a whole. It's always a pleasure to have you with us and talk about the industry as well as the company. Thank you very much and best of luck for the future.
Thank you.
So that's the management of Indo-MIM talking about the aerospace, the MIM industry and what it means, especially with NATO increasing the defense budgets. This can be a watershed moment for not only the company, but the India's precision manufacturing setup as a whole, especially the ones in aerospace. So interesting stories like this. Stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT। A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August. Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth. Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning.
Nifty started the day on a positive note but slips in the red to trade near 24,200 or breaking below that. Broader markets see mixed moves. Metals shine with gains. IT and auto lend support. PSBs as well as financials under pressure. Keynes Tech in focus on the back of pact with boss came for AI expansion and manufacturing capabilities. EMS stocks overall in focus after the government notified a new mobile phone manufacturing scheme with a budgetary outlay of 62,500 crore rupees. Rice stocks like LT Foods and KRBL gain in trade after basmati prices surged almost 10% in August, driven by weak monsoon-led supply concerns, higher logistics costs, and West Asia-related trade disruptions. Vishal Mega Mart surges amid company's board approving the reappointment of Gunendra Kapoor as the managing director. Positive brokerages also boost the stock. IHCL in focus on the back of approval for amalgamation of Oriental Hotels. Hexaware Tech recovers in trade after IT firm unveils AI strategy. Commerce and Industry Minister Piyush Goyal leads India's largest ever business delegation to Japan with more than 200 industry representatives traveling to the country for a 4-day visit beginning from today. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's get started with markets today. And yes, at midday, the markets have really fallen substantially, led a lot by the banking stocks. There you go. You see that steep fall that the market has really seen. Also to be noted that while crude oil prices, which we have been so sensitive about, they have really been on the softer side in the trading session today, but the comfort of crude oil prices above the $90 per barrel levels and comfort in 93 is also a big concern for the economy. Bank Nifty is the one really taking the lead when it comes to the fall, and therefore some of the banking names are really taking the lead in terms of the overall momentum fall as well. The large caps like SBI, the largest bank, as well as from the private sector, it's ICICI Bank, which are the two top losers when we talk about the banking sector. But why only talk about bank? Because the overall PSB's financials are the ones really under pressure in the trading session today. In fact, the only couple of sectors which are really doing well and contributing a little bit of a few 5-10 points to Nifty 50 are coming in from one IT sector, and the second one is the high beta metal sector. So there you go, the gainers as well as losers. Gainers are losing steam at this point and the losers really taking charge. So it's a bear grip that we are really seeing in the market, 0.3% down in trade, and breaking below the 24,200 level is not a good news coming in when we talk about the Indian market. So there is a fair bit of a play over there when it comes to the across the board pressure, but also take a look at the broader market. It's the mid caps which are flattish in trade at the particular moment, so outperforming the key indices by a huge margin but not really making a meaningful contribution. So that's the snapshot really of the market coming in. But also remember, there's one theme that is really picking up in the market that has been doing well, has been buoyant despite the various concerns of the economy as well as the crude oil prices that have been persisting since the beginning of this particular year. We are talking about the IPO rush, which really continues. 59 IPOs have really raised more than 72,000 crore rupees so far in this particular calendar year 2026, surpassing last year's tally, and August alone has seen 21 IPOs mop up over 20,000 crore rupees, while the strong listing gains really reflect the robust investor appetite. Upcoming issues really include Skyways, Air Services, Symbiotic, Pharma Lab, and also Lumino Industries. We have with us IPO expert Pranav Haldia, who's the managing director of Prime Database Group, to talk more about this IPO boom. Pranav, despite the vagaries of the uncertainties of war and global pressure points, FII is not coming in. Looks like the IPOs, which have been much more focused approach on stock specific potential, there the FIIs have really participated, and the overall IPO momentum in this particular year has been much better than one would have anticipated in a weakish and a volatile market. What's your view on that?
Good afternoon, Nisha, and thank you for having me. Yes, you're absolutely right. IPOs don't like volatility. You don't see too many IPO launches happening in volatile markets. But I think over the last couple of months, with some stability returning to the secondary market, with some concerns on the geopolitical side being addressed, even though we're not completely out of the woods there, I think the supply pressure was simply too much. Even as on date, there are still another 250 companies which are either awaiting the regulator's approval or already have their approval. And, these companies are looking to raise 5 lakh crores. So there is a lot of supply pressure, and we have to understand that, the observations which are given by the regulator are also valid for a 1-year period. In April, we did see the regulator extending that by 6 months. So all companies whose approvals were expiring between April to September were given a kind of a 6-month leeway, which is now going to get over in the end of September. So there is a lot of supply pressure. Talking about FIIs, which you mentioned, so over the last couple of years, even though FIIs have been pulling out significantly from the secondary market, one common theme has been their constant inflow into the primary market. So whether it was in 24, 25, and even in the current year, so they are looking at some of these IPOs selectively. Of course, another big trend over the last couple of years has been the increased prominence of domestic institutional investors. So the role of FIIs is also sort of diminished in the sense that at least IPOs which are smaller in nature, 500,000 crores, can actually go through just on the support of domestic investors and not necessarily require foreign investor support as well.
Right. Very well pointed out. The DIIs are also supporting a lot, but FIIs have been restricted. Also, it depends on the road shows and special focused approach by the investor community, when they are approached by the companies about the potential. But one more observation when I look at the data now, Pranav, is that most of the IPOs have also given returns, which was lacking in the last few years, where there was a startup-based thrust and larger play when it comes to the IPO market. So two observations here. First, it has not been a startup-led IPO momentum. There have been far and few, but there has been a broad-based real old economy companies also making it to the market for growth capital. On the second bit, there is a fair bit of gain on most of the IPOs compared to their IPO offering price. So this is what really brings back the trust and stability in the IPO market as well. And in investing for it, probably they left something on the table for the investors. But a few of them, which really have been, outliers in terms of not reaching the IPO price, have been the types of Alpine Tech's World, which listed in July. We also have Astha Spintex in July. Some of the others have listed in closer to the time when the war really started. So at that time, the valuations were at elevated levels. So looks like when it comes to the valuation assessment and recalibrating it as per the economic realities, the IPOs have really given the correct valuation where investors can really see value. What is your assessment on that?
Well, a lot of points, but valuation is always a tricky subject. So my advice to investors always is to not paint all IPOs with the same brush. You would have some IPOs which are perhaps expensive, some of them which are fairly valued, some of them which are attractively valued. I think the issue also lies in terms of expectation management. Wherein we expect all IPOs to not just give a bumper return on listing day, but continue to perform and trade in the positive above the issue price for the rest of their life cycle. Ultimately, we have to realize that this is equity. This is not a fixed income asset class, and IPOs I would always categorize as even more risky than an already listed company which has a track record, which has got several disclosures. So, I think this expectation that we have that all IPOs should, continue to perform in perpetuity and trade in the positive is somewhat misplaced. I think the day an issue gets listed, the day after that, it becomes like any of the other listed companies, the other 2,500, 3,000 companies that we have on the stock exchange, whose share price will go up and down on the basis of how the company is doing, how the sector is doing, how the market and economy is doing. So you've seen, even with the tech stocks that you talked about, it is quite surprising, and you will probably find it very surprising that despite choppy markets over the last couple of years, on an average, the entire cohort of these tech companies have delivered a 30% return on an average till date. So again, the point being that we can't expect all of them to give. And the same argument actually goes with the non-tech companies as well. So while some of the tech companies have given bumper returns, some of them are still trading below issue price. In the same way, the non-tech companies as well, some of them would have given bumper returns and some of them have not. Finally, one last point which I just wanted to make was that, you've seen this historically as well, that whenever you find a bit of a pause in the IPO market and a revival starts happening, which is what you've seen kind of in July and August happening, typically you find that valuations of such IPOs tend to be more attractive.
Yes.
Given that, of course, sentiment is not great, so they do tend to leave more on the table. You tend to find that these IPOs give a better return on listing and also subsequent to listing as well.
That's a great point, Pranav, that you made. The IPOs that came at an attractive price, also given the volatility. But how do you segregate the winners and losers? Has it been sector-based where the IPOs have done well? And also, what do you see from the kind of investor, attractiveness, that which are the sectors that the investors are more likely to really bet on when it comes to the IPO market, in your view?
Well, so I'm assuming that you're referring to retail investors because, of course, institutional investors have all their resources at their disposal to decide this. Now, as retail investors, I think, first of all, one needs to be very clear about what your strategy is. Are you coming in for a listing gain, or are you coming in as a long-term investor? There was a SEBI study as well, which came out 2-3 years back, which showed that roughly 70% of retail investors exit within, 2 or 3 weeks of IPOs, which shows that, there are retail investors who are looking at this primarily to make a quick buck. And, there's nothing wrong with that strategy. My only recommendation there would be that even in case the issue lists at a discount, you should still exit it, because it's not that you've done any kind of research or homework on that company.
Sure. So first day pops have been there for at least this season of the IPOs, which was lacking earlier, Pranav. Good point made. For me, what really stands out the most is that this has been widespread across many sectors, and there has been more growth capital that has also been raised, and not just investor exits through this IPO. So it's fueling the economy with the IPO momentum. Thank you so much, Pranav, for joining us on NDTV Profit. All right, so that was a segment of the market, but let's also discuss the overall market. And Sandeep Agarwal, the fund manager at Sovilo Investment Manager, joins in today to discuss the investment strategy at this point. Sandeep, what are the pressure points that you are viewing in the market? 24,200 given that particular level being given up by the market is a cause of concern.
Yeah, hi, and good afternoon, and thanks for having me on the show. So, as you rightly pointed out, the bigger sectors are not contributing to the market. The banking space has not been contributing for quite some time. Particularly, the private banks have been underperforming in a big way. That has been a long story which was going on for long. Thankfully, IT has started contributing in some way in last 1.5 month. Pharma has been doing well, but it has very low weight overall. So, the bigger sectors like FMCG and banking has not done so much to contribute, and that is the bigger pressure point in my view. And markets won't move in a big way till the banking space or some of the other spaces do better than what they are doing right now. So it will remain a bottom-up stock-specific market from the mid-cap side or the small cap side, where there is a clear visibility or earnings growth. Those are the stocks which people will lap up, and unfortunately, because they don't have weight in the index will remain range bound. That is what my sense is.
All right, so Sandeep, since you're saying index will remain range bound, and as much as the market believed that this particular war situation and its impact will be short term, it's been almost 6 months that buy on dips in some of the large caps and the banking sector is what experts have been saying. Now is there time to really recalibrate the strategy? How much would you assess in terms of cash deployment, and how much to keep for a further downside to deploy later?
So, we firmly believe in philosophy that when client gives us money, then he has taken a call that he wants to invest. So, barring for operational reasons, we generally don't believe in keeping too much of cash, because that is not the mandate which client has given. But what we do is that based on our outlook on macro basis and all, we keep switching between the sectors. So, as mentioned, that after March, we have gone significantly overweight in IT. Thankfully, that has done well. We were zero weight till first half of March. We started accumulating stocks, and I think we have reached more than 15 or around 20% now, and we still have appetite to go more 5-7%, because we are extremely bullish on the sector, which includes hardware. So it is not a call only on IT services, but it also is a call on the hardware side of it. And honestly, we have made very good money on the hardware side and even the services side in last since March. And we believe there is a long tailwind still from here. So we will have overweight there. It is a defensive also.
All right, Sandeep, thank you so much for sharing your thoughts on the markets and, of course, many sectors of choice where you can still make money at these levels. Thank you so much, Sandeep. All right, moving on to one company in an otherwise weakish market is doing well. We are talking about SmartWorks co-working, and that particular stock is up over 2% in trade, and that is because of the news development that it has won expansion mandates worth nearly 235 crore rupees in incremental rental revenue from the existing enterprise clients. In fact, the company said that strong demand from the firms expanding AI and technology capabilities is really supporting its growth pipeline through FY29. We have with us Harsh Binani, who's the co-founder of SmartWorks, joining in. Harsh, always a pleasure to welcome you on NDTV Profit. And give us a sense first on why this is taken as a positive move when it comes to the 235 crore rupees of incremental rental revenue, and how will it really show up in your performance going forward?
Good afternoon. Thank you so much for having us this afternoon. The deal that has just emerged is, of course, continued momentum that we've been seeing for the last 12 months. But underwritten behind it is a major structural change in how the world's best companies, largest companies, Forbes 2000, Fortune 500 companies, India's best companies are going through a massive habit shift of how they consume office space in India. And what you're seeing unfold in front of you is a mega trend for flexible workspaces, where SmartWorks, as the largest player by AUM, has not only been consolidating its position, but over the last year, steadily gaining market share. So we should look at this deal in context of that. And in fact, the platform that SmartWorks has built is a validation on both sides. On one end, we have supply best buildings available in prime locations from best and biggest developers in India, DLF, Hiranandani, Panchsheel Group, Raheja, Satwa. And on the other end, on demand side, not only are you seeing the world's best companies and India's largest companies, but you're also seeing our existing customers expanding and growing with us. Earlier, the misnomer was that flex space is being demanded because people need new office space, therefore they need space. But what we are seeing is that existing office demand, people who are rolling over their conventional office space contracts, coming to a platform like SmartWorks. And this is what gives us confidence behind all the expansion and the growth that we are seeing. And now, just coming specifically to this 235 crore deal, we will not see this deal only as a validation of how the business has been scaling up and growing. It is actually a customer confidence announcement. These are 10 existing customers of ours who have been with us across 6 cities. And in our portfolio of 14 cities, these customers are growing and expanding with us. So the 235 crores is going to be spread over a period of 4.5 years. And this, of course, adds to our already contracted revenue of more than 5,400 crore. So the quality of cash flows and the companies it comes from is continuing to gain more strength and momentum.
All right, well summarized there, Harsh. So 235 crore rupees of added contracted rental revenue for 4.5 years, spanning over 4.5 years. This also shows the demand that is really there. So tell us about the occupancy levels as well as the price points for rental market, especially in the office space at the current moment.
The advantage of our business model and the platform we've built now gets distinguished through major components. We are the only ones who are leasing really large campuses which are as large as 800,000, 900,000 campus in terms of square footage. In fact, last quarter, we had announced the world's 2 largest campuses, which are going to come up in H2 of this year. What has happened in our business model is we've been able to get advantage of scale and cost. And when you have this dual advantage play out in our campus model, in spite of the rentals across the wider market in India, commercial office space in prime locations over the last 3-4 years has really gone through the roof. We've been able to still take advantage of our cost structure, pass on that benefit to the customer. And today, in fact, if you look at it, our per seat pricing is about 8,500 rupees per seat, which roughly works out to, about 280 rupees per calendar day. What is 280 rupees? 280 rupees is less than a premium coffee. And what are you getting in this 280 rupees? You are getting a grade A workspace You're getting fully fitted out office space, all the infrastructure that you require to run your office, whether it's HVAC, food and beverage, pantry, all bundled together. So us being able to pass on that benefit to the customer, yet our business continues to improve its margin quarter on quarter, just signifies that the business is now well in its compounding phase, where not only are our revenue growing, our margins are growing, and our cash flows and our return on capital is also growing together. So here is where we believe we are setting ourselves up for a phenomenal next 2-3 years, because the FY27 revenue of ours, last quarter we had mentioned, 88% of that has already been contracted. And with this addition of 235 crores of contracted new revenue, this visibility increases more. And now we are largely solving for FY28, where you'll see this visibility allowing us to continue maintaining that 30% plus revenue growth.
All right. So Harsh, it will be great if you can also mention the pricing and the increase in prices, and how is the visibility and outlook as you prepare for FY28 for the pricing, since you have already showcased that demand is strong.
Absolutely. We sign deals every day, but of course we don't change our guidance every day. Right. I can firmly tell you that, the power play is off to a phenomenal start. And in addition to the contracted revenue that we've already signed it up, we are setting ourselves up very well for the slog overs in FY27. And particularly with the pricing that we are able to command in the market, the pricing will come with our margins also expanding. So at this stage, I can firmly confirm that our 30% revenue guidance and the 19 to 20% EBITDA margin continues to remain intact. And our visibility and confidence in our FY28 numbers now also continue to go up. So in fact, for FY28, I can firmly tell you that we will be continuing to maintain that growth mark, and more than 70% of that is already contracted as we sit today. So perhaps visibility has gone up now, guidance does not change, but we are setting ourselves up for phenomenal growth over the next 2 to 3 years.
Harsha, the market seems to like what you're saying, because the stock has been really going up on the basis of the kind of guidance that you're giving. Give us a sense also of your presence across 15 cities in India and Singapore. Is which one, India or Singapore? What's really giving you better margins? And give us a little bit of outlook on that as well.
Absolutely. The opportunity of flexible workspaces is large and a mega trend, as I mentioned. India is only about 1 billion square foot of office space, and that is spread across 140 crore people. And let me just give you a flavor of what is the opportunity ahead for us, because we are not building for the next 2 years, we are building for the next decade.
Yeah, very quickly.
New York City has more than 75 crore square foot for just 80 lakh people. So we believe we are in this trend now where you will continue to see 3 million square foot of addition of office space from us every year. And the market continues to grow at 22 to 25%, but last quarter we grew at more than 44%. So we will continue growing here. Our opportunity continues to remain firmly in India, because we believe India has such a large headroom in front of us that this flex space, which was less than 0% in 2016-17 when the sector started, is more than 12% of India's office space now. We see this doubling over the next 3-4 years, and the 14 cities that we are present in India, 7 cities which are the tier 1 is where you will see more expansion, but of course tier 2 will also grow. Singapore is a very profitable market for us, but Singapore is a gateway through which we are able to get a lot of customers from Singapore to India.
All right, getting all the top clients and MNCs with your presence overseas. So Harsh, that point well taken. And the stock is up over 4%. When we started this discussion, it was up 2.3%. So the street likes what you are stating in terms of the momentum, the strong demand, and especially of the co-working and the campuses that you really offer, which is the order of the day today. Thank you so much, Harsh. All the best for the next quarter.
Thank you. Thank you for having us.
Thank you. And with that, completely out of time on Markets at 12, but keep it with NDTV Profit. Thank you.
केसरिया से मन जोगी हुआ रे झूम देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and former treaties lies the true heart of our capitalism, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth. Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit।
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets often have other plans. By midday, the Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio with me, Hira Dadia. Let's quickly take a look at what's happening in the markets as we speak right now. An interesting start. We did see a gap up opening in trade today, but we've actually cooled off, gone nearly to the day's lowest levels with cuts of around 0.3% coming in terms of Nifty 50. Let's pull up Bank Nifty on the screens as well, and then we'll look at the heat map of Nifty 50. There you go. I mean, the cuts similar to what you're seeing in terms of Nifty 50, but 0.7% lower. The pressure in terms of Bank Nifty is way higher as compared to the benchmarks. We've not been able to sustain those opening gains that we had seen. What is actually what you're seeing on the screens as well is more of reds versus greens, and that's telling you that the market is skewed towards the decline, and that's what the advanced decline ratio will also tell you. But there you go. Adani Ports, BEL, SBI, Power Grid, Bajaj Finserv, Shriram Finance, Nestle, SBI Life, few of the top losers there. What's actually on the forefront right now is the metal pack. Strong moves coming in there from a Hindalco to a JSW Steel, Tata Steel, all of them, and a Coal India. And the second best sector is with regards to where IT goes. And that's because on the commentary from NVIDIA over the weekend, where you heard from them that there will be a 15% rise in terms of chip prices, that led to a sell-off in terms of KOSPI. And that's a sentimental driven rally that we're seeing in terms of Indian IT as well in today's session. So that's what the Nifty 50 heat map is looking like. But let's look at the sectoral heat map. And that will tell you, there you go, the metal index up 1.2%, and Nifty IT seeing gains of around 0.7%. But apart from that, it's absolutely lackluster. What is losing out again is the PSU bank index, and that's what is putting pressure on your bank Nifty as well. 1.2% is the kind of cuts that are coming in there. Your defense pack is also seeing profit booking today. Consumer durables is also down in trade, and your bank Nifty, which is trading under pressure. Let's pull up the mid cap and the small cap index also on the screens and see what's happening on that front. If you look at the mid-cap index right now, pretty flat, almost at the day's lowest levels. And you have the small cap 250 as well, which will be seeing similar kind of moves. There you go, absolutely flat, no moves at the day's lowest levels is where we are at. But what we need to actually watch out for from here on are the cues that we should be picking up for the markets before you actually go to the watch list as well. In terms of the initial cues that you're picking up right now, first up, if you have to look at sharp fall in Nifty, Bank Nifty that we've already addressed, your support range in terms of Nifty 50 is coming in at 24,000 and 24,150. Your Bank Nifty support range is coming in at 56,800 to almost 57,200. So that's what you should be watching out for. And your technical setup with regards to the small and the mid cap space is way better as compared to your Nifty 50. So that's where all the action is right now. Buying in metals, telecom, IT. Pricing is what is seeing a spike because of sugar, rice, and your chemical stocks. There is selling with regards to BFSI and FMCG counters. And in terms of a listing impact, let's pull up a Horizon Industrial Parks as well as Lalita Jewelers. Both of these listed on the bourses today. If you look at a Horizon Industrial Parks, absolutely tepid. In fact, the response also in terms of subscription was tepid for Horizon. And Lalita is the one which is seeing smart moves. In fact, the entire jewelry pack has been in focus over the last couple of trading sessions as well. Today, you have a ISMA address in terms of sugar this evening. So that is going to be an event that the street is going to be watching out for, with the interest that sugar as a sector has actually garnered over the last couple of trading days. Commerce Ministry Piyush Goyal also begins the 4-day visit to Japan. In fact, we're giving you live coverage with our colleague Rishabh Bhatnagar, who is reporting from Japan as well. And you have Foreign Minister S. Jaishankar, who will be in Russia. So all of that and about that is in focus. But let's look at the watch list. Vishal Megamart. Gunender Kapoor has been reappointed as MD and CEO, and that's what is keeping the stock on an uptrend. 9% up move coming in there. A lot of hopes on his shoulders. Hexaware is interesting because in Friday's session, you did see that vertical downward correction that happened in that last hour of trade. And now they've launched Zerovity, which aims at 6 to 7% calendar year 26 constant currency growth, and that's what is keeping the stock afloat. Himadri Speciality has ended a 4-session gaining streak. We spoke to the management as well on NDTV Profit, and you can hear the entire conversation on our social media platforms. Apart from that, you have Dixon Tech. That stock is in focus because the 62,500 crore mobile phone manufacturing scheme, that's the 2.0 scheme that has been announced by Ashwini Vaishnav, and that could be one of the beneficiaries. But that stock is under pressure. KRBL, 6 to 10% surge in basmati prices in August so far, and that's the reason why the entire pack, KRBL, LT Foods, all of them are buzzing in trade. Apollo Tyre has a positive brokerage note where UBS has upgraded the counter. Rain Industries is also buzzing. Second consecutive session of gains for that one, and it's trading over a 1-week high. Muthoot, Manappuram, all of them continue the uptrend, and they've extended the gains on the back of higher gold prices. You have Suven Life Science, which is also in focus. They've hit an intraday record high and they've gained for a third consecutive week. So that's very interesting to watch out for. Paytm has gained for 5 straight months, 24% away from its IPO price. The question is, will this up move continue, or what is it that could actually derail this uptrend? Because I think in 2026 alone, that stock is up around almost 70%. And an interesting analysis that Somit has bought for us. TVS supply chain as well in focus, because Japan's Sankyu is planning to acquire almost 0.5% stake in TVS supply chain. So that's another one to focus on. So interesting moves that we're watching out for in terms of the watch list. But let's actually head across to Nilesh Jain of Centrum FinServe to take the rapid fire from here on. Nilesh, welcome to the show and always a pleasure to speak to you. The first one on the list is a Vishal Megamart. I mean, there is a fundamental reason there on the MD and CEO being reappointed. But on the charts, are you seeing any further upside, or should this rally be used as an opportunity to book profits?
Very good afternoon, Viral. Well, looks like merely a pullback move, a dead cat bounce, you can call it. 120 is still a strong resistance. So ideally, if you get the levels of 115, 118, that's the exit opportunity if somebody is already holding the long position.
Okay, so 115, 117 an exit opportunity if someone's holding long positions. Your Himadri specialty, the trading volumes have actually doubled on this counter. The stock also, which is in focus today, what would you do?
Well, look sideways. We have already seen a strong run up earlier. Now back to back for the third straight session, we are witnessing selling pressure. So looks like we may see some consolidation in the zone of in the range of 640 to 700. So that is the range as of now, and there is no clear trend. So better avoid this particular counter.
What about a TVS supply chain?
Well, TVS supply chain, a very strong uptick coming in today's trading session, over 12% jump. So if somebody is already holding the long position, keep a trailing stop loss at 132 and ride this rally towards 140 to 145. So stock still has a potential for further upside to continue. And in terms of taking a fresh long, I think it's an avoid. Risk and reward is not looking favorable at current level.
Okay, so avoid fresh long positions on the TVS supply chain. Rain Industries is at a 1 week high. Do you think this 1 week high level, say 214.15, you can see a further entry point here?
Well, absolutely. Today we have seen a fresh breakout from a small consolidation zone, as well as counter has surpassed its 21-day moving average as well. So we can expect a follow through on the upside towards 218 to 222. So keeping a stop loss below 208, it's a buy and decline structure as of now.
What about a Muthoot Finance? I mean, the rally continues on the back of high gold prices.
A very strong uptick we have seen with a good breakout. So the stock was forming a lower top and lower top formation. It has indicated that particular bearish setup, and looks like it is heading towards 3,300 to 3,400 on the upside. So keeping a stop below 3,050, one can go long on declines, as well as if somebody is already holding the long position, can ride this rally all the way towards 3,300 to 3,400.
How about a Suven Life, Nilesh? Because that stock has gained for 3 consecutive weeks. Today it's right now downward 0.6%. But if you just pull up a 1 month chart of Suven Life Science, I just want to see the kind of gains that have come in the last 1 month and what that setup is looking like. If you could just have a 1 month chart of Suven Life, there you go. A 17 to 18% is the kind of up move. Are you seeing a higher up formation?
Well, really very good breakout that we saw in the previous week. Now, back to back for the second straight session, we are witnessing some bit of profit taking. But I think if you get any dip towards 365, 360, that can be a good entry point. It's a buy and decline structure as of now in Suven Life Science, keeping a stop loss below 330. We expect counter to move towards 390 to 410 in the near term. So look strong on the chart. Buy and decline should be the strategy.
Okay. What about your rice companies? Yes, it's an event-based surge that we are seeing because your basmati rice prices are touching the roof right now. KRBL, LT Foods, Chamanlal, anything that you like on your charts?
Well, out of all, KRBL has a better structure. We have seen a very strong, very good breakout from its last 7 months consolidation. So KRBL looks strong for further upside towards 460, 470 in the near term. Keeping a stop loss below 420, it can also be bought on declines, as well as can be added in a staggered panel.
Okay, so that's with regards to where your rice companies go. Nilesh, stay with us before we go to Google Trends. I actually want to hear out what the management of KRBL actually we spoke to they spoke to NDTV Profit as well. Let's understand as to what is actually driving their price in terms of basmati rice, and what is that outlook looking like going ahead.
Let me ask about supply chains right now, because the last time we spoke to you, Mr. Jain, we were in the midst of, the West Asia crisis, not over, but then at least kinetic warfare seems to have dissipated. And there seems to be some movement of goods. Can you give us a sense of how your exports are proceeding right now, whether those lines have gotten renewed?
Sure. So here I can probably share some industry data, and this is released by APDA, which is the coordinating authority on agri exports. So if you look at the total volume export of basmati between April and June of this year, which is Q1, it's down by about 11 to 15% in volume terms. And the largest impact here is in the Middle East region. So if we look at the shipping situation since June, I think, my understanding is that the shipping routes continue to be affected. The two principal routes to reach that region are the Strait of Hormuz, where, the shipping traffic, which increased maybe 2 weeks earlier, has again come down to minimal. The other access is through the Red Sea, where again, activity by some groups that are allied to certain political groups in Iran, continues to make the situation uncertain. So from an export logistics point of view, Middle East is the large market. 70% of basmati exports from India went to the Middle East, and that region continues to be affected from a logistics point of view.
Ashish, good morning. Neeraj here. All of these things didn't quite put a dent for you, right? Because your quarterly numbers, you had a record profitability, if I'm not wrong, despite these challenges. So if these challenges dissipate a bit, are we looking at a trending year of profitability for you, where you end on a high? Because it's not that top line growth is necessary for growth. Your top line numbers on a quarterly basis still mirror something that you would have done 12 quarters ago as well, right? But your bottom line numbers are looking strong. Can it improve as the year goes?
Yeah, our Q1 numbers really reflected two things. One is from a volumes point of view, the domestic business continues to grow well. On the export side, like the rest of the country, from a basmati export point of view, we've been impacted because of the difficulty in accessing Middle East as a key market. However, our profitability in that quarter was really driven by higher prices. So, as you mentioned, the whole industry has seen a rise in basmati prices when you look at it on a sequential quarter basis or even on a year-on-year basis. So that's reflected in our realization. Second, the quarter also had some one-offs in terms of, M2M market gains. We've also guided that this level of profitability that we saw in Q1 is unsustainable, because it is coming off factors which we don't think will continue. However, for the year as a whole, we've also mentioned that I think two things will determine where the profitability goes from here. One is that how quickly exports come back, right? So exports for us, as we focus on branded exports, tend to be a high margin business, and therefore they're coming back to the normal trend levels is a boost for the margins. And second is also importantly that where do paddy prices trend in the upcoming paddy season? So, I think these two will determine the overall level of profitability. However, our overall expectation this year is that marginally higher profitability as compared to last year.
Because, just correct me if I'm wrong, but typically we would think that if basmati prices, etc., are all moving up, that would augur well for profitability. And yet, despite a record Q1, you're talking about only a marginal uptick in profitability YOY. Why is that?
Yeah, well, like I said, this is what we know now. And you are right. High prices in general are positive because they tend to increase the realization. However, the other important aspect is cost. So our principal raw material is paddy, and that's something that the whole industry purchases in the Kharif season. So the price at which the paddy opens is also going to be an important determinant of profitability, especially in the Q3 and Q4. So that's something that we need to bear in mind.
Okay, so that's with regards to where you're talking about a demand surge, you're talking about costs which are escalating and the price hikes. that have come in as well. But moving on, Paytm continues its remarkable comeback on the Lal Street, and the stock is at a more than 4-year high, rallied 70% so far in FY27, and the best performing FNO stock this month as well. The big question now is, till when will this rally last? Somit joins us to put the spotlight on Paytm. Somit, an interesting one that you've actually looked at right now with the kind of performance. The question is, will it continue the upcycle, or are there going to be any negatives that could stall this kind of a rally?
The bigger question, in fact, is the fact that the stock is trading at its 4-year high, but it's still 24% below its IPO price. So will it reclaim the IPO price given the rally that we have been seeing? As I was mentioning about the rally, the stock is at near its 4-year high. It is the best performing FNO stock in the month of August. It's up nearly 22%. And so far in FY27, the stock is up nearly 70% so far. And the stock has been gaining for the 5th consecutive month. But as I mentioned, the stock is still 24% away from its IPO price. So firstly, let's look at the factors that have aided this kind of a rally when it comes to Paytm. The first one is the UPI MDR. This has been a game changer. In fact, few analysts believe that going forward, this UPI MDR on UPI would contribute nearly 2,200 crore rupees to the company's EBITDA. Earnings have been quite strong. Both Q4 and Q1 has been much ahead of what the street has been anticipating. And given the fact that their UPI transactions have been much more than what the industry is, they have been gaining market share on UPI transaction, which is again a positive. The financial service has emerged as a major growth driver that has been leading the earnings. All the segments of financial services have been leading the growth for the company, and operating leverage has also kicked in. In fact, if you look at the EBITDA margins, it came in at close to 8% in the first quarter of FY27. And when it comes to the soundbox or the device ecosystem segment, that has also remained at one of the most profitable segment for the company and has maintained its competitive moat overall in the industry. But despite these factors, there are few things that could derail the rally that we have been seeing in Paytm. And first of them is the timing. Timing related to MDR on UPI is still not known. So that could be one of the major overhangs on the share prices. Second one is we do not have any details, so the MDR rate could also be lower than what the street has been anticipating. And if that be the case, then again the analyst estimates will have to change. And with MDR on UPI coming back, the competitive intensity could also increase for Paytm with more cashbacks and gift vouchers given by other players. So that is also one of the concerns that is there on the street. And MDR could cannibalize the soundbox device rental revenue because a merchant would not pay MDR as well as a rental device. So there could be some cannibalization that we could see on that front. And lastly, and also with the gains coming in for the company on the financial front, capital allocation remains an investor concern as per Bernstein. And lastly, when it comes to the run-up that we have seen, valuation leaves very little room for disappointment. Any disappointment coming in on the MDR front could lead to a fall or the correction in the share prices of Paytm. Now, if you look at what analysts are seeing, nearly 17 of the 23 analysts covering the counter have a buy rating, 5 of them have hold, while only one brokerage has a sell rating. If you look at the brokerage, they are also quite divided. The 12-month target price is suggesting a 4% downtick from the current levels, but the highest target price is suggesting a 35% uptick, while the lowest target price on the street is suggesting a 36% downtick. So at this juncture, analysts are also divided. So the key thing would be any clarity coming in on the MDR front would be important for Paytm.
Absolutely. So MDR is the key. Thank you for that. In fact, let's get in. Narendra Solanki, Head Fundamental Research from Anand Rathi Shares and Stockbrokers. Narendra, welcome to the show and always a pleasure to speak to you. My question to you is, from what Somit was actually talking about, a couple of triggers that one has to watch out for in terms of Paytm. But the first question is, do you think Paytm will be able to sooner or later now reclaim the IPO price? And in terms of the triggers that are in place and where valuations stack up, would it be good advice to enter at current levels?
Yeah, good afternoon. Let me first start with the disclaimer. We do not have any active recommendation on the stock right now. But having said that, if you see the company's latest performance, the things are improving gradually. And in terms of both its UPI payment system as well as the Soundbox system, the company has regained its last markets, plus volumes are also strengthening. And even on the profitability front, the company has shown tremendous improvement in the profitability. And if you talk about the sectoral tailwinds, so that has also been sentimentally very positive. with the introduction of the MDR transaction charges. So I think both from the company as well as the industry per se, the things are improving and going towards the positive direction. And we believe that the overall things would start improving, especially post the clarity on the kind of charges, the amount of charges which the MDR would be having. So I think things are shaping up positively for both the industry as well as the company. However, it's very difficult to say whether the IPO prices would be breached in the near term because the clarity of the MDR charges would give the next leg of rally to the stock.
Okay, so that's with regards to Paytm. But moving on, Apollo Tires, let's pull up that one on the screens as well. And in fact, you have a UBS which has gone ahead and upgraded Apollo Tires to a buy from a neutral. They've hiked the target price to almost a 590 from a 580. Your stock is still at around 450 right now. What UBS is saying is that it's time to turn constructive on the company, and India operations are nearing an inflection point. In fact, the better road ahead is when you're looking at Europe, and the stock actually continues to trade at a valuation discount to peers as well. So that's another perk that investors have when you're talking about the tire sector as a whole. In terms of the market, they've underappreciated the earnings recovery, and the investors are overlooking the long-term recovery on this one. Q2 margins may face further pressure, but they're expecting a meaningful improvement in earnings thereafter. In fact, they're projecting the EBITDA to rise almost 21% on a year-on-year basis in FY28. Strong story there. Narendra, your view in terms of Apollo Tires, and if you have to actually peg it vis-a-vis peers, as per valuations in terms of the earnings momentum from here on, what would your tower pick be? Narendra, you're on mute.
Yeah. Right now, we have a hold rating on the Apollo tires, although the company has taken some price hikes. However, we see that those are partial and the company needs to still take some price hike. And right now, we expect gross margins may contract somewhat in next few 1 or 2 quarters. So I think we have a hold rating on this stock right now.
Okay, so that's with regards to where Apollo Tires goes. Now, Nifty IT as a sector is one of the key performing, in fact, the second top gaining sector in today's session. And there is some bit of a rub-off effect coming in on the back of NVIDIA commentary over the weekend as well, which actually caused your Kospi to crash. But from this entire cohort, one stock which is actually buzzing in trade is a Hexaware, because they've announced the launch of Zero-Vati to address enterprise AI needs. Jasmeet is here with key investor day takeaways and what's actually fueling the rally. Jasmeet, over to you.
Well, Hiral, thank you for that. Now, if you look at Hexaware as a company, the company has been launching a lot of AI tools lately. Now, given the investor day which we went across on last Friday, we did know that the company laid on the foundation for next few coming years of how they expect the overall AI to span out for the company. For the same regards, company launches Zero-Vati, which is a AI layer for the company, which will help them address the enterprise needs using the AI. Alongside that, they have released few new revenue streams like the green domain, which are basically AI-led revenue streams, and they expect that the overall TAM from that particular AI services would be nearly $320 billion, and that's huge. Now, if talking about the AI, company has also spoken about the AI deflation that they're seeing on the back of the cost going down of roughly 20 to 25% on the top line, and that they expect to span over the next 3 to 4 years. But they also expect that the overall AI rally and the AI-driven story will help them collaborate and take out those costs as well. Now, if you look at the other key details, company noted that roughly 50% of their revenue currently comes from either AI-led or AI-infused solution, and that's huge compared to the other IT pack. And lastly, they also spoke about the guidance for this current year, where they are marking a 6 to 7% of CC exit rate in this particular year, and they expect a CQGR quarterly growth rate of roughly 2.7% every quarter. Now, we look at the brokerages, even they have remained bullish on this counter. We have Nuvama as well, which has maintained its buy call with target price of 730.
Okay, interesting one there. Narendra, your view on Hexaware and IT as a sector?
See, overall, we do not have any active recommendation on the stock. But having said that, I think the greater share of AI for any company is net positive for that company going ahead. And the kind of strategy the company has unveiled and the optimistic target of $300 billion plus addressable market disrupting with their AI offering, which would be license free. So I think that's a very positive step for the company. And overall, in the IT sector, we are stock specific, and right now we see the sector to be in a consolidation phase, and
Okay.
maybe from H2 onwards, it should improve.
Okay, looking forward for H2 commentary as well. But thank you, Narendra, so much for joining in. Always a pleasure to speak to you. But ladies and gentlemen, completely out of time. With that, it's a wrap on this edition of Trending Stocks from the team that put the show together and myself. And we'll quickly slip into a short break from the NDTV Profit Suzlon studio and be right back. We have lunchtime trades lined up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit।
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth. Understanding the past and present
is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different.
Nifty started the day on a positive note but slips in red to trade near 24,200. Broader markets see mixed moves. Metals shine with gains. IT and autos lend support. PSBs and financials under pressure. Keynes Tech in focus on the back of packed with boss game for AI expansion and manufacturing capabilities. EMS stocks overall in focus after the government notified a new mobile phone manufacturing scheme with a budgetary outlay of 62,500 crore rupees. Rice stocks like LT Foods and KRBL gain in trade after basmati prices surged almost 10% in August, driven by weak monsoon-led supply concerns, higher logistics costs, and West Asia-related trade disruptions. Vishal Megamart surges amid company's board approving the reappointment of Gunender Kapoor as managing director. Positive brokerages also boost stock. IHCL in focus on the back of approval for amalgamation of Oriental Hotels. Hexaware Tech recovers in trade after IT firm unveils AI strategy. SmartWorks Co-working surges over expansion mandates worth nearly 235 crore rupees. Company founder Harsh Binani tells NDTV Profit that the company is targeting 20% EBITDA margins and 30% growth for FY 2027. Commerce and Industry Minister Piyush Goyal leads India's largest ever business delegation to Japan, with more than 200 industry representatives traveling to the country for a 4-day visit beginning from today. Hello and welcome. You're watching Lunchtime Trades, the show that gets you a roundup of everything that is happening in the world of commodity news and updates on the top buzzers at this hour, all while you grab your lunch. Now let's focus on some commodity market action. Let me introduce a special guest, N.S. Ramaswamy, who's the head of commodity desks and CRM at Ventura. He joins us now. We're going to ask him some important questions. Welcome, sir, to the show.
Hello.
Firstly, I'd like to ask you, gold is risen again. In fact, it's surging over the last 4 sessions quite extensively. Is this just another structural leg of the bull market, or is this a position-driven rally vulnerable to correction? What are the key triggers that you're looking at gold right now?
Yeah, the key change in gold is it's a combination of the falling bond yields that happened. And then the softer dollar and renewed geopolitical risk. That was the way it started the leg up initially. And that is likely to continue because even if there were a rise in the bond yields, the real yields are the ones which are going up. So there is the inflation part of the component, which is known as that implied break-even inflation rates. That is sustainably same for a 10-year bond as well as a 30-year bond. So it is a real rate that is chasing around. And it is not only the central government's treasury action. Besides that, you have the corporates AI demand on the bond paper. So that is where the yield has gone up. But that is very clear. But the trend is very clear because there is still a softer dollar. The geopolitical risk is continuing. Even after the FOMC meeting in July, if you were to see the Fed's meeting, there has been literally a pause in gold. It is a vacation part of it. Like there is no monetary trigger that is expected until September FOMC. So gold has actually reacted very smartly during this lean period, and it has started to bank on the geopolitical and treasury dollar catalysts rather than on the interest rate part of the FOMC, if you were to see. And the floor in gold, right from $4,000 per ounce, has very smartly shifted to close to $4,400 per ounce. So that indicates that the leg is very much there, the rally is very much in place, and also the treasury decisions of increasing the long end bond buybacks all give a trigger to the treasury part of the yield. So these are the fiscal outlooks also growing unease in the US. These are all the combination of all these factors. Gold has rallied. Before I conclude on this particular question, I would also like to add on to that the retail investment demand has smartly picked up on the global ETFs, and also the central bank buying on the Q2 of 2026 shows a lot of promises that going ahead in the next couple of quarters, gold is still likely to rally.
Thank you, sir. And on demand itself, I'd like to understand if these prices, especially in India, are going to hamper the growing demand for gold, or is gold still going to be viewed as an investable asset? How do you see that playing out in the near future?
India has to accept whatever is the international price, because it is not dominated individually in rupee terms. It is all a factor which happens that the international COMEX price levels or the international gold levels were to rise. Today we see that it has already crossed almost $4,700 per ounce. And in gold and rupee terms, we are seeing it's already crossed 1,63,000. So the impact on Indian rupee terms is is that there is an import duty inbuilt in that. That is one part of it. The USD INR currency, which is also small, but it's again range bound. Again, it's at close to 95.7 or so. So it is not an isolation that Indian gold in rupee terms has to be compared. We need to keep on watching what is the international impact, which I just now mentioned.
Moving from gold to crude, crude is still around the mid $80 mark. It's still providing a risk premium today. For India, what is the biggest factor now to look out for? Another oil spike creating a sharp inflation problem, or are we looking at a sharp fall signaling in deterioration of global growth? What for you is the key factor that we must look at?
Before that, we need to know what is the stand or what is really happening into the energy crisis right now. We need to just mention a bit about it, because here, when you talk of the geopolitics of US and Iran, we have seen that it's a no war and no peace situation. And US is coming out with the toughest sanctions on Iran and also economic consequences against other countries who are trying to have a type of a lifeline with Iran. So these are the pressure building which is happening from the US, and that has kept the pricing of crude on the higher side. And if you were to see repetitive scenarios like this is what Iran claims from the US side of it, it is sort of a solution needs to be found out. Even they are very keen for it. But parallelly, if you were to see, you are seeing France and Saudi, for example, are already discussing the alternate rail routes and expanded pipelines. And that's how the arrangements are being done. But as of now, shipping is in standstill in Strait of Hormuz. And we are seeing crude WTI closely around $85 and Brent at around $91. So we need to wait and watch how maybe even a mediator like Pakistan trying to, Army Chief Asif Munir is going to visit, probably to restore peace and security. And these are the pressure building. China, for example, is continuously on an 80% of the Iran shipment of oil for China. They are also urging for diplomacy. So we are collectively seeing all this will translate into probably tamed down energy prices. We don't see that crude will cross maybe $95 or $100, but it's likely to remain till we get a very concrete step about all these stand.
Understood. Also asking about a commodity of the future, right? Copper is something that's being looked at, especially because of its use in the AI supply chain. Just for our viewers to understand, where do you stand on copper? Do you see copper as the commodity of choice going forward over the next 3 to 5 years, as some people are suggesting?
Absolutely, absolutely. Copper is it's a very much an indicator. Like it's also equally getting supported by silver. The way silver would be, it's all collectively. If you were to combine the base metal part, which is the king of the base metal, is supposed to be copper, and also silver, which is on the bullion as well as the industrial metal. So it's basically the industrial metal and copper, which is likely to be very much supportive, whether you talk of EV and whether you talk of infrastructure and other construction and everything. We can expect copper to be on the higher side going forward, and also silver to that extent would like to piggyback on how the gold just now when we mentioned that it's going to rally. So as an industrial metal, copper looks very good, and it's likely to see some 3 to 4% rise from the present levels in the near to medium term.
That's a fantastic statement. Lastly, on the regulatory front, SEBI has been working on a proposal to increase FPI participation in commodity derivatives outside the agricultural sector broadly. From your perspective, what needs to be done to bring more global investors here and make the Indian commodities market a larger standard for price discovery and a better investment asset for foreign portfolio investors?
I think gold part of it or bullion part of it doesn't require any much of participation. It's basically the money flow in commodities rather than the commodities. It would be on the equity stock side, which the participation would happen. And if it were to be on the commodity specific, if you were to ask, I think the agri part of the commodities, we need to do a bit of arrangement to see that there is a free derivative trade that is happening. There is a participation that can extend even right from the domestic and international markets, and we need to see that there is a commonality in the or the price discovery has to be on a commonality. For example, even if you were to see on the gold, there are a lot of steps taken by NSE on the electronic gold receipts just to see that there is a one price across the various states of India. So that sort of a price difference and the discovery of the markets at various state level, production levels, the agri part of it. So there has to be a step that has to be coming up through the exchanges and through SEBI norms, and probably then the participation is expected.
Uniform pricing is something the SEBI chairman is looking at as well. But thank you, Mr. Ramaswamy, for your time on this show and for your insights across the commodities sector and the regulatory space around it. We really appreciate it. Moving on from the commodity space to core markets, we're looking at Nifty IT. The index is in focus as it is emerging as a key outperformer as the global AI trade shows signs of reversing. Now, Jasmeet is joining us with more details. Over to you, Jasmeet.
Well, Nimit, thank you for that. As rightly said, the overall reverse AI trade is something that's benefiting Nifty IT at this current point in time, and that's why even we see Nifty IT about 0.5% down and has been rallying from last couple of days. Well, the major reason why the Nifty IT is rallying is on the back of that price hike announced by Nvidia for its GPUs. There's a price hike of roughly 50%, which is showcasing that the AI is getting a little expensive when you compare with the IT service. And this has also happened in the past where the overall AI spending has gotten expensive and overall fund flow has taken a shift from the overall AI-led stocks to IT-led stocks. So we have also seen the Kospi dip nearly 3% in the trade, and the cross effect of it is seen on Nifty IT is up about 1%. Now we look at the other key trigger is the overall Q1. Now Q1 we did know that the overall performance of the IT was in line with the estimates, and companies also have been bullish in terms of the overall Q2 outlook going ahead. And lastly, the third trigger what we are noticing is the overall Hexaware commentary about this sector. Hexaware does note the overall 20 to 25% impact of the AI deflation, but the overall market coming in from the AI is much larger. The overall TAM that they are addressing is roughly $320 billion. So these are the few key positive triggers. Apart from that, we also have Fed rate cuts in focus. If there's a cut, then this will improve tech spending as well. So these are a few of the reasons why we are seeing the rally in the IT stocks today.
Thanks, Jasmeet. It's always good to see the positive triggers in the IT sector not been as common as they have been in the past, but thank you. Moving on from Jasmeet, we have Shivam now, who joins us with the stocks in focus, and it's going to be about something we've already discussed, gold and also sugar. Shivam, what is on your list?
Yes, so few of the stocks which should be on the radar is first of all the gold stocks for such as Muthoot Finance, Manappuram Finance and IIFL Finance. These stocks are buzzing on the back of the international gold prices rise, and also the stocks are extending its rally for the third straight sessions, and going forward we can see these stocks also rising more. In terms of the sugar stocks, we have AID, Perry, Awadh Sugar and Dalmia Bharat. These stocks are has resumed their rally and are currently led by the surge in these sugar prices. But apart from that, there are also few stocks such as Urban Company. We are seeing a positive legal development against the Kent RO, where the Kent RO has earlier called out the Urban Company's native purifier as a marketing gimmick and also as the unsafe product. So Kent RO has agreed to withdraw this allegedly disparaging ads, and that's why we are seeing a strong uptick in Urban Company's share price. Apart from that, we have Kaplan Point Labs, which is the stock is down nearly 2.5% as the US FDA has inspected its Kaplan Sterling facility, with which they have found out 10 Form 483 observations, and that's why we are seeing the stock seeing a downtick. Apart from that, we also have Vishal Megamart. The stock is up over 9% as the company has reappointed Gunendra Kapoor as the founder and MD and CEO for next 5 years too. Also, the Morgan Stanley has maintained an overweight rating with a target price of around 146 and has stated that this reappointment of MD and CEO is a positive development for the company.
Thank you so much, Shivam. We'll take that. Moving on from that, we're back with Jasmeet, who's going to be telling us about TVS Supply Chain Solutions and how it's stepping up its Japan Connect. Remember, this is in the backdrop of Piyush Goyal currently on a 4-day trip to Tokyo. Now, what TVS Supply Chain Solutions is doing, it's forging a partnership with Japan's Sankyu. Now, Jasmeet, tell us more about what this is about.
Well, Amit, thank you for that. As rightly said, the overall rally in this counter is on the back of the partnership and the MOU that the company has signed with the Sankyu. Well, Sankyu is a Japan headquartered firm which operates under logistics and the engineering sector. While under this MOU which the company has signed with the Sankyu, Sankyu will acquire 0.5% stake in the TVS supply chain, and the collaboration will also function across the manufacturing and the logistics segment. With this collaboration, TVS supply chain plans to target nearly 1,400 plus companies which operate in India, Japanese companies which operate in India. With that, they also plan to expand the partnership across warehousing, manufacturing and various other segments. If you look at the other key details, the company has also planned that this collaboration could spread from India and also go across to other Asian countries, and also would be focused on the Middle East and Africa. So there's a few key triggers, and that's the reason the stock is buzzing, and currently at day highest level about 14%.
We'll take that. Thank you, Jasmeet, for that. Moving from that to airports and privatization of airports, looks like we're going to have more news on that shortly, as the Public-Private Partnership Appraisal Committee has cleared the privatization of 11 AAI airports through 5 public-private partnership bundles, pairing large and smaller airports. Now, Danish is joining us with this. Danish, over to you.
Well, that is correct. The PPAC, which stands for the Public-Private Partnership Appraisal Committee, which comes under the Ministry of Finance, they have given an in-principle approval for the privatization of 11 AI airports. And these are the airports which are owned by the government right now. So the plan is that they will be bundled. So basically, this bundling means that whenever a bidder applies for a set of airports, then they will be getting a bundle of a larger airport along with a smaller airport. And this is being done by the government so that the bidders don't focus only on the bigger airports, because the government's long-term plan is to have air connectivity in the deep parts of the country, and hence that is why the larger airports are being bundled with the smaller airports. And there are certain conditions that the PPAC has recommended, which also include that for any bidder there will be a particular cap. So they will not be able to bid for all those particular bundles. There will be a particular terms and condition regarding this, which will be coming out in a few days. But largely the news here is that these bidders can only bid for certain number of airports, certain number of bundles, and not for all of them. Secondly, whenever the bidder gets the airport, it will be given for a 50-year concession period. And if I just list those number of airports, so Amritsar Airport, Varanasi, Bhubaneswar, Raipur and Tiruchirappalli airports will be the larger or the anchor airports, and these will be paired with the smaller airports like Kangra in Himachal, Gaya in Bihar, Kushinagar, Hubli, Aurangabad and Tirupati, so that the bidders can get a larger airport along with a smaller airport. Although the in-principle approval has been given by PPPAC, but now the Minister of Civil Aviation will be coming out with certain terms and conditions. They will be testing the waters and then they'll come out with the proper details.
Thank you so much, Danish. And a very interesting point you made about bundling larger and smaller airports together, a very inclusive step that might actually bring a lot of connectivity to a lot of places that require it. Now we're going to go back to Jasmeet here. We spoke about Hexaware Tech earlier in the show. Now Hexaware Tech is in focus as it has announced the launch of Zerovity to address enterprise AI needs while planning more investments on AI expansion. Now Jasmeet, we're going to bring you back here with key Investor Day takeaways. You already spoke a little bit about it, but tell us what the brokerages are penciling in.
Well, Nimit, hello again and thank you for that. As rightly said, the overall investor day of Hexaware is something that's pulling out the stock in current trade about 4% and also causing a tailwind for the entire IT pack. So here are the key takeaways what we are gathering from the investor day. The first one is the launch of Zerovity. While the Zerovity is an AI layer basically to address the AI needs of the enterprise launched by the company, and the entire point of the Zerovity is to reduce friction between AI adoption done by the IT companies, which becomes a key positive trigger to see how that pans out going ahead. While the second one, the company has launched various green domains, which are basically AI-led revenue streams to address the AI market, and they're expecting the overall total addressable market to be around $320 billion, which becomes quite huge. Now, talking about the AI deflation as well, the company states roughly 20 to 25% of its top line to get impacted on the back of that AI deflation, which will pan out in the next 3 to 4 years. While they also spoke that in the current year, 13 of the clients had a consolidation, and that's why we are seeing such slacky performance by the stock over the company performance. Further, the company also restates that they have plans to at least reach the 6 to 7% exit margin by this current year.
Okay, we'll take that, and there must be some sort of a game we can play with the number of times AI was mentioned there, but I guess that's the world we live in today. Anyway, we'll move on from that to one of our biggest stories today has been Commerce and Industry Minister Piyush Goyal's, who is leading India's largest ever business delegation to Japan with more than 200 industry representatives traveling to the country for a 4-day visit, like we said today. Now, our reporter Rishabh is on ground from Tokyo, and Rishabh is going to tell us what's on the agenda for these 4 days and what the next 4 days in Tokyo for the Indian contingent is going to look like. Rishabh.
Hello and konnichiwa from Tokyo here in Japan. We're accompanying the Commerce Minister Piyush Goyal on his visit here to boost trade ties between India and Japan. It's a packed day one, but the focus of the Commerce Minister will be to sort of take forward a few of the key issues that were brought up when the Prime Ministers met very recently, Prime Minister Modi and Prime Minister Takaichi. Number one is going to be, of course, the private investment target that both the countries have said. Japan is set to invest roughly about 10 trillion yen, and that equates to about $62 billion over the next decade or so. And that will be very interesting to see the sort of sectors that investment spans. What we're also looking at is also a review of the free trade agreement between India and Japan. Both countries had signed a CEPA, a Comprehensive Economic Partnership Agreement, way back in 2011. But this sort of trade balance is more lopsided in favor of the Japanese currently. So that trade needs definitely some sort of a rebalancing, and that's what we're looking at when it comes to day one here of the Commerce Minister's Japan visit. What we're also looking at is a lot of MOUs being signed in the fields of semiconductors, in the fields of artificial intelligence, technology, of course. Bullet train is one such technology that we're also looking at already. So a lot more to happen when it comes to these 2-3 issues on day one of the Commerce Minister.
Arigato, Rishabh-san. Thank you for that update from Tokyo. And just wanted to make sure that while the balance may change in the Japan-India FTA based on negotiations, but you maintain your balance, because I see those buses going behind you are really, really fast. Anyway, that's all we have for you on the show now. Do stay tuned for NDTV Profits next.
केसरिया से मन जोगी हुआ रे
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth. Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anveksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush.
Good afternoon, you are watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. But before that, let's have a look at the market. If you look at the Nifty, it's below its crucial level of 24,200. In fact, in the morning we were up around 25 odd points, and right now we have slipped around 70 odd points in trade. So overall 100 points downtake is what we have seen in the market from the day's highest point. When it comes to the Nifty Bank Index, that's down nearly 400 odd points in trade, struggling to hold around the 57,300 levels. On the sectoral side, we have Nifty Metal Index, which is up nearly 1%, followed by Nifty IT and Nifty Real Estate, up anywhere between 0.2 to 0.5%. But on the losing side, we have Nifty PSU Bank Index, Nifty Financial, Nifty FMCG, Nifty PSUs, which are down anywhere between 0.5 to 1.2%. Nifty FMCG is so far the worst sectoral performer in the month of August. It's down close to around 4% in trade. When you look at the small cap names, LS International, that's down 10% on the back of the visa news that has come in. Then there is Kalyani Cast, Synthesis Tech, Credent Connect, Desi Farms, Sika Logistics, which have hit a lower circuit of 5% in trade today. On the flip side, we have Lalita Jewelry, recently listed company, up around 30 odd percent, Advait Jewels up around 20%, Marathon Next Gen, Virat Industries, All Cargo Terminals. All of these counters have locked in an upper circuit of 20 odd percent. But today we'll be speaking with the management of Sayaji Hotels. Sumera Dhanani, the regional director, is joining us to give us some details about the recent FSSAI inspection. So firstly, to start off with, can you exactly explain, ma'am, what has happened, what were the inspection findings that have come out, and what is the current status?
So, good afternoon, Sumit. Nice to talk to you and the team. Firstly, these inspections and regulatory compliances are important for maintaining the quality and the services that we provide to the guests. So, there is no second thoughts about it. These rigorous compliances that we do, it helps keep the guests' confidence stronger and keeps the companies that are into it. They tend to perform better when these compliances are working. For what exactly happened was an inspection was conducted at the Sayaji Hotels on August 20th, and partial suspension of the FSSAI license was done on 21st August. We have got a stay order from the court on August 22nd. So this was the flow of events, what has happened in the past 3 days. The company has made relevant disclosures to the stock market about the same. This matter is now subject to an appropriate legal and regulatory process, and we are cooperating fully with the concerned departments. We take every observation very seriously and will address any requirements through the correct process. It would be inappropriate for me to comment on any individual observation, and to speculate an exact timeline, resolution timeline won't be correct right now. But this this is the whole flow of it.
Ma'am, there's no speculation. I'm just asking you, what were the findings that have come out of...
As I told you, this was the flow of event on the 20th, 21st and 22nd. And there were few things that were found regarding the meat, the chicken. That was, they didn't have the correct expiry date, but it had a production date. Few things were there that were dealt with our department, with the team and the department, but these were the basic findings that were there. And right now we've approached the court for the stay, and we've got the stay from the court for the same, from the MP court. And the kitchens are operational already from today.
Okay. Please correct me if I'm wrong here, but I believe the stay was just for the bar license, or was it for the entire kitchen operations as well?
No, it was for the kitchen operations, not the bar. It was for the kitchen operations. And that because of this partial suspension of the FSSAI license, the kitchen was shut for 2 days, Saturday and Sunday. As we've got the stay from the court, the collector's office and all have, what do we say, like they have dealt with it, and they have they have allowed to open the kitchen, and now we're operational already for the same. So it was not for the bar, it was for the kitchen.
Then what was the announcement related to the bar license as well, which was revoked, I believe, by the excise department? Some announcement was on that front as well?
Nothing. It was basically for the kitchen. It was not for the bar.
Okay. No, because I can see one of your announcements that came in on that day as well, which states that, I'm just reading through that.
Please.
Yeah, it says that the Central Office of Collector Excise District, whereby the hotel bar FL3 license was concerned, has been suspended till the revocation of FSSAI suspension. So this bar license was also suspended, but that has also been revoked?
Yes, yes. So I will not be able to comment on the bar license because up to my knowledge, it was the kitchen that was, the FSSI license related to the kitchen was suspended, partially suspended. But but everything is revoked right now. That's what it is.
And I believe not much of a financial impact that could have come in.
Luckily, we had small banqueting that was there, but it was a very we had, because of a relationship with our guests, and the current scenario was we were stuck on the weekend where the offices were also not open fully. So it was a small impact, but not much.
Right. Just a couple of questions on the overall function. With the 1700 plus future room already signed under management contract, how much revenue contribution are you expecting from this pipeline, say over the next 2 to 3 years?
So right now, I could give you a brief idea on the number of rooms and the hotels that we are opening up, and they are all on management contracts. What we aim at opening around 100 hotels in the next 3 years, and each hotel has an average of 60 to 100 rooms. That's our target. And with that, our approx revenue should at least reach up to around 80 to 100 CR.
And also, as properties are moving from, I believe, lease to management contract, how should one look at this? Any impact on the EBITDA front? What, if anything, you could share with us on that front?
So basically, what CIG is doing, I will talk about CIG only. CIG is having we're having a very customized growth plan. We have a ratio of 4:1 when it comes to management and rental properties, 4 management and 1 rental. So we're having a very balanced approach towards the growth of the company. We're not like just scaling for the heck of it, but we're having a very our fundamentals are very correct. So it's not going to impact that much on the revenue. And of course, when you take up rental, there's a lot of investment also that is expected, right? So it's a balance of both for CIG.
Just quickly, what could be any growth targets if you could share with us on the revenue and the EBITDA front?
So as I said about the 100 hotels that we wish to close in the next 3 years, and we have a very, very strong pipeline at the moment. So what we wish to do is we wish to I cannot give you the number, like an exact percentage EBITDA, to be very honest, because we have a mix of all growth plans. We have a mix of different brands. We have a mix of CIG, F Hotel, N-Rise. We have TFC also. So it's the EBITDA percentage varies from brand to brand. So that's that. I would not be able to give you the exact figure right now, but we have a very strong growth plan. At least opening our luxury brands, like around 4 in a year. Our F Hotel and rises to pipeline index, 20 in a year. As that kind of helps us grow faster.
No issues, ma'am. Thank you for joining us and giving us the way forward for CIG Hotels. Well, let's also welcome in our fundamental guest, Tapan Doshi, research analyst, CATapan.in. Tapan, given the entire hospitality space, CIG Hotels valuations are on the cheaper side. Do you see any rooms for expansion here, any re-rating possibility?
So of course, we have to look at now the notice which they have received, what you already spoken with the manager, and what is the outcome of that. But overall, I think their expansion is quite aggressive. I already told there 100 hotels they are going to open in next 3 years. And if I see hospitality demand is quite supportive for them, banquet, and if you say F&B strength is there for this company. Of course, asset light expansion is there that I can see, and new hotel additions are coming. Mainly, I think they are actually focusing tier 2 and tier 3 companies. But at the cities, sorry. But if I see small cap liquidity is there, so we have to see there will be a lot of volatility and EBITDA margin also, and sales. If you see the revenue sales growth or profit growth is not so great. So what I'll wait for the conclusion, what this notice is coming about, and also I'll wait for the expansion plan also little bit more. Currently, it's a hold from my side, but don't enter at this level.
Well, shifting focus to Dolphin Offshore, that stock has been on a tear. It's up nearly 70% in the last 1 month. Let's welcome in Rohan Shah, the Director of Finance of Dolphin Offshore. Sir, share prices are up nearly 70% in the last 1 month. Is it largely because of the increasing charter rates And if yes, then how will that benefit the company?
See, overall industry is under a great demand now. So, with of course increasing demand in offshore oil and gas support sector, our services demand would increase with a great pace, and probably that is the reason why this performance is going on.
You could share with us something on the charter rates. How have they been moving up, and how are any new rigs that are coming that are coming for renewal for Dolphin Offshore?
So in Dolphin Offshore, currently we are operating with a DP2 barge, which falls under the support services sector, which will be supporting the offshore drilling platforms. So with an increase in offshore and deep sea drilling, there will be huge demand coming up for support services as well, like offshore support vessels, platform supply vessels, barges, tugs, and all. So with that increase in demand, charter rates for these kind of vessels will also improve.
If you could just give us some idea on what are the current charter rates, how much are you expecting that to improve?
So currently our barge is operating at a charter day rate of $47,000 a day. And this we are, though this is on a long-term charter, but with an addition to additional assets, these rates can improve further as high as $55,000 to $60,000 as well.
Okay, and sorry if I missed this part, but is any of your new, any of your existing rig coming up for renewal that could see implementation of this higher rates of 47,000 or say 50,000?
So in Dolphin, we do not have offshore drilling rigs. We have this support barges and vessels. So those will come up in renewal probably in year after, and there we'll be expecting definitely a charter rate hike.
Okay, great. And I believe, see, I remember one thing when it comes to that Prabha asset that you had, that was deployed, I believe, at a rate of around $30,000 per day. And that time you were expecting a revenue of 120 to 150 odd crore with margins of 60 to 70%. Please correct me if I'm wrong on that front. So if this goes up to 50,000, then what could be the incremental revenue that one could see, or the margins could also that be higher?
So with an incremental rate, definitely revenue and margins will improve. So current year we are expecting some good amount of increase in top line as well as margins from the same barge which we are operating now more than a year.
And if you could just give us some idea about the capital expenditure plan. I believe earlier you have talked about around 400 to 500 crore of fleet expansion. But I believe you have also mentioned that that will only happen when there are some firm contracts. So what is the timeline here? If you could give us some details on that front.
Right. So with an approval of the Samudra Manthan scheme, it creates a very transformative and multi-decade industrial tailwind for oil and gas services sector. And with this, there will be a huge demand coming up in Indian waters for this all offshore services. So we are expecting good amount of push in deep water drilling, and with that incremental drilling, these support services will also come up in a great demand. And with that, we would be adding various vessels in our fleet with higher charter rates.
Any timelines on this capex deployment of 400 to 500 crore?
So
like
we are expecting
3 years,
this
4 years?
in next 1 or 2 years. We would be adding fleet vessels in our fleet one by one in next 2 years or so.
Okay. And what kind of returns one investor should expect from this capital expenditure?
So these are quite a high EBITDA margin business. So we are operating on EBITDA higher than 60%. So there is a good amount of, I would say, payback we can expect between 2.5 to 3 years kind of contract.
And lastly, sir, just wanted to check with you, how much of this opportunity is largely dependent on ONGC?
So with this increase in deep water drilling in Indian waters, obviously ONGC would be the major player who would be driving this show. But in addition to these large PSUs, private players will also increase their drilling programs, and they'll scale up their offshore drilling. With that, overall demand in industry will increase.
Right, sir. Thank you, sir. Thank you for joining us and giving us the way forward for Dolphin Offshore. Tapan, you heard the management. They're quite optimistic. They're expecting they are now saying that the charter rates are at around 45,000. They're expecting this to increase to 50,000. I believe a month back or so, the rates were at a quarter back or so, the rates were around $30,000 per day. So significant up move. Do you see more room left for the share price to also move up, because it's already up 70%?
Yes, Amit. No, the stock has already gone up a lot, and if you see the valuation, of course, for this sector, it's on a higher side. But yes, offshore capex is supportive. Again, see, they have an order from ONGC in private companies. Again, vessel utilization is rising a lot. Higher margin products they are getting. Again, also, if you see the operating leverage, we can see in many of the projects. See, the only thing is the crude price sensitivity will be there. They have few bigger clients. That is when a client concentration comes into picture, and order execution is lumpy. But if you see the last quarterly result, no, I think cash flow is improved a lot. Even EBITDA margin is good comparatively, and order pipeline looks healthy. So my take is, no, if someone is holding the stock, please hold it with, of course, 15% stop loss. But new entry, not at this level, but yes, hold this stock. I think still the management positive. Let us ride this wave currently.
Okay. Well, let's slip into a short break and we'll be back with more small cap stocks on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth. Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been
Well, talking about the small cap stocks, Serunba Industries is one counter that remains in focus. The company has reported its highest ever EBITDA in at least the last 3 years. Let's get in Varsha to understand which are the factors that have aided the company in the first quarter of FY27.
Well, before talking about the Q1 results, because of course the stock is buzzing on the back of it, but let's see what this company does. So this company is into agrochemicals, manufactures and sells herbicides, fungicides and insecticides, and also have a large client portfolio. UPL, Rallis, Dhanuka are some of their key clients. They do have Sumitomo Crystal Crop Protection also in their client list. Now talking about the Q1 numbers, on the face of it, if you see, the numbers are not that great year on year, but quarter on quarter, if you see, the numbers are superb. So revenue, if you see, is up 22% quarter on quarter, but it's down 15% year on year. Domestic business, if you see, contributed 80% to the overall revenue versus 75% last year. And overall over here, margins have seen a rally despite weakness in sales. Now why is that case? Because raw material cost, if you see, is down 27%. There was an inventory gain of 70 crore versus 55 crore last year, so that's up almost 29%. And higher inventory gains supported margins for the company. Now if you see, domestic revenue down 9%, export revenue down 33%. But overall, if you see, year on year, the number doesn't look good, but investors are betting on quarter numbers considering the geopolitical situation that we are in. Quarter on quarter, when it comes to chemicals especially, is gauging the quarter on quarter performance is important, and hence we are seeing in the last 3 quarters the company was in losses. So this is the first time after 3 quarters company is showing a profitable business. So hence investors are excited and betting on the future growth as well.
Tapan, any view on this counter? The numbers came out over the weekend. Did you look at it?
Yes, if you see the numbers, of course, after 3 quarters it has become profitable. But this is a quarter which is good for the most of this, for this company at least. But if you see, the export demand is quite uncertain. Again, in July there was a management changes happened. Working capital is putting pressure on the margin. So pricing pressure is there, and of course, we don't know how the visibility will be there for the earnings for coming quarters. After a long time, it has posted the profit, but I want to see 1 or 2 quarter more whether they are able to post the profit or not. So for my side, it will be avoided.
The next stock that we'll be talking about is Advait Jewels. The stock had hit an upper circuit of 20% in trade volumes. The stock was up for the second consecutive session. And if you look at the volumes were its highest, and the stock was trading at its highest level since July 2026. Let's get in Shivam with more details.
Yes, Advait Jewels, the stock has been seeing a significant up move, and this up move is mainly related to the surge in the gold prices, as the company is mainly involved in manufacturing the gold jewelries. Gold is also one of the important material that they use in the manufacturing. Also, we have seen the surge in gold prices in international market, and the prices has been rising since past 4 sessions, and there has been a uptick of around 6 to 7% in gold. So that could be one of the reasons the stock is seeing this buzz. And also there has been higher demand for more design-led jewelry. As the gold prices are increasing, many of the customers of the companies they do want to purchase gold in the similar price range. So they are lowering the gold weight and increasing the aesthetic part of the jewelries, and that's why the higher demand is offsetting the higher gold prices. If we come to the Q1 results, the company has posted a strong set of results where the revenue has been up by around 37% and mainly driven by the continued demand in gold jewelries. Also, the operational efficiency of the company has improved, which was due to lower cost management and in terms of quarter-on-quarter basis. Also, if we talk about the premium jewelry business, which includes its bridal jewelry, that has expanded strongly, and the current revenue mix for the company stands at 70 to 80% from the B2B business and around 20 to 22% from the B2C business. Also, the company is focusing to expand in the men's and pred jewelry, which will be targeting the Gen Z and millennial target segments going forward. In terms of management commentary, the company is focusing on expanding the presence in premium handcrafted jewelry segment and also targeting to grow from the new collection across its product portfolio such as Kundan, Polki and other contemporary designs. In terms of international expansion, the company is targeting geographies such as US, UK and Middle East, and on the guidance front, the company has targeted that the Jaipur flagship store that will become operational in November 2026, and estimated investment in that store is around 24 to 25 crores, and going forward the company aims to have a revenue mix of around 50 to 60% from B2B business and other 50 to 60% from business to B2C business.
Right. Tapan, any view on Advait Jewels?
Of course, the stock has gone up a lot, Somit, and for this company, if you see the jewelry demand is supportive. Of course, the gold price volatility is helping this company. Margin stability is there, and brand is slowly and gradually scaling from a lower level, and balance sheet is improving. If you see that, because it's a small listed history, I can say the valuation is not so premium. So I think one can hold this stock. Hopefully, things will be better. RO is good. So my take is that hold this stock currently at this level.
Right. Thank you, Tapan. Thank you for joining us and giving us your views on the stock that we discussed in the show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we?
Hello and welcome to NDTV Profit. I am Sharad Dubey and you are watching Ask Profit Afternoon Edition. This is a show where you get all your stock related queries answered from both our fundamental and the technical guests. But before we move on, let's take a quick a view of the markets, how things have been going across. For both Nifty and Nifty Bank, around an hour or 1.5 hours ago, there was a fall in the markets, and now also we are currently trading near the day's lows as well. A slight attempt of recovery is trying to be made by Nifty Bank, but nevertheless, it is not happening. Let's just also get in the Nifty constituents to see what's happening there in the stock-specific moves. And largely sector-wise, we see IT names are seeing buying, but the heavyweights, Reliance, SBI, and the banking names are pulling it towards the other side. That's where the downfall is there of 93 points. Also looking at the sectors, let's look at how things are moving. And largely we see sector-specific moves are in a range. It is there, but of course the metal pack is doing well. What's not doing well is of course the consumption names, and of course the banking names as well. Advanced decline ratio, also looking at it, has come down a bit as well, but nevertheless initially it was definitely on the higher side. And this Nifty small cap index, let's have a view on that as well, because that's why we are seeing some kind of a sell-off happening, but not that bad as compared to how Nifty is. Of course commodity spike related stocks such as sugar, rice, and even dairy stocks are doing well, and this theme in the small caps we had already identified last week itself at NDTV Profit. But moving on our conversation, we are having our guest Vishnu Kant Upadhyay, AVP Research and Advisory at Master Capital Services, and Shashank Uduppa. He's the founder at YU Capital. Good afternoon, gentlemen. It's always a pleasure to have you both with us at NDTV Profit. And like to start with the queries from our guest, Lalita from Bangalore. Interestingly, she has bought BL's 230 shares at 420 rupees. She's sitting on a loss here, but should she average or wait for a buy? I want to get Shashank, and this the buying price of BL is at around 420. Currently, it's at a loss for Lalita from Bangalore.
I think BL is an absolute hold for a longer term period. Even if you look at it from a 1 year to a 2 year standpoint, I think it's definitely a hold. We are seeing a lot of defense orders slowly coming into the ecosystem. We're seeing a lot of orders coming into the mid cap and small cap, but I would definitely say BL being a large cap company, it is a hold from my end.
All right, there's an interesting query from Prakash Rao from Hyderabad. He wants Jindal Worldwide. Let's get that in the screen as well. Will this be good for long term or not? Vishnukant, your views on this?
Well, very good afternoon, and thank you for having me on the show. In fact, the stock is, just a consolidating in a very thin horizontal band of 36.50 on the higher side and 35 on the lower side. And it is also briefly below, it's a short-term moving average, that's a 21. But yes, overall structure of the stock is quite bullish as the prices are trading off the 100 and 200 exponential moving average. So on the downside, with the validation of 34 kind of levels, prices has a potential to gain some buying momentum from the present juncture, and that should be containing around 40 and 40.50 in the very short term. So maintain stop loss below 34.70, and on the higher side 40.50 can be on guard.
Right. The interesting queries coming from Ram Iyer for tourism finance. Good time to enter. That's the key level to watch out for. Shashank, any views on tourism finance?
I would say be a little careful on entering at these levels, because if you look at tourism finance, they have gone up very aggressively in the last 1 year, almost 100% gain in just 1 year, and it has not given any kind of consolidation. While the fundamental stuff is intact, I would say a new entry or a fresh entry, don't have a very big size when you enter in this stock.
All right, have a lesser size in this counter. The stock itself has done a lot well over the last 12 months, so a lot of upside might be captured in as well. We have Azamgarh. Bablu Thakur from Azamgarh, he has bought Bharat Bijli at 2569. That's the purchase price, 269 shares. Should he hold or sell? Vishnukant, I want to get you on this. Any view here?
So basically, I'm not, very much optimistic on this counter. In today's trading session, prices briefly penetrated is a short-term moving average, that's a 21. But again, we are witnessing some selling pressure from the higher side. So as long as prices are trading below 2580 sort of levels, there will be a selling from the higher levels. So I would say stay away from this counter.
All right, we have Sai Kiran from Hyderabad. He has a query on RVNL. Remember, railway stocks were in focus once. He has 250 shares at 368. rupees buying price. He wants to know the fundamental view for 1 year basis. Shashank, your views on RVNL?
So I think his buying price is very high. Number one, fundamentally, we are seeing a small revival coming in the railway sector, and even the government of India is talking about the railway sector again. But by the time he recovers it back to his buying price, it might take more than a year or so. Because right now the government is heavily focused on defense and not on railway. This will automatically get sadly converted into a long-term position. I would not add more. I would not even average more at this point. I would just wait on this position.
Just wait and watch. A very nice point stated by Shashank. The government's focus is much more on defense than railways. This is something to actually ponder upon. But moving on, we have Garima from Bengaluru speaking with us. Hi, good afternoon, Garima. What are your stocks and what's the request?
Yeah, hi, good afternoon. I have 100 stocks of Brigade Enterprise at 610 and I've been holding them since 1 year. So should I just quit this stock and move into some other stock, or should I hold?
Okay, is there going to be a chance for a stock churn, or should someone be holding? Brigade Enterprises, Garima has entered at 610. Shashank, a slight profit Garima is sitting on. Good time to accumulate more for Brigade Enterprises, or do you think there is some other good real estate stock to play for?
Garima, I think Brigade Group is doing really well. They have started acquiring a lot of land in different pockets in Bengaluru as well, and a lot of square feet is coming online. Even the valuations that they're trading with respect to the per million square feet is absolutely all right. Since you're already in profit, I would recommend just holding on to it. But definitely keep a stop loss when you're trading, even in these companies, because real estate can turn at any given point of time. And as of today, I think real estate market is at slightly higher valuations. So I would just keep a little bit of caution, but keep your buffer and maybe keep a 10-15% stop loss on it. And you can hold. You don't have to keep switching on this stock.
Hold for Brigade Enterprises. Also now from the messages, we have Dr. Lavanya from Eluru, and she is holding roughly 200 shares of Data Patterns. The price is at 4,900 rupees per share. If you can just get the chart. What's the target for this stock? Hold or exit coming in? It's a slight loss she's actually in. But I just wanted to get Vishnu on this. What is the key takeaway here?
See, basically, entire defense team is doing immensely well, and recently we have seen the breakout from the symmetrical triangle pattern. The good thing is that the stock is trading above the cluster of all key moving averages, and key oscillators like MACD and RSI both are printing in positive. So I would say just stay invested in the counter. On the higher side, I'm expecting 5,200, 5,300 sort of levels can't be ruled out based on the target projection which is coming out after giving breakout from this symmetrical triangle pattern.
All right. Now moving on to our next caller, we have Mohan from Mysuru, and his ask, of course, is hi Mohan. Could you just ask about the company as well as what are the key levels to watch out for?
Hello.
Yeah. Hi Mohan. What's your query?
I just want to know, can I buy Thangamal jewelry at this rate for a long-term perspective?
Long-term perspective, Thangamal jewelry. It's an interesting B2B play as well. They also have B2C exposure. Shashank, I want to get you on this Thangamal jewelry. This entire theme has done well over the last 2 to 3 odd quarters. Do you think current market prices for long-term, this would be a good bet?
This would be a good bet for a 5-year kind of a horizon. Right now, the valuation also has suppressed. The stock has fallen in the last 3 months. And if you look at the gold prices, they are doing a reversal and they're back up to $4,700. So I think, yes, you can go for a slightly longer term horizon. Don't play swing trading or something in this. I would say at least keep a 3-year buffer horizon for you to see some kind of positivity in this stock.
Vishnu, a query is coming from Vineet from Nagpur. 2 stocks he has mentioned, CMS Infosystems and Dabur. Interestingly, both of these stocks have taken a beating for the medium term basis on the technicals to look at. If you could give us a weekly chart or a monthly chart for either of them, CMS Infosystem or Dabur, which would be a right time to enter either of these stocks?
See, basically, both stocks are in a downtrend. CMS Infosystem is continuously forming a lower highs and lower lows kind of pattern. So strictly, I would say stay away from the counter. There is no any kind of opportunity to enter in the CMS Infosystem currently. While talking about a Dabur, In fact, technically, there is also a pressure in a Dabur. Entire FMCG basket is not good, doing good physically. There could be other stock from the FMCG counter to get invested in, but Dabur is currently not looking positive. In fact, on the lower side, I'm expecting 360, 370 sort of levels can't be ruled out. So I would say if you find any corrective dip close to that 360, 370, then one can go for long in Dabur, but as of now, stock is not looking good.
Okay, there's of course a query coming in, especially for Shashank. There's an interesting Sampath Kumar from Tamil Nadu has bought BSE at 1255 rupees per share. Of course, that means they are sitting on handsome gains. Sell or average for the long term? Shashank, BSE.
Just average for the long term. Do not worry about it, because if you believe that the market is going to survive for another 10-15 years, then NSE, BSE, all of these exchanges will be there. I think this is not a company to worry about or stress about. It has given a very big rally in the last few years. This would be a buy on dip strategy for me for a very long period of time.
All right, buy on dips coming in for BSE if you're a long-term investor. But Vishnu, an interesting technical call coming in, and the request is for Ajanta Pharma. The buying price is at 3,190 rupees per share. Should there be a sell or a hold in this? Buying price is, of course, at 3,192. The slight profit is definitely there. Should there be a sell or a hold here?
Yeah, definitely. I would say hold. The stock is in extremely uptrend and trading of the all key moving averages. Recently, we have seen some sort of, corrective fall, or I would say profit booking from the higher levels, and it's a very inevitable when the stock is in a perfect uptrend. So I would say it's a healthy corrective fall. So that's a completely hold kind of counter. But yes, as he's sitting with a smart gains, so I would recommend to maintain a trailing stop loss below 3480. So maintain trailing stop loss below 3480, while on the higher side, I'm expecting 4,041 kind of levels can be seen in Ajanta Pharma.
Right, and Nitin from Hyderabad also has a query, and this is directed to Shashank. Tata Power, his buying price was 90 and 200 shares. Should he book some quantity as a profit or hold for long term? He is sitting in a very handsome profit, it seems like. Good time to book some profits or hold for long term? Shashank.
Nitin, I think you have done a very good job of getting a very low average price here. See, long term, if you look at Tata Power and if you look at JSW Energy, they are on the right path. So there is no problems if you want to hold it long term. But if you ask me, I would definitely take some profits out and maybe reinvest those profits in the other part of the energy value chain, something like cables, because cables and the wire segment right now is booming. And at least for the next 2 to 3 years, there will be a proxy play for the energy space. So I would take some peel out and redirect them into the energy space to keep the same sector exposure.
Right. Vishnu, they have a query from Ramesh from Chennai. Now, he wants to advise on both these counters, Precol as well as Varun Beverages. Should he hold or sell? And if you could give us short-term target prices for that, both these counters, Precol as well as Varun Beverages.
Well, so Precol is also looking good. Stock is, forming a sort of flag kind of pattern after witnessing a very good vertical move. I believe on the higher side, stock is now all set to extend this gain towards 840, 850 kind of level. So maintain the stock for that levels, while on the lower side, maintain stop loss below 766. While talking about next stock, that's a VBL, Varun Beverage Limited. So it's from the FMCG basket. Although stock is not doing good for last many days, we have seen a very what I would say, I mean, that there's a very dramatic fall in the counter. There have been many stock like Marico and Nestle that have been doing good in FMCG basket, but I believe the falling streak should remain intact with a potential downfall towards 410. So if someone has a time horizon of very short term, like a 1 month or a 2 months, so I would say stay away. But for a 6 month and over a 6 month, one can accumulate the counter from the lower levels.
Right. Moving on to our caller now, we have Marco from Chennai. Good afternoon, Marco. What is your stock and request?
Yeah, good afternoon. I am planning to accumulate Bank of India. At the starting, I accumulated 1,000 shares at 145. I want to accumulate more like 4,000 shares. I want to know the average price I should aim for and the exit I should aim for.
Right. So the buying price is at 145 and not so much loss, largely flattish. 141 Bank of India is trading at. Sashank, I want to get you on this. Good time to average a Bank of India?
Yeah, a slight average is okay, mainly because it is still undervalued compared to its other banking peers. I think it is trading at 0.7 times price to book, whereas most of the PSU companies have gone above 1 time price to book. But again, it's not one of the best PSUs out there. There are better PSUs. So a small average would be advisable, but not a very big position size.
Small size would be fine. Up next, we have Shankar from Bengaluru, and his query is it a good time to buy Belrise Industries after the Q1 results at the current market price, or should he wait? He's planning to buy 500 shares. Vishnu, I want to get you on this Belrise Industries. For the medium term basis, how does this look on the charts, Belrise Industries?
The stock is looking quite positive. Recently, we have seen prices, fell near about 13% from its 52-week high. But the good thing is that the stock is currently trading, above the 220. That's a very critical horizontal support. So I believe with the validation of 220, there is a still potential to take a U-turn from the present juncture, and the gain should be containing around 264, which is broken decisively. 280, 285 will be on card. So I would say yes. One can stay invested, or even one can build a fresh long position from the present levels.
All right, let's just get in Ratnamani as well. They have received a large 2,700 crore order, and seems like the stock is going up in trade as a big spike coming in the day's trade. Stock is up almost 7% here, and this export order is for supply of spools and hangers. This is type of a product which the company makes in the precision segment as well. Sashank, a quick view in this order win coming in from Ratnamani as well. Stock is up 7%. How do you see this space coming up? Because you mentioned about the capital goods space, which is done really well. How do you see that panning out?
So I think the whole precision engineering market has started really flying up. We saw that with Sansera as well, going up almost 30-40% and getting a lot of orders from Airbus and Boeing. They've started going into the aerospace sector as well. We saw Azad Engineering recently coming in that space also. I think recently we saw 2 or 3 more companies. For example, forging companies have now started going into precision forging as well. And you have Ramakrishna Forgings and Happy Forgings also creating a similar pattern. I don't think this is a 1-2 quarter game. I think this is a 3-year horizon game where people are moving from a commodity manufacturing perspective to a more precision manufacturing perspective. So at least for the next 5 years, there will be some good margin uptake for all these companies.
All right, gentlemen, we'll start our rapid fire round and things will be fast. Sashank, the first one is from Puneet from True Alt Bioenergy. Should he average down or hold right now? His rate buying was at 485.
I think he can hold right now. Don't buy or don't sell anything right now. And I would only buy once it crosses the all-time high price. So I think you can go for a hold here.
Vishnu, query from Aditya from Vijayawada. Should he buy Godrej Industries at, or in current levels, or avoid?
Yes, he can buy, but maintain his stop loss below 1128.
Right. Positive fundamental outlook coming in from Kavya from Hyderabad. Suzlon shares she has bought at 72.5 rupees per share. Your views on it, Sashank? Suzlon.
I think the average buying price is extremely high. I think you might be sitting at a very big loss right now. And even from a technical standpoint, it doesn't look promising. It is in a downward negative pattern. So I think fundamentally it's going to take a very long time for you to recover your base. You need almost 70-80% gains. So if possible, you can try tax loss harvesting at the end of the year if there is no uptake on this.
All right, Vishnu, query for you. 4,000 shares held by Ion, Canara Bank at 131. Should it be buy or hold or average? Canara Bank.
Yes, definitely. One can even hold the position and can do average. Maintain the stop loss below 123.
Another query is UPL. Buying prices at 575. Should it be held or sold? Sashank.
I think you can sell this. It is in a very negative pattern, so I would recommend a sell on this.
Okay. Long-term view, Sashank, for Manappuram Finance. We have already seen gold finance stocks going up.
A very positive view on Manappuram. I think all gold finance stocks are doing well and there is a very big runway for this. So a buy on this.
All right. Ramesh from Chennai, an interesting query coming in, Vishnu, is for ACE Constructions. the stock? Should he hold or sell?
Yes, definitely one can hold. The stock is doing immensely well, making higher highs, higher lows. On the higher side, I'm expecting 1240 kind of levels can't be ruled out. So one can hold, maintain the stop loss below 1120.
And fresh entry in Ballu Forge, can it be taken for long term in the current levels, Shashank?
Yes, can be taken. I think if it was me, I would wait until it crosses the 700 mark. But yes, a buy from my side.
Interesting. Also, another company is Geo Finance. There is roughly 256 rupees, buy price coming in, Vishnu. Slightly under the loss, but good time to accumulate this counter or stay away from it?
Yes, definitely. Stock has started to form a higher highs. One can definitely accumulate or stay invested in the company.
NTPC, interesting holding, 7% down from the holding price. Raghu from Bangalore, hold or exit? Shashank?
Can exit in this one. Can exit in this one if it breaks 300 as the stop loss.
Interesting. So that's the wrap of both fundamental and the technical queries coming in. Thank you, gentlemen, both of you, Shashank and Vishnu, joining in and giving your views in this rapid fire segment and the whole show as whole. So it's a pretty interesting take coming in, and we have given you important queries as well. And largely we have covered most of the stocks in the small cap and the mid cap today. And now time there for a short break. Up next is India Market Close.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and former treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
man lo.
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
बंधन एक पोर्टेबल
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew, and Hiral Dadia is going to join me very shortly. In fact, I'm going to ask her to walk across right now. But this is, of course, we're coming to you live from the NDTV Profit Suzlon studio. It's another day of a trade in the red. Of course, 2 days of gains, Thursday and Friday. As much as you can say they were gains, right? Thursday, at least you had 0.6% of a positive up move, but you had a flat close on Friday, and most of last week was very narrow ranges, 0.4% lower, pressure from the banking space.
Yeah, and the question is, in fact, when the markets opened up, gap up today, I had sensed that probably there will be some bit of sustainability, but you've given up completely in terms of your Nifty. You talk about Bank Nifty, and it's the PSU banking space which is putting more pressure as compared to your private banking space as well.
Yeah, we should actually pull up the Bank Nifty chart, because that's where most of the cracks have come through, and that is where the pressure on the benchmark Nifty 50 is also going to be evident to you. That big drop that you see from the high point of the day for the Nifty Bank, and now pull up the intraday for the Nifty 50 as well. Around the same time as you saw that drop for the Nifty Bank is when you saw this plunge, relatively speaking. Now it's not a deep plunge, it's just 0.4%.
It's gradually actually gone down in terms of markets, and if you see in terms of broader markets as well, Alex, absolutely flat even midday, and that's the trend. There you go. I mean, nothing that they have done, they're absolutely on the flat line there in terms of the mid cap, and likewise in terms of the small cap, the cuts have slightly deepened further, 0.2% lower here. Let's just look at the advanced decline ratio, and then we look at the components in terms of Nifty 50 as well. Look at the convergence that's happened in between.
Yeah.
I mean, your advances, nothing is holding up on either sides.
Yeah, absolutely right. We should look at the heat map for the Nifty 50 just to drive home that point. And you will see a few heavyweights on the downside that are putting a little pressure. Bajaj Finserv here, BEL, Tata Motors PV, Adani Ports. But more the lack of any big moves on the positive is what's causing the fact that the benchmark is down about 0.4%. Hindalco, JSW Steel, Tata Steel, the metal pack in focus. Understandably so, because you've seen a slide in the dollar over the course of the last few trading sessions, and that has had a positive bearing on commodities, particularly gold.
Look at the way gold is.
In a month's time, you're talking about gold that was very close to that $4,000 per troy ounce mark. It's at over 4,600.
That's where the rally. So two sectors, from what Alex is also talking about. You have the metal pack, which is the top gaining sector, followed by IT, where you are seeing some bit of tailwinds coming in there. But I think in terms of IT, it's an absolute rub-off effect. It's a sentimental move, because we did hear of Nvidia over the weekend, which spoke about a 15% price hikes in terms of chips, and that's what actually caused a crash or an impact. If you see Kospi, that was down 3.5%, and hence that sentimental up move is what you're seeing in terms of IT counters in India. So that's why, I mean, that has also now cooled off, because that was the second top gaining sector in trade. In fact, your real estate is actually playing a catch up. Let's just pull up the intraday chart of Nifty Real Estate and then Nifty IT, and that's exactly that. The charts will tell you what I'm talking about. There you go. From the day's low, that upstick that has come in terms of real estate, and hence the 0.3% up move. And there you go. IT, which was actually, seeing some smart gains, has now moved to the day's lowest levels. Let's just quickly look at the components in terms of Nifty 50, NSE 500 as well, to look at that stock-specific action that's coming in there. I mean, look at that.
BSE 500.
Yeah, that's BSE 500. So your metal pack there. IDBI is interesting. KRBL on the story that NDTV Profit flagged as well in terms of basmati prices. Your entire pack is trading in the positive. Your sugar pack continues the positive terrain in today's session as well. Yeah. Your milk companies are in focus. Hatson Agro, Heritage Foods, and I think there has been an uptick in terms of milk prices, and that's the reason why you're seeing that surge come in there.
Yeah,
on that side.
Not too much of to speak of with regard to the losers. You have Aegis Logistics from the logistics pack down about 5%. Credit Access, Grameen. If I'm not mistaken,
mistaken, the stock is actually gained in the recent past, so some money maybe be getting taken off the table. Z Entertainment, we've spoken about this. It has to do with the warrants issue. And you have Jubilant, Ingravia, Carborundum, Weber Global. No real trend to speak
Trend on the losing side as well.
Right, so we've got Hemen Kapadia as well as Mr. G. Chokalingam joining us this afternoon. Good afternoon to the both of you, gentlemen. Thanks so much for taking the time. Hemen, I'll come to you first. What are the indicators that you're picking up ahead of the monthly expiry that's just ahead of us?
A very good afternoon to you, Alex. Excuse me. Thank you for having me on the show. It's always a pleasure. Well, firstly, obviously, since the monthly expiry, we saw the Nifty and the Bank Nifty on Friday lose a lot of boy. Obviously, rollovers come to an end 15%, 25%. So not much to look at. We'll have to see finally how much rollovers have happened. The VIX is sanguine, Alex. We are sub 12. So actually, the market should be slightly better than where we are. But I mean, we've seen 15 trading sessions, Alex, nothing happening. Okay, we've come back a bit from the lows, but it's still too lackluster, and I don't think anything changes till the monthly expiry happens tomorrow. On the flip side, realty as a sector has been looking good. We don't have a sugar index, but sugar as a sector has been looking good. So it's very stock specific or maybe sector specific. The mainline stocks, the Reliances, the HDFC banks, the Kotaks have gone nowhere. In fact, these two private sector banks haven't done anything for the last 5 years, Alex. So going nowhere, hopefully things should be better, but currently it doesn't look as if any spectacular moves are happening either side, Alex.
Yeah. You know, Hemen, we can hear that distress in your voice as well, because everything
and disappointment.
Yeah, I mean, there is disappointment. Everything is lackluster. But a couple of names that you mentioned, a couple of segments where you do not really have an sector index over there. But what in this kind of a market would you advise investors to bet on? Because in spite of that consolidation that we are seeing in terms of the secondary markets, your primary markets are the ones which are firing right now.
So I think about the yes and like disappointment, yes, because it's been almost 2 years. Markets peaked on 27th September 24. Even silly markets like Pakistan have done well. Hello, we need to do well. But on a more serious note, I think like you said, and I also mentioned, sugar doesn't have an index, but something like a EID Parry, Triveni Engineering, go for stocks which have quality and would perform over the long term. And yes, it is good that our primary markets are doing well, but I think that could also suck a little bit of the liquidity. You have the NSE IPO coming in. So, okay, that is being balanced over there, but I think some of the new listings, IPOs seem to be a bit on the higher side, but maybe markets are compensating for the secondary market not performing either.
Important points. Since we're speaking about primary markets, in the spurt of issuances, there's 6 main board IPOs that are lined up this week. Mr. Chokalingam, before we get into the stock of the day, which we've identified, by the way, and there were few to choose from, but we've identified as Shanti Gears. It's up and about. But before we get to the secondary market, any opinion on the companies that are marching up to Dalal Street? You had a couple of listings today as well, one jewelry company, and it was severely oversubscribed, and it's gotten a bit of a pop. Anything that's catching your eye in the IPOs this week, though?
No, certainly not, because 99% of the IPOs, while debuting, that time itself they are fairly valued. They don't leave much scope for appreciation in terms of fundamental value. And secondly, on listing, the fundamentals don't work. They just move on the basis of perception, supply and demand for quantity of shares on the market. So obviously people like us will most of the time go wrong in giving a research view on listing day or before listing, unless there is a strong valuation comfort. As I said, many do not leave much scope, fundamentally speaking, for the investor. So therefore, I think a risk-taking investor should apply for all the shares. On listing, if they are lucky, they should book profit, or they should book profit in a phased manner post-listing.
Let's talk about the stock of the day, and that is Shanti Gears. It has witnessed a sharp re-rating after parent Tube Investments acquired an additional 2.69% stake through a block deal. So large trade has taken place, 14% up move though. Let's talk about the prospects ahead. and the reasons why the street is taking notice. Jasmeet is joining in to tell you about those very important and interesting updates. Jasmeet.
Well, Alex, thank you for that. It's quite interesting analysis we have done for this particular counter. When you look at the performance per se, if you look at this counter, it's up nearly 37% in last 2 days. While the stock has gained after nearly falling 30% for the year, and within just 2 days, the stock has recovered nearly 10 months. So that's a big gain coming in this particular counter. The Friday the stock was up 20% and even today it's about 15%. And the valuations before this rally were cheaper compared to the street, but now post this rally, the valuations are at par compared to the other players in the market. Now we look at the key reason why the stock is buzzing is on the back of that buying coming in from the parent company, that's Tube Investments, which nearly bought in 2.69% stake in the particular counter, buying nearly 21 odd lakh stocks. Now, if you look at the particular share, the parent company all this while was holding nearly 70 odd percent stakes in the company, but after this buying, the overall stake is raised to nearly 73 odd percent. While if you look at what the company does, this company manufactures and automates a gear system and works across the auto component companies, and it's a subsidiary of the Tube Investments as we discussed. Now, if you look at the gear market in India, at a wholesome, it's nearly at $1.4 billion, and it has been growing at a 7% rate, showcasing how big the market is for companies like Shanti Gear. Well, if you look at the DI aspect of the business, what we are noticing is over the last couple of years, DIs have halved the share in this particular counter, and that's why we can also see the downtick in the performance. The earlier in 2023, the DI has held nearly 0.75% stake, and as of the current June quarter, the DI has held roughly 0.23% stake. Now, if you look at the performance of this particular counter in the Q1, even that was on the weaker side, while the revenue dipped from earlier 134 to 115 odd crores, while the margins halved in the quarter. Well, look at the profit, even that saw a downtick from earlier 22 odd crore to 9.8 crore in the June quarter. So far, the overall fundamentals remain on the weaker side, but the management buying is something that's pulling the stock up.
Got it. Okay. All right. Thanks so much for that. Mr. Choklingham, I want to come to you on this company, on this counter. The stock is up as much as 14%, as we've pointed out. Shanti Gear. Any opinion on this, on the fundamentals?
Certainly, it's a great company, Shanti Gears. Ever since Murugappa Group took over in 2012, it has been growing well, no doubt. And even the Murugappa Group is known for a fabulous track record of acquiring company and turning around. But having said all the good things, its profit in FY26 back to what it was in FY23, and stock trades at around 60 PE. I think at current price, it is fairly valued. If somebody wants to hold it for 3 to 5 years, yes, one can make money from this level also. But otherwise, practically speaking, I think for every rise, one should book profit. And in case it falls at 10-15%, then one can consider, because both financial performance as well as stock price performance are extremely volatile for this company. But however, very good company, very good management, and one can definitely make money if we are willing to hold for anywhere 3 to 5 to 6 years time frame.
Okay, that's interesting. So that's Shanti Gears. You're talking about a Tube Investments as well, which gets related here. If you can just pull up that one on the screens and see what a Tube Investment is also doing in trade. Not much on the charts. Hey, Main, what do you make of a Tube Investment as well as Shanti Gear?
Okay, Shanti Gears, hasn't done much for 2 years. Now we are seeing traction come in, and traction come in how? 3 days the stock goes berserk. But having said that, it's been accompanied by very high volumes. Yesterday was 40 lakhs, today is 1 CR. We'll have to look for the delivery marking, but everything seems to suggest that we've seen a medium-term turnaround, and the monthly volume is off the charts. I think from whatever I can see, it's probably the highest volume since the last 21 years. So something is happening, and it looks more positive than negative. But if it has gone from 385 to 545 in 3 trading sessions, I'll wait for it to cool off for sub 500 if I were to look at anything fresh. But yeah, turnaround seems to be on the way, and the volume seems to suggest that a bottom has been formed here.
Okay, so that's with regards to where Shanti Gears goes as we speak. But moving on, BLS International, let's pull up that one on the screens, and that stock is under pressure, and this is after a Spanish court's visa fraud probe drew attention to visa applications proceeded in Algeria. The company has actually denied any wrongdoings, and they've come out with a clarification, but my colleague Varsha is with us to tell us more. Varsha, what's happened there? Because a 12.5% downtick coming in terms of BLS International. One, there is a Spanish visa fraud that you're talking about. There are scrutinies going in over there as well, and you have the management has come out and given a clarification.
Before talking about clarification, let's first address what was the issue. So the issue is the stock fell. Now this is after reports of a visa fraud probe which is linked to visa application processed in Algeria. Now a Spanish court is investigating an alleged visa fraud network, and investigation, rather they are looking at firms which are involved in visa processing. Now why BLS is in focus? Because BLS, if you see, handles visa appointments for Spain, and Spanish court has mentioned platforms like BLS in its inquiry. Companies being examined as part of broader probe. Now BLS, if you see, won a Spain visa service contract in 2016, and which includes appointments and document checks. Now BLS came out with a clarification and they are denying this allegations. Company rejects all allegations, says there is no evidence of wrongdoing, and maintains that employees were not involved in visa irregularities. Now they say that their role, the BLS role, is only administrative, processes application and appointments, and they do not decide who gets visa. Visa approval and rejections are done by government, and say the final authority rests with the government officials, and hence they are not part of this probe, and hence they are denying all the allegations. But overall, yes, because of the inquiry that they are into, the stock is down almost 12.5%.
Thank you, Varsha, for that. In fact, quick question, Mr. Chokalingam, how are you looking at a BLS International and this kind of correction? Do you think it warrants? I mean, the company has come out and said that they're all clean, there is no wrongdoing there. Would you say wait and watch or good levels to enter?
See, fundamentally speaking, it looks fabulous at this price. 13p, strong balance sheet, lot of cash, net cash company, return ratios are very good. So it's a good buy, but I do not know, or rather I do not understand the implications of these allegations. But otherwise, in terms of numbers, it's really fabulous. So therefore, probably little risk-taking investors can consider buying it, subject to the proceedings. I am giving buy call for risk-taking investors because stock also crashed a lot and trades very cheap with a lot of cash on the books.
Okay, thank you, Mr. Chokalingam, for that, and stay with us. We're actually now looking at a very interesting report that Ambit Asset Management has come up with, and this is something with regards to where the new small cap cycle is concerned. Now, the question is, is it a new small cap upcycle which is beginning, or is this a relief rally or not? Joining us is Bhargav Budde, Fund Manager, Equity Asset Management at Ambit Asset Management. Bhargav, welcome to the show and always a pleasure to speak to you. A very interesting report that we read over here. The question is the risk reward favorable when you talk about the small cap space currently versus what we've already seen? Because it's calendar year 2025 where we've seen negative returns. Before that, the returns have been positive in terms of calendar year 24 or 23 as well. At what stage is the small cap cycle right now, according to you?
No, so in the report, if you look at data points, generally small caps work in cycles. And if you look at last 21 months, there hasn't been any return as far as small and micro caps is concerned. And in the report, what we have seen is that when the earlier highs get breached again after the sort of pause, then obviously the next bull cycle starts to happen. So from that perspective, we believe that small caps as well as micro caps are almost reaching to their all-time highs, which they had reached sometime in September 24. So from that perspective, it seems like that the next bull cycle is absolutely happening across both small caps and micro caps. Also, if you look at earnings growth in the first quarter, small cap 250 index reported an earnings growth upwards of 25%, and micro caps reported earnings growth in excess of 18%. So to that extent, despite a quarter which was faced with a lot of raw material inflation, Small cap and micro caps have reported very good earnings growth, and this double-digit earnings growth has come after a very long pause. So to that extent, we believe that it's a great time to sort of increase allocations towards both small cap and micro caps.
Bhargav, that's an interesting point. And when you talk about earnings momentum as well, now the question is the momentum that we've seen in the first quarter is the recovery, I would say, is cyclical or is it structured, number one? And do you think there is vulnerability in terms of your FY27 estimates as well, if there are downgrades that come in for your global growth, or if there is weakness in terms of global growth as well? So does that become a key thing to watch out for then?
Yes, so if you look at some of the sectors which have reported very strong growths, the like of BFSI, the like of autos, auto ancillaries, some bit of consumer discretionary, pharma, clearly it seems that the growth is sustainable. In fact, one of the biggest drivers for this growth seems to be exports. Few of the companies with whom we were interacting, they were telling us that the kind of RFQs they are getting from various countries in Europe is simply they were not expecting that. So clearly Europe seems to be going through a tough time as far as local manufacturing is concerned. In fact, in newspapers, we read every 10 days that one of the factories in Europe is closing down. So RFQs from Europe are a reality. And if you look at the currency depreciation that we have seen versus China in the last 18 months, the currency has almost depreciated by more than 15%. So that makes us extremely competitive. And if you look at upgrades versus downgrades, the maximum upgrades for FY27 have happened across small caps as well as micro caps. So to that extent, clearly we believe that this upgrade cycle will only continue because first quarter was seeing a lot of raw material headwinds. When we met a lot of companies, especially in small cap and micro cap in the recent conferences, we were told that raw material inflation is getting passed on through price hikes every month. So it seems like second, third quarter should see much better earnings growth as compared to the first quarter.
Absolutely, and that was evident in terms of your earnings as well of the first quarter, because the anticipated impact in terms of margins didn't really come through. So either it was a pass on, or because of the high levels of inventory that everyone was holding, there is a potential that you could see some bit of marginal softening that could come in the second or the third quarter as well. However, the moral of the story is, where should investors invest in, and if there is juice left, or it's just the beginning for the small cap space, which are the sectors you would watch out for?
No, I mean, we have investors who have been telling us that since April, your funds are up more than 35%. So should we wait, or should we sort of start investing? My simple answer to them has been that ask an investor who's invested for the last 2 years. He hasn't seen any returns. So the 35% return since April is sort of nothing when you look at the last 2 years. So our suggestion is basically to act as early as possible, because if you keep on timing, then every incremental return will sort of dissuade you. Few of the sectors which we are bullish as a house, we are very bullish as such on the manufacturing theme. Within the manufacturing theme, we are looking at several subsectors like data centers, like renewable energy, like AI-related plays. In terms of various other subsectors are auto ancillary, cement, building material, consumer discretionary. So these are a few of the sectors where we are increasing our allocations. In fact, after a long time, we have also increased allocations towards specialty chemicals. Chemicals have seen a very tough time over the course of last 2 to 3 years. The good part is that the capex across a host of chemical companies has already been incurred. So to that extent, any recovery in terms of pricing will benefit. Paints,
in general is seeing a very good time after a painful period of 2 years. We have seen first time price hikes which are starting to happen. To that extent, even the consumer discretionary space is very good.
Okay, so interesting sectors, Bhargav, to watch out for. But thank you so much for joining in. It's always a pleasure to speak to you and get your insights on a very interesting space that we're looking at right now. Mr. Chokalingam, quick view, Bhargav was talking about the specialty chemical space as well. Anything that you like on the cards where valuations are reasonable, which would you advise investors to buy?
I have not studied intensively at a stock level, but I agree. Specialty chemical will have a very good opportunity because of steep depreciation of the rupee. The landed costs have gone up, so the domestic producers will do very well.
So it's that time of the show where we generally get heard on the street. Do we have Somit ready? If we do, we should go across to him. So Somit, I want to come across to you just to get a sense of what you're hearing. In fact, a few stocks that are buzzing ahead of news perhaps, and I'm wondering if you've heard anything specific on IDBI Bank, for example, where there has been a little bit of chatter on the street about a potential divestment.
Yes, there has been a lot of chatter about the deal happening. It's just that what price it will be happening is something that we need to track for. The latest buzz is of around 100 rupees, 110 rupees, but again, this is not confirmed. It is just a buzz on the street. But yes, everyone knows that the deal will be happening. It is just important to track at what price it will now be happening. But apart from that, there are many other stocks that remain in focus. Firstly, it's Cummins. There are buy flows on institutional desk is what dealing rooms are indicating. Both foreign and domestic institutions have been accumulating this counter in trade, and delivery volumes will also be on the higher side. For Vishal Mega Mart, the stock is up nearly 10% in trade, and this is after the reappointment of the CEO, which removes a big overhang on the stock. But dealers are now indicating that there could be a potential block deal that could come in from the promoter side. Now, the news about this block deal has been there on the street for quite a while, but post this move again, the rumors about this block deal has come on surface. Apart from that, there is Ultratech. Now, dealers are expecting some announcement related to the cable and wire segment that could happen from the company side next week. The dealers are indicating that they have already sent out some communications to their dealers and agents, and hence some big announcement is expected related to this segment next week. For Persistent System, there are buy flows on the DI desk. Delivery volumes are expected to be on the higher side. And for Molbio Diagnostic, that stock at one point in time was up as much as 6% Dealers are indicating that a large prominent HNI has been accumulating shares in this counter in trade today. And lastly, when it comes to Good Luck India, that stock is down in trade today, but there's a buzz of some potential order win that could come in for Good Luck India. So keep an eye out for that counter as well. And on 20th of July, we had mentioned about Indian Hotels and Oriental Hotels. There was a possible M&A activity that was in works. We did indicate about that, and we did mention that Indian Hotels might look to acquire Oriental Hotels. And today morning, they came out with this announcement where there will be a share swap ratio, and Indian Hotels will be acquiring or will be issuing shares to the existing shareholders of Oriental Hotels. So that news has come out to be true.
It did indeed, and that thappa of khabar confirmed is something that you can imagine will play out. Thanks so much, Somit, for that. You know, an interesting story that has emerged, and this is playing out in a few cohorts of stocks today as well, has to do with gold prices. And just take a look at the 1 month chart for international spot gold, right? And let's zoom into that chart as we speak. It's an uptick of what, 13.5–14% just in the span of a month, and a large increase taking place. But you're probably wondering why that has taken place. A few things to bear in mind. One, you've had the geopolitical crisis that has caused bond yields to go up. Now, you have had, over the course of the last 1 month, at some points, the treasury yields in the US for the 10-year treasury go well above 4.7%. For the 30-year, it's gone up above 5.2, 5.3%. And so in the interim, what has happened is that you have the US Treasury that has bought back certain bonds. And so in the process of buying back bonds, they've had to print currency, and the increase in currency in circulation has had a bearing on the value of the dollar. So buying back of bonds has resulted in the dollar losing ground whenever the dollar depreciates against a raft currency or loses value, you have commodities globally that go up. Yields have come off, the dollar has weakened, and gold prices have shot up quite considerably. This has had a bearing, of course, on precious metals, but also on the wider commodity basket, and metals as a result have been up and about in trade today. The question that has to be asked though, and Hemen Kapadia, I'll come to you on the charts, maybe if you have an opinion on gold prices, so I'll allow you to pull those charts up. But the question is, if there is further intervention by the Treasury and there is further buying of bonds and printing of money, it's been called a mini QE, but it's not really a quantitative easing. It's really management of Treasury operations. If there is an intervention by the Fed, for example, if there is more printing, the dollar loses value, and that's positive for commodities. What does a trend on the charts tell you about gold prices though, Hemen? Is there an upside cap as things stand? Because it's gone up by as much as 14% in a very short period of time.
I think so, Alex. Like you said, 4 weeks, it's gone from $39.50 to almost $4,700, 4,690 to be precise. This was yesterday's closing. And we have a virtual roadblock at 4,700. We might see a small breather coming in. And if it has to overcome $4,700, which is a possibility because a medium-term bottom has been made, it would need to consolidate a bit and digest this current move. So I wouldn't be very gung-ho about it at this level. There's also been a gap. So it could cool off a bit. If it consolidates for some time and then takes out 4,700, that's on the cards, Alex. And like you said, if this, not exactly mini QE, but sort of happens, then 4,700 could be taken out, and that would open the upside for maybe 4,780 and 4,855. So we are in an intermediate uptrend, but currently, I think it would be an unpleasant surprise if it continues without taking a break. Alex.
Okay, so that's the gold rally. What about your gold financing companies, Hemen, Manappuram, Muthoot, IIFL Cap, you have City Union Bank, all of them have been beneficiaries, and you're seeing some bit of a run-up that's coming in there as well. Would you be a participant in the current rally?
Manappuram is in a short, medium, long-term uptrend, Hiral has been. So I would say a little bit late in the day, but LB one can participate in a smaller manner. The other stocks not looking that exciting in the sense City Union Bank, no. But if I were to look at Muthoot Finance, yes, it is relatively technically cheap if I were to compare it to Manappuram, technically cheap. So I guess this is something which one can participate. I believe it has opened the doors for a distinct, clear further upside. Hiral.
Okay, Mr. Chokalingam, let me ask you about the fundamentals of some of these companies then, because the question has to be asked about valuations and outcomes, because not necessarily in the next couple of quarters, but let's face it, a lot of financiers are getting into the space, and that increase in competition will force the prices, or rather the yields, to get compressed, right? They'll have to offer lower interest rates than they're currently offering, and directionally, therefore, the net interest margins would go down for some of these NBFCs in the gold loan space. What is your opinion?
Exactly the same view I have. There are two structural changes. One is that, the number of finance companies getting into gold loan increased substantially in the last 5 years. And PSU banks, in fact, the top 2-3 lenders in the gold segment are from banks, public sector banks. So the PSU banks also started becoming very aggressive. And on the other hand, the gold price in the last 5 years almost tripled. If you look at, international gold price from 5-year bottom, I believe it's very difficult to predict in the short term, but I believe the gold price can even again correct 5-10%, because world over people are sitting on hundreds of billions of dollars of gain by buying gold only in the last 5 years. So these are the two risk factors for gold loan for companies. And I think one should be very cautious on the valuation multiple they pay for buying these kind of financial services companies.
So Chokalingam, just a quick follow-up on that. Do you have to have arguments with anyone at home about buying gold?
That is why I've changed. I used to be a little pessimistic, but now I realize that I was making mistake all these years. I think the gold demand will be very strong. So that no doubt about it. I think for 5 to 10 years, if we have a time frame, you will tend to make money only in by holding the gold.
Okay, all right. On that note, Hemen, Mr. Shoklingam, thanks so much for taking the time. Pleasure speaking with you as always.
Thank you.
All right, we have to slip into a very quick break. We'll get you the closing session, and the CAS, in fact, is just about 15 minutes away. And before that, we'll get you the top buy today, sell tomorrow calls. Stay tuned for that.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our capital, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done. If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Welcome to India's biggest grassroots innovation movement.
Welcome back to India Market Close on NDTV Profit. Now let's get in Osho Krishan, Chief Managing Technical and Derivative Research at Angel One, and Siddharth Khemka as well from Motilal Oswal Financial Services. Welcome to the show, gentlemen. Always a pleasure to speak to you. Osho, let me come to you first. With the way markets are, a gap up opening, we've given up those gains, pressure coming in from the financials today. What are the levels that you're tracking and your top picks at this hour?
Very good afternoon, Hiran. Yes, no doubt we are witnessing a kind of a very subdued to negative kind of market zone, and specifically when we are expecting the monthly expiry volatility to have some kind of a play in the market. But overall, the view in benchmark index is quite positive. I'm expecting that dip towards the zone of 24,100 can be seen as a buying opportunity. Some data which are quite on the bearish, very negative side, that is oversold parameters, are from the derivative front, where the put call ratio is near about 0.68. So I'm expecting that in the coming period, coming day, there is a possibility of some kind of technical pullback for the benchmark index. So on the lower end, 24,100 is expected to provide very strong cushioning to the Nifty 50 index, while on the higher end, 300, 350 is the resistance level. So on the expiry day, one may expect some kind of technical pullback in the Nifty 50 index. And two of the counters which are looking very positive in today's trading session. First one is from the metal space. JSW Steel is looking very positive. The counter have seen a very significant movement of nearly 2.5%, currently hovering around 1320. So it is looking very positive. One may look to accumulate this counter from a short-term perspective. 1360 is the positional target for the counter, and 1280 is the advisable stop loss that one should keep from a short-term point of view. The other counter which is looking very positive is LG India. There has been a quite decent retraction in the counter, and I'm expecting 7020, 1740 to get retested in the counter, and 1610 to be seen as the stop loss for short-term traders.
Okay. Siddharth, just before the break, we were talking about commodities, but specifically about gold. And first of all, good afternoon to the both of you, Osho, as well as Siddharth. We've got a view on gold prices, the possibility that on the technical charts there might be a little bit of a pause, but we've seen quite a big pop. And it's on account of the way that the dollar has moved. There's at least some argument to be made there. But what's your opinion on base metals? If the assumption is that the dollar will either stay where it is or weaken over the next couple of years, that is only positive for commodities and metals in particular.
Yeah, hi Alex. Good afternoon, and good afternoon to Hiral as well. So, as you rightly said, our view on the base industrial metals is structurally positive. We believe there is the cycle is on an upswing, and what we believe is that there is going to be a very strong demand for the base industrial metals, led by AI, data centers, as well as industrialization, and the supply is not going to be able to catch up to the incremental demand, and hence we would continuously see the prices for base metals showing an uptrend over the next few years. There would be intermittent volatility because of global news flows, geopolitical developments. However, as I said, our view is that structurally, if you look at zinc, aluminium, copper, silver, so these are some of the base industrial metals, so continues to see a strong demand environment. Especially if you look at zinc and copper, the mining capacities are limited, and hence we'll see a sharper increase in usage of aluminium over the next few years, and hence again while the prices for zinc and copper could continue to go up, the demand for aluminium could be very strong in the coming years.
We're having a little bit of trouble, Siddharth, with your feed, and so while we can hear you, it's not as clear as we would hope. So we'll try and get that line back, and maybe you can tell us what the pecking order is for the metal counters that are available here in India. In the meanwhile, let me head across to my colleague Sharad Dubey, who's joining in to tell you about India Glycols. The update here, of course, is that the company has gotten NCLT approval for three-way restructuring. Let me not get further into that. In fact, let's ask Sharad to tell us about what this restructuring entails and why is this an important development. Sharad?
This is a very important development for the company, especially on its value unlocking theme. NCLT approval has been received for the restructuring, and the plans will be to demerge its biofarm and spirits biofuel business as well. September 2nd is an important record date for both of these segments. Now this restructuring, how that pans out, India Glycols will be there for specialty chemicals. IGL Spirits, if you look at it, that's for spirits and biofuels, and NHR Biopharma will be for nutraceuticals and APIs. But what's the ratio? NHR Biopharma, 1 share for every 3 shares if you are holding India Glycol stocks, and for IGL Spirits the ratio will be 1:1. Both of these resulting companies will eventually be proposed to be listed as well. So there will be 3 entities at the end of the day. Now what's the impact? It eliminates the holding company discount, sharper focus comes on segments, and further value unlocking comes on other high margin businesses. The company has already come out with its key targets for all these 3 different segments. Spirits business, they are targeting a 500 crore plus EBITDA for FY27. For chemical business, a 2500 crore in revenue in the next 4 to 5 years and a 400 crore EBITDA. While for NHR Biopharma, which is your API business and the nutraceuticals, they are targeting 130 to 150 crore EBITDA in the next 4 to 5 years. There are some triggers also which you should track. They are focusing on expanding the green tech chemical products and also industrial gases and ethanol linked biofuel capacities, and by FY28 they are targeting to be debt free. So this is the entire picture and the value unlocking for India Glycols.
Okay, thank you so much for that, Sharad. In fact, let me see if we have Siddharth Khemka back with us or not. 3.5% up move coming in there. Osho, on the charts, are you seeing any further upside or tailwinds here?
See, overall, the technical structure is very positive, Errol, and I'm expecting that with the kind of momentum and volume that we are witnessing in the last 2 sessions, there is a possibility of further momentum to be seen. So one should definitely try to or maintain their long movement in the counter. I'm expecting near about 1260, 1275 can be seen as the next potential target from a shorter term point of view. Overall, the counter is on a verge of giving a very strong breakout. Near about 1175, 1180 is already was a kind of a hurdle, and the counter have definitely emerged above that. So I'm expecting that in the coming 1 to 2 trading session, there is a strong potential in the counter, and it may surge towards 1260 to 75 kind of a zone.
Okay, Siddharth Khemka is back with us. Siddharth, while we were trying to fix the feed, we've had a conversation about India Glycol. So 2 questions for you. One, what is a pecking order? You've already told us that as a house, you're positive on base metals, base industrial metals. So what is the pecking order? And 2, what is your view on India Glycols, which is a separate issue which we've already discussed?
Yeah, sorry for that audio glitch. I think now you can hear me loud and clear.
Yes.
Yeah. So, Alex, if you look at within the base industrial metals, copper and zinc, you have limited plays. Hindustan Copper, Hindustan Zinc are the 2 stocks there. Within the aluminium space, what we like Hindalco, Vedanta Aluminium, Nalco. I think when the space does well, all 3 would do well. But I think, again, in terms of pecking order, Hindalco, Vedanta Aluminium, and then Nalco. That would be the pecking order in the aluminium space.
India Glycols?
Unfortunately, don't have view or coverage on India Glycols.
Okay, so interesting names coming in there. In fact, staying with the metal pack, the government's divestment drive could actually gather pace with an OFS and Hind Zinc. That is likely within the next 2 weeks. My colleague Shrimi joins us with more details. In fact, on the back of this news as well, you're seeing the stock which is cracking in trade 1.5% up move. It's given up those gains from the day's highest levels. Shrimi joins us with all the details. Shrimi, over to you. What are you picking up?
Yeah, that's right. The government is looking to launch an OFS in Hindustan Zinc soon, with plan to sell around 1.5 to 2% stake in the company, as per the highly placed sources. In fact, the sale could perhaps fetch government around 4,000 to 5,000 crore, as per their internal assessment in the current, market cap. Now, transaction appears to be moving closer to the launch stage, as Hindustan Zinc top officials met Deepam recently to discuss the proposal, as per the source pointing out. But do note that the government currently holds 27.92%, almost 28% stake in Hindustan Zinc, while majority is with Vedanta around 60.71%. This is the second important stake sale in Hindustan Zinc after it was done in 2024, which almost 2 years ago, and fetched government around 3,500 crore at that point. Now, the proposed OFS is also important from the context that the government looks to maintain the momentum in the disinvestment, aligning with the Deepam internal strategy to raise around 20,000 crore every quarter through stake sales. So far, disinvestment receipts have reached 52,000 odd crore against the government full target of 80,000 crore for this fiscal, which also mean that government already achieved around 66% of their annual target. Now, Hindustan Zinc OFS of this size would definitely give government another sizable chunk of receipts and help keep the disinvestment pipeline moving as it works towards the full year target.
Sure, thank you so much for that. Let's just quickly pull up the intraday chart in terms of Hinzing once again and see that correction which came in from the day's highest levels, and again time to reclaim that level back, and this is going to be interesting to see what happens. Before we go to our guest, you have the cash market for the F&O stocks, which is stopped trading. Let's pull up see the rates at this hour as well. If you can just pull up Nifty 50 and Bank Nifty once again on the screens. There you go, 24,182. You're below the 24,200 mark on Nifty 50, so that key psychological support level is also broken in intraday trade today. You have Bank Nifty as well, which is down nearly 0.6%. In this kind of a market, Siddharth, if you have to look at sectors, if you have to look at what's really buzzing, you've seen action in terms of the sugar pack, you've seen action in terms of the rice pack, so very small sectors which are moving in trade. And in today's day of trade, it was metals which was ruling the roost. You had IT, which did play some bit of a catch up as well. What looks attractive to you?
I think if you look at what is happening over the last couple of months and what we expect at least to continue, at least in the near term, is that market will remain very stock specific, and there could be a lot of sector rotation that can happen. If you look at the earnings, clearly the broader market is sharply outperforming in terms of growth compared to the large caps, and which is where some of these niche businesses which are able to deliver the strong growth, I think that is where the market focus remains. Among the, I think, larger ones, if you see metals reported very strong 50% plus earnings growth, continues to do well. Selectively, BFSI, especially small banks as well as NBFCs, which is where we see focus. And if I were to look at the broader market, I think new age businesses are again showing a lot of promise in terms of growth, in terms of profitability. So, for example, stocks like Lenskart, Miflo, you have Urban Company, Car Trade, these kind of new age businesses. I think that is something that the market is liking. Obviously, the larger ones like ATM has done well, and the stake sale is now behind from one of the promoters, so that overhang is also reduced. So overall, from the broader markets, I would look at some of these names plus the new age businesses.
Some of these names, let me go across to Osho and find out what he has to say about them. Something like a Lenskart, something like a Paytm. What would your view be if you have not gotten into any of these stocks, you've not had the benefit of any of the rallies that have taken place, but you want to do so right now? Should you do that?
See, overall, the new age counters have definitely seen a very strong performance in the recent period, and they has always been into a very strong traction. Some of the counters except Paytm, but still Paytm is also at a very strong momentum as of now, and majority of the counters are looking very positive, and they are still doing very positive in the market. So overall, the momentum is still there. The technical structure for majority of the counters are still in the favor of bulls. So I expect that any kind of correction, any kind of healthy profit booking should be seen as fresh accumulation for these counters, because on the technical fronts, majority of the counters have already seen a decent movement, and they have already seen some kind of deviations from the short and medium term moving average. So one should wait. If one has to take new positions, then better to wait for some kind of profit booking in these counters, and then only can look for accumulation. But from a longer term perspective, the chart structure is very positive and one can look for accumulation, but in a staggered manner.
It's about card trade or lens card?
Lens
or
card,
PTM.
I would
Okay,
say.
lens card. Okay. So lens card is where the chart is looking attractive. Okay. Stay with us. Now, IT as a sector is interesting. In fact, it was one of the top 3 gaining sectors, however, has given up the kind of gains as well. And, there is that sentimental impact coming in from the global markets as well on the back of reversing AI trade. Jasmeet joins us with all the details with regards to IT as the sector right now, and then we'll talk about Hexaware as well. Jasmeet, over to you.
Well, Hiral, thank you for that. As rightly said, we are seeing a reverse AI trade right now happening across the IT pack. As we have seen, NVIDIA has come out and disclosed that they'll be raising 15% price of the GPUs, which indeed is making AI as expensive trade. And we have seen in the past as well, a lot of companies shift from the proposal of getting ahead with the AI back to IT services. So any change in the AI platforms where they're getting expensive, the IT gets beneficial, given that the money rotates from the IT stocks to from the AI stocks to the IT stocks. The similar trend is observed here as well. The cost is down about 3%, while the Indian IT rallied in the trade today. If you look at the other key reasons that's helping the IT sector grow in today's trade is that Fed cut, so Fed rate cut. So that becomes a key focus where she's expecting a Fed rate cut coming in. So if there's a rate cut, it would lead to increase in the tech spending, which would indeed help the IT companies, given they provide services to a lot of US companies. Now, when you look at the other reason is the technical support. From here, we are seeing good resistance coming in for IT. So any breakout from here will be watched out very carefully. While if you look at the Q1 as well for the company was quite good, given all the IT companies have met their estimates in the Q1 performance, and they all remain bullish on the outlook for the Q2. So in that sense, the overall IT remains on a healthier side, and the Q2 becomes a key beneficial to watch out for. Well, apart from that, we also had Hexaware's investor meet on Friday, where they gave out quite good outlook in terms of the AI and the IT trend, how they are trying to imply AI into the IT services. So these are the few reasons why IT is rallying in today's trade.
Thank you so much for that, Jasmeet. And because you've given me a segue with regards to Hexaware, I'm going to take the liberty to see what brokerages have made out of it. You have Nuvama, which has maintained a buy. They have a target price of 710 on the counter. CLSA has maintained an outperform, and they have a target price of 730. HSBC has maintained a hold. They have a target price of 575. And apart from that, if you see in terms of the valuations as well, between Hexaware, Coforge, Persistent, Emphasis and LTM. Hexaware is somewhere on the lower side versus a LTM as well in terms of the current price to earnings. So there is value there, and that's the reason why you're seeing this kind of a target price come in. So that's a quick view when you talk about any of these names, or specifically a Hexaware in trade on the back of the what's come out in terms of the AI trade.
Definitely, I think if you look at the overall earnings from a market perspective, what has happened is the IT companies, they have kind of reported a decent number in terms of growth, especially if you look at something like the mid-cap names, which are showing a lot of promise in terms of growth. And if you look at what is happening is that, especially if you look at Hexaware, the company has lowered its CY26 revenue guidance, but also suggests that growth is largely being deferred rather than being lost. And the delay in the deal ramp-ups is likely to hamper the growth in the near term, but the long-term growth across banking, healthcare, manufacturing should support a better than expected exit run rate towards the end. So I think growth is back-ended, and some of the other names within the technology space that have kind of done well. So clearly I would prefer names like Persistent, Coforge compared to an Hexaware, but nonetheless, I think at current valuations, this also looks kind of interesting, given that the growth is likely to be back-ended rather than getting cancelled as is. So overall, we have a positive view on Hexaware with a target price of about 700 rupees. But again, in terms of pecking order within the mid-cap space, we would like something like a Coforge, which is our top pick within the mid-cap space.
Okay, so Coforge remains your top pick, but that's about Hexaware as well. Stay with us. Let's quickly pull up a Ramco Cement on the screens as well. They've just come out with a notification with regards to where cessation of mineral bearing land tax goes. What they've said is that the MMDR has been enacted to regulate and restrict the imposition of certain taxes, cess and other levies by state governments in respect of mineral rights and mineral bearing lands, and the amendment provides restrictions on the imposition of any levy on mineral rights or mineral bearing lands except in accordance with conditions or restrictions that may be prescribed by the central government. The company has been incurring an amount of close to 160 rupees per ton of limestone towards mineral bearing land tax in the state of Tamil Nadu, and so far they've paid close to 171 odd crores in FY26, and in FY27 around 79 to 80 odd crores is what they've already paid. Now, as per the MMDR bill, the company is not required to pay this 160 rupees per limestone towards mineral bearing and land tax with effect from the 22nd of August 2026, and this is expected to result in a corresponding reduction in the company's operating costs and will have a favorable impact on the profitability and the cash flows. And that's the reason why you're seeing that mild spike that's coming in with regards to where Ramco Cement goes. And this was one of the reasons why the moment MMDR was spoken about, we did see that spike coming in with regards to cement players and a lot of other metal and mining companies. Siddharth, any view when it comes to Ramco Cement, that mild spike coming in there, because now around 160 rupees per limestone is what they're saving. So obviously it goes to their profitability, margins and cash flows.
So I think overall, if you look at the cement space, what we had seen is that volume growth was pretty strong, while there was stable pricing. Gross margins kind of witnessed some dip, but if that were to improve, which we are also expecting, that overall, while realizations are likely to remain stable, with the crude oil prices coming down, energy costs plus transportation costs now stabilizing, margins should see some improvement across the cement space. So I think if you look at what we like, while I don't have a ready view on Ramco Cements, within the cement coverage, we like Ultratech Cement, which is our top pick. Something like a Dalmia Bharat, again, showing a lot of promise in terms of organic volume growth to be above industry average. Additional upside coming in from ramp up of acquired assets as well as some of the organic capacity. So overall, Ultratech is targeting double-digit volume growth. Profitability is likely to be improving because of the margins and net debt to EBITDA coming below 1x. So Ultratech and Dalmia Bharat are the two cement stocks that I like in the current market.
Got it. Okay. What's the view on the charts then, Osho, for some of these cement companies? There was a brokerage note earlier today as well that spoke about the fact that pricing is remaining more or less robust and demand is also holding through. So some elements of what Siddharth has spoken about. Osho, on the charts though, what looks most attractive?
See, on the technical front, comparatively, Grasim is looking quite positive. There has been a kind of a decent traction in the counter. It has been into a higher highs, higher lows kind of a pattern, and it is looking quite decent. It has been maintaining its short-term moving average. So I'm expecting that there can be a decent traction in this counter in the coming period. Overall, there has been some positive developments, and on the higher end, 3420, 3440 can be seen as the short-term target. But again, for majority of the counters like ACC, is also looking quite positive based on the risk reward favorable. But overall, one should wait for, because there is a kind of a consolidation which, and also can be seen as a strong base setup for ACC. So any movement beyond 1350, 1360 can be seen as an opportunity to accumulate this counter. Overall, currently it is into a strong consolidation zone, and any breakthrough above 1360 can provide some momentum in the short term period.
Got it. Okay. All right. We're just winding down, just the last couple of minutes to go. Osho, let me ask you then, heading into tomorrow, what is the kind of derivative strategy that you would employ heading into the monthly expiry, considering the kind of trade that we've seen over the last 10, 12 sessions, which has been pretty anemic and pretty range bound? So what strategies will you take into tomorrow?
See, overall, yes, Alex, totally agree that the market has been very slender, range bound, and there has been very dull for options traders as well. But again, overall, the sentiments have now turned towards sideways to quite bullish, not very aggressively bullish, because on the higher end, we are witnessing a kind of rejection from the short term moving average. So I'm expecting that any dip towards 24,150 and 100 can be seen as an opportunity to buy the counter, buy the index, while on the higher end, 24, 300, 350 is still having very strong writing front. So I'm expecting that that might restrict the higher movement on the higher end. But again, if there will be any kind of short covering beyond 350, then from there onwards, the rally towards 24, 500 can be seen on immediate basis. So overall, now I'm having a kind of a quite bullish view, but dip should be utilized to accumulate position. Any breakthrough above 24,350 can trigger a strong momentum in the coming days.
Okay, so I think that momentum is what the street is actually watching out for. But thank you, Osha, and thank you, Siddharth, so much for joining in. It's always a pleasure to speak to you. In fact, we've just got the closing rates which are on your screens right now. 24,219 is what you're tracking. 24,219 is what you're tracking in terms of
Close.
Nifty 50, correct, in terms of closing, and Bank Nifty as well, 57,525. I mean, a marginal uptick again, 36 points on Nifty 50 between 315 to 330. And if you have to look at Bank Nifty as well, 106 points difference. So nothing major, but that downtick is something which has continued, Alex.
Yeah, and just about a 40 points or so for the Sensex as well. Sensex closing at 370. The close at 315 was, or rather the pause at 315, if I can call it that, is as much as 328 or thereabouts. So just a bit of an up move at the end of trade. Let's look at some of the internals though, and what has contributed to this, and also some of the F&O cues that we're getting ahead of the monthly expiry tomorrow. Sharad Dubey joining us to talk about some of that. Sharad?
Well, Alex, there was a recovery attempt already being made over the last half an hour or so, but the uptick which we are seeing, there is a good up move coming in, especially with Nifty Bank and Nifty also. Let's just look at the stocks also, where the action might have changed sides, and of course we see a good up move coming in ONGC and Sun Pharma, but these are not very heavy weights here. So I'm sure there has to be a basket buying so for the Nifty to move. Let's have a look at Nifty losers also and see what cash changes have happened here. Largely not so much when it comes to NTPC and Bajaj Finance. They are the heavy ones here. But let's look at the call and put options, especially the 24,100 and 24,200. This is where we are seeing the action. Is there an open interest change, especially coming in the call segment, this one. Also, let's pull out the 24,200. That's also where a lot of action is coming. Look at that open interest change of almost 1.1 crore contracts. So yes, there is a recovery attempt at play, and that's where we are seeing the up move as well.
Thanks so much, Sharad, for that. And so that's the long and short of it. Heading into the monthly expiry, but let's talk about the close for the markets. And you are closing off the low point of the day,
which is encouraging, right? We were down 0.6% when we started up India market close. Right now we are above that 24,200 mark. So I think that psychological support of 24,200 is getting protected, which is what I think the street will be happy about.
So too for the Nifty Bank. At one point of time you had cuts of about 0.75%, but you've seen a bit of a pop from that point and recovered a little bit of ground, closing 0.4% lower. Let's take a look at the heat map for the Nifty 50 just to see how things close. And you're not likely to see too big of a difference, but you do have more green.
Yeah.
You have more green on the screen actually. It's a pretty substantial.
It's, I think, even Stevens, Alex, if you would see in terms of greens and reds. And again, it's the metal pack, it's the IT pack, few of your consumption names like the Tata Consumer, Bajaj Auto, HUL, iSure, Maruti. These are the ones which have slightly caught up today.
And a couple of the private sector banks as well, I would think.
Yeah.
Can we pull
Look
up
at HDFC Bank.
Yeah, can you pull up an intraday chart for HDFC Bank if you can? It's ending with gains of about 1/3%. Remember, this is a beaten down private sector bank. Pull up the intraday chart for HDFC Bank, please. See, it's seen a little bit of an uptick at the end. It was very close to to yesterday's close, or rather Friday's close, has actually had a bit of a pop at the end during the cash session. So it's interesting. It's some of these heavyweights. Pull up the contributors chart and you'll see probably some new faces or new names there. HDFC Bank just about skirting into the contributors.
But that's becoming even Stevens with the pressure that SBI and ICICI Bank have put in. RIL, Bajaj Finance. Metals, again, the top gainer, Infosys. We saw this in the morning as well. Let's look at the sectoral heat map and see if there is a rejig happened there, because you had metals, you had real estate, you had IT. You have metals, which continues, real estate, you have energy, which has come in, IT, which is cooled off slightly, but your oil and gas has come in, FMCG, pretty much on the borderline with few of the consumption names that have popped into the green. But defense pressure continues, PSU banks as well. Though that has also come off the lows.
It has come off the lows, and so broadly I think what you can take from today's session at the start of the week is more of the same. You've had a range-bound action through most of last week, in fact most of the last 10 days, and that has continued today as well. Just about a flat
The advanced decline ratios, I want to just see after that convergence that we saw. Look at that. Again, it's widened slightly, so you can see
it's still very
narrow, but still there is that sentiment. And I think that spike that we've seen in that last closing window tells you that the sentiment is positive, that price discovery is pointing towards something more positive.
Something's got to give, Hiral. Something's got to give, because we've seen and just to close things out, India VIX, you still are below that 12 mark. And so you've seen a bit of a pop, 3% or thereabouts, but 11.5%, you've stayed within that range of sub 12 for the longest time. Something's got to give. Let's see if that happens tomorrow. You'll find out soon enough. But from Hiral and myself, from the team that put the show together, thank you so much for watching. Stay tuned. This is NDTV Profit.
Presented by Canara Bank. Together we can.
Hello and good evening. You're watching NDTV Profit and you're tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin trades above the $77,000 mark on institutional buying. SEC proposes regulation crypto assets with new exemptions. Strategies Michael Saylor explains concept of digital energy. And lastly, crypto card spending tops $1 billion. Now, if you're looking to buy or sell crypto, you'll come across two terms quite often: centralized exchanges or CXs, or decentralized exchanges or DXs. So what's the difference and which one is easier and safer for an Indian investor? Let's break it down simply. First of all, what is a CEX? Think it as a centralized exchange, as a digital marketplace operated by a company. Now you create an account, complete the required verifications, and on platforms that support INR, rupees, you can deposit rupees through these available payment methods and buy or sell crypto. The crypto manages the trading infra and in a custodial model holds crypto on your behalf. For a beginner, the biggest advantages are ease of use, customer support, and of course transaction records and a simpler user experience. For Indian users, using a compliant platform can also make it easier to maintain records for tax reporting. But what is DEX? A decentralized exchange works differently. Instead of creating an account with a central company and handing over custody, you generally connect your own crypto wallet. Now the trade is executed through smart contracts on a blockchain, allowing you to interact directly with the protocol. That gives you greater control over your assets, but also greater responsibility comes. Now if you lose access to your wallet or approve a malicious transaction, there may be no customer support team that can reverse it for you. So which one makes more sense? For investors looking for rupees access, ease of use and customer support, and a simpler way to manage their crypto transactions, a compliant CEX can be more practical choice. With a centralized platform, there is also a known entity you can approach for a customer support, grievance resolution, and transaction related queries, something that may not be available when interacting directly with a decentralized protocol. For Indian investors, it is therefore important to choose platforms that are registered with FIU, IND, and operate within the applicable regulatory framework. The simple rule: before you invest or trade, check who you are dealing with, how your assets are handled, and what avenues you have if something goes wrong. Now, as we wrap, you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम, भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out
and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I
right here on NDTV Profit, and on Talking Point today, a very special guest, Vetri Subramaniam, MD and CEO of UTI Asset Management, with us in our studios. Vetri, so good having you. Thanks so much for taking the time out.
Thank you. We are of course next door neighbors, but Bombay traffic is unpredictable. Yeah. But glad I could make it on time.
No, touch wood. I'm glad that we have you here. And I wonder, Vetri, if the year at the current point of time is very much like how it was maybe 4 months ago, because the more things change, the more they tend to remain the same in the current circumstances.
Yeah, I'd say we're still in that same sort of territory where, there are a lot of geopolitical things which are clouding the picture. But honestly, if it wasn't geopolitics, it would be something else. I've never known a market where there is no concern. There is always some concern or the other. I think what is interesting, particularly when I look at the quarter gone by, is that there's a significant pickup in, revenue growth, earnings growth across the board. I think, that maybe is a little bit of a surprise to people compared to where you were, 3-6 months ago. Let's say particularly on 1st March, you would have been a lot more concerned about, hey, what is this going to imply for corporate results? So I think that has been a good positive outcome that, corporate results have held up reasonably well through this June quarter.
Beaten estimates, you would say, right, in a lot of cases.
Yes, I think at the aggregate level, it's ahead. Of course, look, there's a lot of skew. So there's a bottom 10%, which is obnoxiously poor. There's a top 10%. So once you sort of get rid of the outliers, but I would still say on March 1, you would have been a lot more panicky that, hey, this is going to crush earnings growth. But what's come out is that across the board, the performance has held up. Now, again, you can look to attribute causality for this, which is to say that anyway the economy didn't have to absorb the impact of higher fuel prices because the government bore that, it didn't pass into company accounts. B, there wasn't too much of a supply shortfall because I think both companies, governments did a good job of making sure that you didn't have a production shutdown because there was a supply constraint. So all of that has contributed, but net I would still say good outcome. The only pain point, if at all you want to call it that, is if you look at the Indian earnings growth relative to what's happening in the rest of the world,
is the point.
You may still be disappointed, right?
Because that is the point.
Exactly,
and that was what I was going to ask you about, which is that, and we had this analogy drawn on this table just a few days back where somebody was saying your kid is scoring amazing on their exam paper till you look at your neighbor's kid and they're like 99%. So therefore 80% no longer looks great. But so from that perspective, how much, Vetri, can you extrapolate that? Because that really is the global question. To say that these multiples, and everybody said that AI-related stocks are trading at multiples not seen before, but they still say compared to India, it's comparably lower. But that's because the growth is so frenetic.
Yeah. So, the AI capex cycle is most surely been the most dominant driver of macroeconomics in the last 1 year. We've all been discussing, macroeconomics, geopolitics, interest rates, but really what's holding the global economy together is the capex which is driven by this whole AI related boom. Now, separate issue, is it sustainable? Will there be returns on that capital? Those are all discussions for later. And of course, they will have implications on the valuations, as you pointed out, that those stocks are trading. But I think that's been the force which has resulted in these kind of earnings outcomes across the world. You look even at a continent like Europe, where we talk about the sick continent, but even they're growing their earnings right now in the last quarter at mid-teens. So I think the strength of this AI boom and the capex that it is driving is just very, very significant, which also creates a concern, because if you exclude this capex and you look at the strength of the global economy, excluding that, you look at the strength of the US economy, excluding the AI related capex, it's not very great. But this is the one single element that's holding up global growth together. And therefore, you have to worry from a more macro perspective that if that slows, there won't just be a macro level impact. Eventually, it will translate into micro level impacts as well.
So therefore, how do you describe that? To say, obviously, you look bottom up. You look at individual companies. Absolutely. You look at the earnings that they provide you with and the trajectory that you can map. But having said that, this is like a dark cloud looming. To say that, and I was speaking to a fixed income fund manager who was saying that AI and the amount of money that they're sucking in right now is even crowding out governments. So what are the implications on yields, for example? Already you've had the Treasury step in and do what they're calling a mini QE. That has implications on the dollar. It has implications on flow. Is that a major threat?
So let's just unpack
or an opportunity.
Let's just unpack that. Your point about the US right now is sucking the oxygen out of the room. Whether it is because of the government borrowing, 6%, largest economy in the world, you need $2 trillion to fund that. So that's a major demand for capital. And then on top of that, you've got the AI capex, and that's primarily driven by US-based organizations, though it shows up in capex spends across the world. So I think this is a global issue that all that capital is going to the US because it appears to believe that, this capex will generate those high returns. But if you come back to India, the only point that I would make is that, look, I'm a very old school investor in terms of looking at valuations. And for the last 2 years, going back to early 2024, we've been continuously saying that, look, valuations in India are very, very high relative to our growth potential. The good news, Alex, is that over the last 2 years, we've worked through some part of that excess in some segments of the market, not across the board. So there are still segments of the market that I would call expensive, but in general, particularly if I look at the large caps and I look at our proprietary valuation, asset allocation methodology that we have, it's actually increasingly going more and more overweight equities, because large cap equities in India are today pretty reasonably positioned in terms of starting valuations and potential for earnings growth, which is where we started this conversation. So I would say dark clouds may be over AI, but from an Indian context, I think actually our internal fundamentals are in pretty good shape.
If there were to be rate hikes because of inflationary pressures across the world, possibly in India, the RBI minutes were not as kind as the policy statement was, right? Does that put a cloud to this earnings uptick scenario, and thereby what follows in the market?
Good point. To my mind, RBI will at some point, perhaps the MPC rather, will have to react to the fact that there is a risk to inflation. But having said that, I don't think it is coming from what you would call very strong demand pull. And therefore, I think RBI's and MPC's role here is more to just sort of take preventive action in time rather than end up behind the curve. So to that extent, will they have to hike rates? Perhaps. But I think the economy is in good enough shape to absorb 1 or 2 preventive hikes. I don't see this as a rate tightening cycle, right? The rate tightening cycle is really something that you would worry about if you went into a demand-led sort of, upsurge in economic growth. We are not at that point right now. So I think the economy can tackle that. And remember, banking liquidity is actually very, very easy, or likely to be very easy, because of what's happened on the whole FCNR-B scheme. So I think that will ensure that the yield curve behaves itself in India. And touch wood, we've been very prudent about macroeconomic management in India over the last, I would say, 5-6 years. I think that will come to bear. And I think, the currency, which has been a big pain point, whenever I talk to any global investor, even I am struggling to explain to them why the currency has been so weak over the last 2 years. But I think there is potential for the currency to surprise us if we stay on our prudent course. And you see all these other large economies struggle. I think the currency could surprise us in terms of what it does.
Very interesting. Speaking of, and moving back to the fundamentals as you've pointed out, and you mentioned, for example, FCNRB, banks, etc., right? So let me ask you, based on the framework and based on your study, notwithstanding valuations, what looks strongest? Because there are a few pockets, even in finance, where NBFCs have to contend now with this new rule on revolving credit that will impact a few large entities. There is an underlying play as well.
So just to sort of put that in two contexts, if I look at it from a market cap perspective, our greatest comfort from a top-down perspective, honestly, is in the large cap space.
Okay.
Having said that, when I talk to my fund managers, I don't manage money anymore. What the fund manager says that 2 years of stock prices going nowhere, actually bottom up, they are seeing opportunities irrespective of the label of small cap, mid cap, large cap. So there are bottom up opportunities irrespective of that top down. But as a top down allocator, I'm still a bit concerned about the median or average valuation in small caps and mid caps. I think that is very elevated relative to their potential for earnings growth. From a sectoral level, for the last 2 years, the only one that I've believed that the combination of starting valuations and potential for growth is very attractively placed is been financials. Entire spectrum, whether it's banks, NBFCs, each may beat their tune at a different point of time, but I think the whole basket is attractive. No change in that view. And imagine, Alex, you've got credit growth running at 17-19%, and the starting PE multiples of your best banks are below that level. I mean, this is one of the most attractive setups.
Also because of corporate and
doesn't matter, right? I mean, look, the job of the financial is to make sure that you lend to the person who's going to pay you back, but where the opportunity is. So I think it's a very attractive setup.
Maybe after a really long time, a promise of banks will finally see fruition in terms of returns. True. But Vetri, so good talking to you. Thank you so much for being with us today. Really appreciate your time.
Thank you. Thanks, Alex. Thank you, Neeraj.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our captain, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present
is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anviksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है। सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
3 decades.
Markets end lower with Nifty down 0.14% at 24,219 and Sensex down 171 points at 77,307. Both benchmarks snap a 2-session gaining streak. ISMA says India has no sugar shortage. Market sentiment ahead of the festive season is the short-term concern. Production seen at 279 lakh tons with 35 lakh tons of closing stock. Keynes Tech is in focus on the back of a pact with Boss Game for AI expansion and manufacturing capabilities. EMS stocks overall in focus after the government notified a new mobile phone manufacturing scheme with a budgetary outlay of 62,500 crore rupees. Crude slips as the US is all set to announce a new set of economic sanctions against Iran. The US Treasury Secretary Stock Bessent says the new sanctions will be the toughest in history, while Tehran threatens to halt oil through the Hormuz again. The government's airport privatization push is gathering pace, with in-principle approval for 11 AAI airports to be offered in 5 private-public partnership bundles. Each bundle will pair a larger airport with a smaller one, with successful bidders getting a 50-year concession period. Commerce and Industry Minister Piyush Goyal leads India's largest ever business delegation to Japan, with more than 200 industry representatives traveling to the country for a 4-day visit beginning from today. Commerce Minister Piyush Goyal says India is already working on Semicon 3.0 after attracting 19 billion in investments under the first phase. Onion prices are rising sharply, with an average retail prices up 19% in a month to around 42 rupees a kilo. The centre is now rolling out the Kanda Express to move supplies from Nashik to major cities and is also considering releasing buffer stocks to cool prices and ease the pressure on consumers. New Zealand is joining a growing global push to restrict social media access for children, with the government introducing a bill aimed at keeping under 16s off major platforms such as Instagram, TikTok, Snapchat, and Facebook. Hello and welcome, and this is Profit 360 on NDTV Profit, and I'm Nimit Dixit. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. Now first, we're going to do the market toss, a mixed session for the markets with benchmarks ending in the red. Nifty and Sensex snap a two-session gaining streak while metal stocks lead the sectoral rally. Mid-caps close near flat while small caps underperform. For the complete market roundup, let's go across to my colleague Jasmeet. Jasmeet, over to you.
Well, a flat day for markets today. Nifty 50 ends flat in today's trade. If you look at the cash saw a spike of nearly 30 odd points post the market. Now when we look at the key trigger of the market, Nifty 50 ends flat and ends above that crucial mark of 24,000, but it slips below the 24,200 mark. Now when we look at the top losers in Nifty 50, we have stocks like SBI Life Insurance and Bajaj Finance, both lost the most and lost about 1.5% in today's trade. When we look at the broader market, well, that gives a mixed image. We did see that overall mid-cap outperforms the benchmark in today's trade, while small-cap 250 underperforms the benchmark in the current trade. If you look at the performance of Nifty mid-cap 150, when that sees a spike of nearly 27 points due to the cash, but overall performance was flat for mid-cap 150 as well, similar to Nifty 50. Now in terms of the top gainers, we have Vishal Mega Mart and Hexaware Tech both gaining the most in mid-cap 150. When you look at the small cap 250, when that ends lower, down about 0.2 odd percent. In Nifty small cap 250 snaps its 2 days of gaining streak and ends in red in today's trade. In terms of the top losers in small cap 250, we have stocks like BLS and Balrampur Chini both losing the most. Now we look at the sectors. Even the sectors have given a mixed trend for the trade. If you look at the top gaining sector, we have Nifty Metal among the gainer, and it has gained about 1.6 odd percent. In terms of the top gainers in Nifty Metal, we have stocks like Welspun Corp and SAIL both led the rally for Nifty Metals in today's trade. When you look at the top losing sector is Nifty PSU Bank. Now if you look at the performance of this sector, it's down about 1%, which almost lost 0.93 odd percent and ends in red. In terms of the top losers in the PSU side of the business, we have Bank of Baroda and Canara Bank both losing the most, down over 2 odd percent. Now speaking about the trends that we saw in today's market, we do note that overall Nifty Realty, Nifty Energy, Nifty Metal advanced for third straight day in a row, seeing a good day in markets, while on the other hand Nifty Auto and Nifty Pharma ended in the red for the second consecutive session. And lastly, Nifty Bank and Nifty Financial Services, even they snap its 2 days of gaining streak and end in red.
Yeah, so a flat response there in the market response today. But looking at the broader outlook, in the outlook for the future, we spoke to UTI AMC MD and CEO Vetri Subramaniam. Now he says that Indian fundamentals and the macro environment remain strong, while large cap stocks are reasonably positioned from a valuation perspective. Let's listen in to his exact remarks.
General, particularly if I look at the large caps and I look at our proprietary valuation, asset allocation methodology that we have, it's actually increasingly going more and more overweight equities, because large cap equities in India are today pretty reasonably positioned in terms of starting valuations and potential for earnings growth, which is where we started this conversation. So I would say dark clouds may be over AI, but from an Indian context, I think actually our internal fundamentals are in pretty good shape.
Now, the other large story that we want to focus on is concerns around sugar availability. Now, the government is seeking to allay these concerns, saying that India does not face a shortage. It says that the current pressure is largely a short-term issue driven by market sentiment ahead of the festive season. Net sugar production is estimated at around 279 lakh tons, while closing stocks are projected roughly 35 lakh tons. Now let's listen into what Neeraj Shirgaonkar, president of the ISMA, had to say on the sugar supply and the price situation.
India does not have a sugar shortage. Our production and stock position remains fundamentally comfortable. What we are addressing today is a short-term issue of market sentiment ahead of the festive season and a set of calibrated temporary measures designed to manage that sentiment. It's not a structural supply problem. Where things stand and production and stocks. For 2025-26, the net sugar production is estimated at around 279 lakh tons, with a projected closing stock of roughly 35 lakh tons. That is a healthy buffer against normal domestic demand, even after accounting for the sugar which is diverted to ethanol. So while retail prices have moved from around 48 rupees per kg in July to roughly 55 to 56 rupees per kg this month, a rise of about 16%, that increase is not driven by any actual shortfall in availability.
Now that's some sweet news, if I must say, from the sugar industry there. Moving some sweet news for sugar to sweet news for Paytm. Paytm continues its remarkable comeback on Dalal Street. The stock is at more than a 4-year high, has rallied 70% so far in FY 2027 and is the best performing F&O stock this month. The big question though that still remains is till when will this rally last? Now Somit, my colleague, joins us to put the spotlight on Paytm. Somit.
The bigger question, in fact, is the fact that the stock is trading at its 4-year high, but it's still 24% below its IPO price. So will it reclaim the IPO price given the rally that we have been seeing? As I was mentioning about the rally, the stock is at near its 4-year high. It is the best performing F&O stock in the month of August. It's up nearly 22%. And so far in FY27, the stock is up nearly 70% so far. And the stock has been gaining for the 5th consecutive month. But as I mentioned, the stock is still 24% away from its IPO price. So firstly, let's look at the factors that have aided this kind of a rally when it comes to Paytm. The first one is the UPI MDR. This has been a game changer. In fact, few analysts believe that going forward, this MDR on UPI would contribute nearly 2,200 crore rupees to the company's EBITDA. Earnings have been quite strong. Both Q4 and Q1 has been much ahead of what the street has been anticipating. And given the fact that their UPI transactions have been much more than what the industry is, they have been gaining market share on UPI transaction, which is again a positive. The financial service has emerged as a major growth driver that has been leading the earnings. All the segments of financial services have been leading the growth for the company, and operating leverage has also kicked in. In fact, if you look at the EBITDA margins, it came in at close to 8% in the first quarter of FY27. And when it comes to the soundbox or the device ecosystem segment, that has also remained at one of the most profitable segment for the company and has maintained its competitive moat overall in the industry. But despite these factors, there are few things that could derail the rally that we have been seeing in Paytm. And first of them is the timing. Timing related to MDR on UPI is still not known. So that could be one of the major overhangs on the share prices. Second one is we do not have any details, so the MDR rate could also be lower than what the street has been anticipating. And if that be the case, then again the analyst estimates will have to change. And with MDR on UPI coming back, the competitive intensity could also increase for Paytm with more cashbacks and gift vouchers given by other players. So that is also one of the concerns that is there on the street. And MDR could cannibalize the soundbox device rental revenue because a merchant would not pay MDR as well as a rental device. So there could be some cannibalization that we could see on that front. And lastly, also with the gains coming in for the company on the financial front, capital allocation remains an investor concern as per Bernstein. And lastly, when it comes to the run-up that we have seen, valuation leaves very little room for disappointment. Any disappointment coming in on the MDR front could lead to a fall or the correction in the share prices of Paytm. Now, if you look at what analysts are seeing, nearly 17 of the 23 analysts covering the counter have a buy rating, 5 of them have hold, while only one brokerage has a sell rating. If you look at the brokerage, they are also quite divided. The 12-month target price is suggesting a 4% downtick from the current levels, but the highest target price is suggesting a 35% uptick, while the lowest target price on the street is suggesting a 36% downtick. So at this juncture, analysts are also divided. So the key thing would be any clarity coming in on the MDR front would be important for Paytm.
Thanks, Somit, and we'll wait for that clarity on the MDR front for Paytm to see if it can hit its IPO price finally. Now, moving on from Paytm, the government's disinvestment drive, which has gathered pace over the last year or so, is now furthering that with an OFS in Hindustan Zinc, which is likely within the next 2 weeks. Now, Shrimi joins us with more details. Over to you, Shrimi.
Well,
Well, absolutely. The government is looking to launch an OFS in Hindustan Zinc soon with a plan to sell around 1.5 to 2% stake in the company as per the highly placed sources, and they are eyeing somewhere around 4,000 to 5,000 crore as per the current valuation. Now, the transaction appears to be moving very, very, close to the launch stage, as Hindustan Zinc official met Deepam last week to discuss the proposed OFS. And as you know that the government currently holds around 28% stake in Hindustan Zinc, while promoter Vedanta holds 60%. Now, the government last stake sale happened almost 2 years ago, which is in 2024. That time they fetched around 3,500 crore. And the proposed OFS is very, very crucial, as it helps, of course, government to maintain the momentum in the disinvestment, as aligning with the Deepam internal strategy to raise 20,000 crore every quarter through stake sales. Now, so far, disinvestment receipts have reached 52,000 odd crore against the government full year target of 80,000 crore as far as, the disinvestment and the asset monetization is concerned. And government already reached 66%. And Hindustan Zinc and this kind of sizable chunk will definitely going to help the government keeping the disinvestment pipeline moving as it works towards meeting the FY27 asset monetization target.
Thanks, Shrimi. And yeah, absolutely. Looks like that asset monetization target and the disinvestment target is on track there, with 66% already reached. Now, moving from one government policy to another that's flying high in the air, we're probably going to see a lot of planes in the air from a lot of different places. My colleague Danish is reporting that the Public-Private Partnership Appraisal Committee has cleared the privatization of 11 AAI airports through 5 public-private partnership bundles. Now, the interesting part about this is that they're pairing the larger and smaller airports together, so that along with the larger airports, smaller airports also get a boost and smaller areas also get better connectivity. Danish, sending it to you for more.
Well, the PPPPAC has given its in-principle approval for the privatization of 11 AI-owned airports, and this time these airports will be offered in a bundle format. So basically these airports will be divided into 5 different bundles, in which one large airport will be bundled with one smaller airport. And if you look at the anchor airports or the big airports that the PPPAC has identified, these are Amritsar, Varanasi, Bhubaneswar, Raipur and Tiruchirappalli airports, which will be the anchor airports, and these will be clubbed with smaller airports like Kangra Airport, Gaya, Kushinagar, Hubli, Aurangabad and Tirupati. So the main intention of the government is that whoever bids for these airports, they just don't focus on the larger airports, but they must also focus on the smaller airports, as the government also has the Udan scheme, and the government believes that there should be more smaller airports and they also deserve to be developed with time, and hence we are seeing that these airports will be offered in a bundle format. As far as the terms and conditions are concerned, the government has made it very much clear that there will be a cap on the bidders, as these bidders will not be able to bid on a large number of airports altogether, and once it is approved, then these airports will be granted to these bidders for a period of 50 years. Besides that, there have been several more modifications that the PPPAC has suggested, which also includes that these airport developers will be able to develop the land side of the airport so that they can get in their revenue. Besides this, if we look at the overall scheme of things, the Finance Ministry had also flagged off that the India's aviation sector is as of now oligopolistic nature, and hence there should be a cap on the airport that will be given to the bidders. So all in all, if we see, the PPPAC has given its in-principle approval, but now the final word will be on the Minister of Civil Aviation, as now it will take the next step and will come out with more terms and conditions.
Thanks, Danish. Very interesting story there. Moving on from there to Bajaj Auto. Bajaj Auto has launched its new Pulsar 150 and Pulsar 125, expanding its presence in the 125cc to 160cc motorcycle segment. The company says the new models will also be taken to international markets. My colleague Ridhima spoke to Sumit Narang, President Marketing at Bajaj Auto, who says the market has remained strong and sees an upward bias towards 150cc and above, while remaining cautious on forecasting festive demand. Let's listen to his exact remarks.
How do you see the export market panning out for these new launches, and what markets are you looking at?
As you're aware, we have a very large international business where we sell in over 108 countries, and Pulsar is a very, very key component and a favorite across several of them. In fact, in many of these countries, it's a number 1 or the number 2 brand. So to that extent, we just can't wait to get all these new Pulsars out into our export markets as well. and we are sure to strengthen that business too.
Also, now on a broader outlook, how do you see the festive demand going ahead? With inflation is also rising, what are the expectations from your side?
Well, I won't speculate, and it's very very difficult to forecast what's going to be happening 2 months down the line. All I can say is that if you look at what the last couple of months have shown us, the market continues to be really strong. And there is a very strong upward bias towards the 150cc segment and beyond, and therefore we remain quite optimistic.
Now, Commerce and Industry Minister Piyush Goyal is leading India's largest ever business delegation to Japan, with more than 200 industry representatives traveling to the country for a 4-day visit beginning today. Rishabh, my colleague, is reporting live from Tokyo on what's on the agenda and how these next 4 days will look like. Rishabh?
Hello and konnichiwa from Tokyo here in Japan. We're accompanying the Commerce Minister Piyush Goyal on his visit here to boost trade ties between India and Japan. It's a packed day one, but the focus of the Commerce Minister will be to sort of take forward a few of the key issues that were brought up when the Prime Ministers met very recently, Prime Minister Modi and Prime Minister Takaichi. Number one is going to be, of course, the private investment target that both the countries have said. Japan is set to invest roughly about 10 trillion yen, and that equates to about $62 billion over the next decade or so. And that will be very interesting to see the sort of sectors that investment spans. What we're also looking at is also a review of the free trade agreement between India and Japan. Both countries had signed a CEPA, a Comprehensive Economic Partnership Agreement, way back in 2011. But the sort of trade balance is more lopsided in favor of the Japanese currently. So that trade needs definitely some sort of a rebalancing, and that's what we're looking at when it comes to day one here of the Commerce Minister's Japan visit. What we're also looking at is a lot of MOUs being signed in the fields of semiconductors, in the fields of artificial intelligence, technology, of course. Bullet train is one such technology that we're also looking at already. So a lot more to happen when it comes to these 2-3 issues on day one of the Commerce Minister.
Arigato, Rishabh-san. Thank you for that. And in fact, you spoke about semiconductors. One of the things Commerce Minister Piyush Goyal said, India is already working on Semicon 3.0 after attracting 19 billion in investments under the first phase. Now let's listen to what Minister Goyal actually said.
We came out with a mission, Semiconductor 1.0, in which we supported about $9 or $10 billion from the central government. We got support from the states, and together with the private sector, we've been able to attract investments of about $19 billion in the semiconductor industry and the ecosystem around it under Semicon 1. Very recently, the Indian cabinet led by Prime Minister Shri Narendra Modi has approved Semicon 2.0, under which we are committing about $13 billion, along with the support that the states will give. This is the central share. States also often support the semicon industry when they locate in the state. And together with the private sector, we are looking to seed about $50 billion of semiconductor and associated industry in the next year and a half.
And yes, while the sun is shining heavily on the Indian delegation's visit in Tokyo, heavy rain has lashed Delhi, bringing some relief from the heat, but once again exposing the capital's waterlogging and traffic problems. Severe waterlogging and heavy traffic snarls are being reported along the entire Baba Kharag Singh Marg stretch. Heavy rain and thunderstorms have disrupted flight operations at the Delhi airport, with airlines warning passengers of delays and schedule changes. According According to Delhi airport sources, more than 50 Delhi-bound flights have been diverted. Parts of Delhi are also under a red alert, with the IMD warning of heavy rains and lightning across large parts of eastern and southern Delhi. So what's the situation on the ground, and how badly have roads and flight operations been affected? Let's go across to Akil for more.
Rain is often considered as a blessings, but over here in the national capital, just few hours of rains, and what we are witnessing over here, that the entire road is deeply submerged in water. The water logging problem is perennial, and it has been seen across the regions in the national capital. Right now, we are at the center of the national capital, which is known as Connaught Place, and approximately just at a distance of 500 meters away, the Connaught Place region starts. The outer circle region starts, but over here at Baba Khadak Singh Marg, you can see the knee-deep water and just few hours of rain, and we are witnessing this situation on ground zero. The people over here are facing a lot of difficulties. Commuters are facing a lot of difficulties. There's a vehicular movement which has got badly affected due to this. And right now you can see people are moving slowly and gradually at this stage, because the entire stretch has got inundated due to the water logging problem. I'm going to get few.
That's some wonderful ground reporting there by Akil. We can see the situation is quite bad. In any case, that's all the time we have on this edition of Profit 360. But the news continues on NDTV Profit, so stay tuned.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है। सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and
Presented by Canara Bank. Together we can.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where we get you the hottest companies, the newly listed companies, and the story behind them. Today also I've got you a very interesting company, and yes, it's newly listed also. There is a small hint, but this is the biggest hint. World's largest MIM tech component manufacturer. I'm sure you must be guessing by now if you're tracking the primary markets. Recently listed July 30th, 2026, but the stock has almost doubled from its IPO price. Very interesting story. We'll try to understand more. And there is an IIT Madras angle to it as well. It's backed by BlackRock as well. We have spoken a lot about the precision manufacturing sector, and we have got this company, Dalal Street favorite theme as of now, and the company's name is Indo MIM. But why are we calling this company? What's the need about it? Of course, it's recently listed. Everybody wants to understand what is this industry and how is the company placed. Is it the market leader or not? Another question we'll try to understand is the margins and the revenue guidance, how things pan out in this business model and how they are a leader and how they'll maintain it. Decoding the key risks and the mitigations from the company. There's a lot of global exposure here as well, and also product related risk. We'll try to understand raw material sourcing. How much does India have? How much does abroad have? And what's the risk here? Also, the installed capacity and utilization guidance ahead. The utilization levels are quite low. That means company might not go for larger capex plans because there's so much headroom left. Acquisition strategy as they get new geographies, what will that be? We have seen already historically company has done some of them. Emerging industry trends and the client confidence, how does that look going ahead globally also and domestically also? And of course the new product launches, is there any or is there a new category? So we'll try to understand these questions with Indo MIM. But what does the company actually do? Why I'm constantly talking about MIM? What's the full form here? That's something that was the most basic thing we'll try to understand. It's the largest metal injection molding. MIM is metal injection molding. That's the company which makes this. It has almost 7% market share in calendar 25. Also, understanding they have 25 years of industry experience where they do end-to-end manufacturing solutions, and this work includes tooling, mold, design. These are the initial phases of precision manufacturing, then finishing and assembling as well. Also, they serve the auto, defense, medical and aerospace sectors. So there is a big, non-concentration risk of the products. Over 9,000 products they have. 60% raw material is sourced from abroad. So there is a risk element as well. Export products to customers across 55 countries.